Ash, hi, morning. Have you been tracking this boardroom battle in Godfrey Phillips, Modi versus Modi? Now, in the AGM, Beena Modi has secured the shareholder approval, so she will stay on. About 86.5% of the shareholders have voted to reappoint her as the managing director. And the stock on Friday was up 12.5%. Year to date, it's gone up to 40%. Your thoughts on Godfrey Phillips?
Good morning, Rima. So it's been quite interesting and challenging because there have been so many twists and turns in this entire battle leading up to this overwhelming support for continuity of this Modi as the chairman. So, I think what the street is probably very happy with, or would rather be happy with, or would settle with, is continuity. It's like, let's get over with this whole thing. It's a very good business, very decent margin growth. You've seen the way the margins have been for the last 2 years. I don't see any reason why somebody would not want to bet on this if continuity is ensured in some way. So if this overhang actually gets out of the way, people will the market will want to add, because this is it's the only stock that you have in terms of diversifying your exposure beyond ITC, right? So and ITC comes with its own share of bundled salience apart from the tobacco business. So from that perspective, it's something which will grow. And by the way, on the ground, if you see the kind of numbers that they've been ratcheting, they're fairly strong as compared to what they did a couple of years back. I think some of the JV, some of the tie-ups, brand tie-ups that they've got have worked very well for them, particularly the Marlboro thing. So I believe as a company, it will do better. And if this is out of the way, there'll also be a little bit of a PE re-rating, or at least ensuring that the PE remains at slightly better than this. So yeah, quite positive in terms of a development. I really don't know if there's anything else beyond this development which would kind of come up and throw up surprises. But if this is where it stays, it definitely will be seen as positive.
Will be seen as positive indeed, 240% in the last 12 months, and that's a massive outperformance as against ITC as well. I was looking at some of their volume, reported volume trends. Over the last 6 quarters, they've beaten ITC by a factor of at least 80 to 100% on 5 occasions. It was just once where ITC did better. That was in Q1 FY24, where Godfrey did 8.1% and ITC did 9%. So they've been gaining market share across the board from the leader. And at the same time, the other imponderable for them will be, what kind of money they can raise by selling their retail businesses. Remember, earlier they had announced the decision to go ahead and initiate necessary steps to exit the retail business. The gross sales in the first quarter for the retail business was close to around 99 odd crores. So assuming you analyze that to close to 500 crores for this year and give it a multiple of 4 to 5 times sales, could they raise that 2,000 crores, 2,500 crores by selling their retail business or not is the big question. Not necessarily profitable right now, but let's see who throws their hat in the ring to go ahead and buy that business.
No, absolutely. We'll sort of take this forward with more and get you some sort of sound bites as well, which we had. Ashmit had spoken with the management earlier there. Let's, Prakash, good morning. Ola, I mean, the 1 month share lock-in for Ola ends today. Any thoughts on this one, quickly?
So, good morning, Prashant. So, I think the market gave its verdict on Friday. We saw in anticipation of what could happen already, the smart money would have started moving out. And I believe it'll probably stabilize at something which is much more realistic, which is the sub 100 mark for sure. Of course, I was surprised at the move itself, but I wouldn't be surprised if it softens a bit from here. And settles at that 85, 88 zone, at some point in time, not today itself, but over the next couple of days. See, it may not happen that today you'll get all the exits, but today onwards, you'll start seeing a situation of vulnerability, which is where people would want to kind of, take the bets off.
Okay, Prakash, do stay on. We want to get chatting with the first corporate on our show today. That's SP Apparels. The stock had surged nearly 20% on Friday. In the last 1 year, it's seen a gain of about 90%. Q1 was a bit subdued for the company, but to talk more about the business opportunities, did the Bangladesh turmoil open up any opportunities for the company? They're looking at Sri Lanka in a close way too. We now have with us P. Sundarajan, Chairman and MD at SP Apparels. Thank you very much, sir, for joining in on the show. The last time we chatted, you indicated that Q2 will be a lot better than Q1. Can you give us a sense how Q2 have shaped up for you?
Yeah, I think Q2 will be, yes, probably it will be at par with Q1 because some air strikes have happened due to whatever reason. But Q3 will be much, much better and Q4 will be further better. That's our prediction.
So in Q1, your revenues were down 1%. So you're saying in Q2 also revenues will be flat to marginally negative? And what about margins? Because you hope to improve margins.
It will be more or less the same as Q1 only. That's what we are expecting. We are predicting.
Oh.
Right. I wanted your thoughts on two geographies. One is Sri Lanka, where you are believed to, grow a lot faster. You're increasing your presence out there. So how much does it grow from here on? At what pace? And what proportion of your revenues come in from there? And the second part is that everyone's talking about this Bangladesh plus one trade when it comes to garment manufacturing. Have you seen any signs of that? Do you stand to benefit from it?
Yes, with regard to Sri Lanka, yes, we have already kick-started the operations in Sri Lanka for our SP UK Limited. And for the SP Apparel India operations, already the factory audits are over, so we are expecting to commence the production from October onwards. And over a period of time, in the next 1 year or so, we are expecting about 20% of our total production will be happening from Sri Lanka. So which is roughly about 1,000 machines we will be able to run and ship from Sri Lanka. And with regard to Bangladesh, yes, as I mentioned before also, even before this disturbance in the recent past, the retailers wanted to de-risk the concentration in Sri Lanka, in Bangladesh. So they already started moving some of the businesses to India in addition to China plus in strategy. So, and this issue.
Right, seem to have snapped that connection, something to do with the telecom lines today. All right, we'll just try and repatch that. It's coming to us in patches. We'll just try and reconnect with you as you were making that point. But for now, the next quarter looks as good or as bad or as flat as the first quarter. We'll keep an eye out on business performance out there, though the stock has done extremely well over the last 12 months. And the benefit of Bangladesh is likely to come by, and in the very near future, once Sri Lanka has, as the company said, initiated its production out there, will flow into their books as well. Prakash is still with us. Prakash, from the little that you've heard of from the management of SP Apparels, what are your thoughts on this one and the entire textile/garment space? Anything that you like in particular?
So, Mangalam, I don't have a very definitive view on SP Apparel because apart from this Bangladesh angle, the rest of the business is something which I'm not very familiar with. But all I can tell you is the word that we get from talking to some of the other players like PDS and Gokuldas and even names that have been more active in the Bangladesh rating tells us that while things haven't kind of improved out there, in that sense, it's the confidence that a lot of the European buyers would, not have on Bangladesh getting to normalcy in a very so this thing, and this recurrence, the probability of recurrence is what they're more worried about. So a lot of the orders will actually flow in from that to the Indian markets, and that's going to be extremely positive. But you'll have to look at the larger players who will be able to manage that at efficient costs, because it doesn't mean anybody who gets new orders will be able to execute that very profitably. So from that angle, I think Gokuldas and PDS and all will probably benefit.
Right, we'll have to ask you to hold on to your thoughts. We'll go back to the management of SP Apparels. They're back with us. Sir, you were making a point on, the kind of business that will accrue from Bangladesh into India and your own production. You said up to 20% will come in from Sri Lanka over the next couple of years. Is that correct?
Yes, exactly. Over and above our own production in India.
And on Bangladesh, you were making a point.
On Bangladesh, yes, those businesses are coming to us, and we have an additional capacity of 1,500 machines from recently acquired young brands. That's the one which we have recently acquired. So, including that, I think our capacity will definitely grow up to about 20 to 25% over a period of 1 to 2 years' time.
Mr. Sundarajan, hi, good morning, sir. So is this demand boost? You said extra 20% demand because of Bangladesh. Is this one time? Is this durable? I mean, is this a bump going to stay?
Yeah, I think definitely the retailers want to move away from Bangladesh to de-risk. It doesn't mean that completely wipe out from there because it's overflooded. The orders are overflooded in Bangladesh. So definitely anybody will be moving. Even otherwise, our customers have been asking us, insisting us to increase the capacity. So our process started even much before what has happened recent past in Bangladesh. So it has got nothing to do with our growth. So what will happen is that there will be our customer base will increase now. So we will increase our customers after acquiring young brand. We will be focusing more into American customers as well. So which becomes the customer base will be much broader than what we have now.
Okay, so you did about 1,100 crores in sales in FY24, roughly around there in FY23 as well. What should we expect going forward on the top line? What kind of growth should we expect in 25, and then maybe some of this kicks into top gear in FY26? If you can give us a sense.
Yeah, see, we are working towards, as I said, the more the capacity, because getting the order inflow is not so far not have been an issue. So the more the capacity, more the growth is. So we are planning for. So currently we are working with about, as I promise to the given a forecast to my investors that this year, the end of this year, our machine utilization of the capacity will be around 90% plus, as against it used to be below 80%. So there itself, there is a clear, obviously there is an indication for 20% growth. In addition to that, we have young brand capacity of 1,500 and Sri Lanka 1,000 machines. So all put together, we will be able to do about 7,500 to 8,000 machines in over a period of 12 to 18 months' time. So naturally, the growth will happen.
You don't want to put a number to it, right?
Yes. I mean, I can see because the order book is not a problem for us so far. So the more the capacity grows, the more the sales grow. So we have, from 5,000, we will be jumping to 7,500 over a period of 12 to 18 months' time.
All right, fair enough. So roughly about 20% kind of growth is possible?
It's indicatively, yes, 20%.
And this will kick in only in FY26, right?
Yes, please. Yes.
We'll leave it there. Thank you very much for joining us. Good speaking with you, Mr. Sundarajan. Thank you very much for joining us here on CNBC TV18. I think what we'll do is we'll take a quick commercial break here. We'll come back with Mitesh and Sudarshan, who are with us, with what they'd want you to do as far as individual trading ideas are concerned. That's coming up in just a bit. Stay with us.
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards?
Okay, welcome back. There's about 13 minutes to go for the pre-open session at 9 o'clock. I think the indicative price, of course, on the GIFT Nifty is just about a 50-odd point lower start, right? So it's 24,860, and I think you've got the Nifty futures on your screen as well. Well, on Friday evening, you had a new bull statue was unveiled at the NSC. Guys, I don't know if you got a look at it, but there you go. That's on your screen. And I just wanted to play the pictures for our viewers. So we have the BSE bull, which of course is right there at the entrance of the Bombay Stock Exchange, and now you have a bull at the NSE as well. That's of course the CEO Ashish Kumar Chauhan. It's interesting the people around as well, right? Around the bull.
It's a full Indian family right behind the bull.
What's extremely interesting is that the bull at the BSE, a couple of 100 meters away from there, you have R.K. Lakshman's common man standing by the bull, telling you that the bull market is for everyone. And this one's gone one step ahead with including the entire family, including women and children as well. So telling you, just the democracy, the cult of equity increasing.
I think just retail investors, right? And how they powered this market forward. So it's quite something. I mean,
just one word of superstition, if you must. Every time there was one bull which was installed somewhere, in the very near term, there was some sort of volatility in the market. I wouldn't go so far as to say it was a crash or something that declined and all that. And it's absolutely superstition, nothing else, no data analysis, etc. There was one bull which was kept near the Worli Naka by one of the corporates. That happened just before March 2020. Before that, the BSE bull was installed. I think around that time the Sensex was 30,000. Then we saw a couple of months of
January 11th, 2008. I don't want to tell you what happened.
No, so that,
I didn't even mention that.
I'm just saying, again, do not blame any of us or the bull, because even after those crashes, look where we are. I mean, Sensex 80,000, Nifty closer to 25,000, no problem. Long-term bull always.
Don't blame the bull. Absolutely. Prakash, did you see some of those pictures?
Yeah, Prashant. Yeah, I did. And I did read up on what Mangalam is alluding to, but I choose to ignore it in the benefit of the bull market. But yeah, it's nice to kind of, I love the way they've positioned the bull along with, this whole representation of the retail investor. That's quite democratic in that sense. Yeah.
No, absolutely. And I think the primary market action also kind of tells you what's happening, right? With all the retail participation, etc. Any other sort of new IPOs which are open, or there's one which is listing today. I think Gala is listing today, right? And the indicative open is about 50-60% higher. There is in terms of the grey market, etc. And you got this Bajaj Housing. I mean, just your thoughts on what is open, what is coming.
I think I'm not too much of an IPO buff, so I don't know about the listing premium that some of these names will get. But Bajaj Housing is very clear. Bajaj Finance is something which I think will be very important for people to look at seriously, and at some point in time depend on it to represent the segment, the growth of the segment in their portfolios. The anchor allocation is absolutely stellar in terms of participation, and I expect it to do much better in the medium to long term. I don't think it's a listing pop kind of a thing. It's something which you would cherish to have in your portfolio over the longer period of time. So after a long time, you have some very high quality paper that's coming into the market, which will sustain ups and downs for the next many years. Unlike some of the IPOs which you forget after 2 months. Everything's done and dusted, and people don't even remember the name. So I think that's what needs to change. The quality of paper that we badly need, Prashant, given the liquidity gush that we are seeing, it'll always help if you have more quality coming in and size coming into the market.
Thank you, Prakash, for joining in. So Bajaj Housing Finance raised more than 1,700 crores from anchor investors and a marquee list of investors, Government of Singapore, Adya, Fidelity, Morgan Stanley, Nomura, Goldman Sachs, JP Morgan, and a bunch of domestic investors too have thrown in their hat for Bajaj Housing Finance. Large one, 59,000 crore in terms of evaluation. But it's time now to talk technicals. Mitesh Thakkar and Sudarshan Sukhani are with us on the show. Gentlemen, good morning and thank you for joining in. Mitesh, Friday was a tough day. We breached 25,000 on the way down. This morning, a little bit of a gap down opening. Where do we go from here?
Good morning. So I think, Friday I was highlighting the fact that the hourly, 2-hourly and 3-hourly charts have started showing minor negative traction. I was hoping we'll go into a consolidation. But then two things. One, I think the decline was very severe or more severe than what I expected. Two, I think we hardly managed to bounce back post the day's low. I think we closed near the day's low. Having said this, I think with today's gap down, which is not a very worrying gap, which is just about 50-60 point out gap, I think it will be important to capture levels of 24,800, 850 immediately. In case we fail to do that, then I think I would be slightly worried and pencil in targets of 24,500, maybe 24,350 on the downside. So for the time being, my immediate reaction is that post the opening, how does the Nifty behave? In case there is no sign of a bounce back or a pullback or an attempt to fill the gap, then I think we'll go into some aggressive shorting mode as well. And looking at the stocks, or rather the indices, the sectoral indices, I think it's the Nifty PSE, the Public Sector Enterprise Index, the PSU Bank Index. I think that's where there are signs of pronounced weakness. So I think then we look at those kind of sectors to find out shorting positions.
Sudarshan, good morning. How would you approach trade today? And even for the near term, the next few days, what's the trade on the Nifty Bank?
Yeah, good morning. Well, for today, I would suggest staying away. See, the market is in some kind of a correction. Now, it's difficult to define what correction will be. I can't foretell the future that this is what it will do or not do. But we can all see, the charts can tell us that we are in a decline of some kind. Now, the ideal point to go and enter this market is when it stops falling and starts consolidating. So that is a process. That's going to take some time. So for today, the view is it is best to avoid any kind of trading because I'm not keen on going short. And this is not a market where we have any visible signs for going long. So for short-term traders, stay away. For the next few days, the best case scenario is the market stop falling and start moving sideways. That would be the time when we start thinking of going long or building long positions. But that's the future. Today, it's better to avoid.
Better to avoid the indices. Any individual stock picks that you have, Sudarshan? I'm sure there are opportunities at that level.
Yes, there are. We'll start with the two intraday shorts. Ashok Leyland is an intraday short with a stop above 255. And Indus Tower, which is now giving signs of, say, exhaustion after a very big run-up, is an intraday short with a stop above 435. I have two buying ideas because this market is really only in a correction, not a bear market. But one of them is LTIM, which has finally put its act together. It's been doing a very decent up move, and that should continue. Stop under 6,050. And the second is Jindal Steel, which actually outperformed on Friday and closed higher. That's good news. Put a stop under 930. So there are two buy ideas, which are positional as well as intraday, and two intraday shorts.
Okay. Mitesh, what would your top ideas be for the day?
Yeah. I have more of shorting positions today, 3:1. A short in couple of PSU banking names. Bank of Baroda recommends selling here with a stop about 240 half, 241. Look for targets of 222. Canara Bank is a sell with a stop at 106 half for targets of 97. And a conditional sell on Gas Authority. It's closed at about 220 half or levels. 219 is a support area, support pivot. So if it starts breaking below that, take a short position with a stop at 224 for targets of 208. And a conditional buy is ACC. In fact, cement stocks have done well in the last 2 days when the markets have become slightly corrective. So ACC, if it can manage to get past 2451, which was the high on Friday and Thursday, then take a long position with about stop at 2404 and 2550, 2575 can be a trading target.
All right, we'll leave it there for now. Thank you very much, both of you, Mitesh and Sudarshan. And we'll come back with more questions on specific names in a bit. We'll take a quick commercial break. We're going to come back in minute, Gaurav Malhotra of Axis Capital will join us to put the focus on the telecom space. Stay tuned, that's coming up.
One show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com.
Margins is a fillip that paints would see because of decline in crude oil prices. That will come with a lag. But I think the paint sector is due for some revival, because it has really not done anything, so to speak, fear of competition. But I think most of the negatives are there in the price. Second half of fiscal 25, first half of fiscal 26, the entire building material space, and specifically to your question, even the paint sector is likely to do quite.
If we go back when Nykaa was started just about 12 years ago, the per capita consumption in India was as low as beauty and personal care was as low as $6. And today we are at about $15 per capita. And even this, for our income level, is below where we should be. Countries with similar income levels, to answer your question, have per capita consumption which is 3 to 4 times, so they are already at somewhere around $45 per capita. So India is below on beauty consumption habit, and that's where Nykaa always felt that education and social media is also helping a lot, but education at scale is the way to kind of bring more consumers into beauty consumption, and that is happening very rapidly.
CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust.
Welcome back. 15 minutes to go for market opening and a minute for pre-open rates to come by. So let's quickly get in some trades coming in from the derivative space. Chandan Taparia joins in from Motilal Oswal Financial Services to give us a setup on how some of these stocks and indices are on the basis of F&O data.
Good morning, Mangalam. Thanks for having me. So S&P 500 and Dow witnessed their largest weekly decline since March 2023. Nasdaq also recorded its biggest weekly drop by around 5% since January 2022. So the major weakness is happening because of the profit booking in the global market. CBOE VIX, the volatility index at US also spiked from 15 to 23.75, and we believe that spike in the volatility across the global equity market might give some volatile cues before market settles for the next leg of rally. Talking about Nifty, it has negated its high-rise, high-lows on the weekly scale and formed a bearish engulfing pattern on the weekly. So because of that, some profit booking could be seen. As of now, the key support for index goes at 24,600, 24,650, which is the 50% retracement of the entire move and 157 gain square. So we believe that as of now, the profit booking decline might take a pause near 24,600, 650. And in that scenario, it can again bounce to 25,100. While on the downside, major support will shift now to 24,444. So I'll closely watch the key level of 24,600 and 24,444 with hurdle at 25,000, 25,150. Now looking at the Bank Nifty index, banking index also witnessed some profit booking decline. It failed to surpass its key hurdle and drifted below its 50-day exponential moving average. It failed to hold the multiple support of 51,250 and witnessed built up of short position. So because of that, some more weakness could be there. So till it holds below 51,250, Bank Nifty can decline towards next support of 50,000 and major support goes at 49,650 marks. Now looking at the stock wise, first there is buy on Coforge. We have positive on the selective Nifty IT name, and Nifty IT is holding well. And we believe that as per the relative rotation graph, IT, FMCG and selective pharma sector could do well. So Coforge is one of the strongest name. It has given a breakout from cup and handle pattern on the weekly chart, holding the gains, making a high top, high bottom, added built-up of long position with better rollover. So one can buy with support of 64.80 and Coforge has potential to move towards 6900 to 6930. Second trading idea, that is buy on Asian Paint, rounding formation on the weekly chart with some support-based buying and build-up of long positions. We have seen some coal unwinding, so momentum could be there even after the market decline. And positive cues from the crude prices are also supporting the sentiment of the counter. So one can buy with support of 3200 and Asian Paint can head towards 34, 35 level. Last trading idea, that is sell on Canara Bank. We have positive stance in IT, FMCG and pharma, but negative stance is clearly visible in banks and especially in the PSU bank. So Canara Bank is having one of the weakest structure in the markets, given the lowest close in last 8 months, making lower top, lower bottom on the daily and the weekly. We have seen sustained cold writing, so one can sell on a small bounce with a stop loss of 107, and Can Bank can drip down towards 97 marks.
Chandan, thank you very much for that. Coforge stock that he was recommending on the F&O side, JP Morgan has come out with a report and they've got an overweight call on Emphasis and Coforge. And the key thesis is that the rate cutting cycle in the US is positive for BFSI companies. And Coforge and Emphasis have the maximum exposure to BFSI and US banks. So therefore, they're bullish on both these two stocks. But now it's time to go across to Vivek for the Momentumizer stock of the day. Vivek.
Well, good morning. Very interesting name. Blue Jet Healthcare, not a name that we discuss too often, but this particular stock has been making all the right moves, at least in the last 4 to 5 trading sessions. Stock, even in a weak market, ended almost 6% higher on Friday, and the delivery percentage too was quite strong. At almost 49% is the kind of delivery percentage you saw. Now, when you're talking about how it's done in the last week, up for 3 out of the last 4 trading sessions and now comfortably trading above the 50, 100 as well as 200 DMA. One interesting note from Kotak Mahindra, from Kotak Institutional Equities on Blue Jet Healthcare on 5th September. What they're saying is that the company has seen a very impressive ramp up as far as its pharma intermediates as well as API segment is concerned, and they're expecting the company's PI as well as API sales to surge almost 6x between FY24 to FY27. So on the back of that, they've retained a buy stance or an add stance, and they have a target price of close to 540 rupees a share. Stock's done quite well. It'll be interesting to see whether this particular move can be sustained in Blue Jet.
Thank you very much for that. Telecom stocks were in focus on Friday. Vodafone Idea in particular was down more than 10% after Goldman Sachs put a target price of 2.5 rupees and they downgraded Indus Towers too after the steep run-up. Gaurav Malhotra, Executive Director, Axis Capital, is now with us on the show. Gaurav, there was some optimism going into Vodafone Idea post the fundraise, the promoter infusion. But on Friday, again, concerns, after concerns were flagged off by Goldman Sachs about the survival of Vodafone Idea and how it will thrive in the environment. Where do you stand on Vodafone Idea and what's the outlook on the telecom sector?
Yeah, good morning, everyone. So first on the telecom sector, the telecom sector is right now going through a period of very strong tailwinds. Right, the competitive intensity has meaningfully declined. Right, we saw that with tariffs. The regulatory issues which have plagued the sector in the past many years have also been sort of sorted out, except for this AGR issue, which is the one issue which is pending. So going ahead, with 5G being monetized, tariff increases, peak of the capex behind us, the sector is well placed to deliver pretty strong free cash flow over the next 2-3 years, especially Jio and Bharti. Now, on your question of Vodafone Idea, so currently we have a reduced rating with around 15.5 rupees price target. And the way we are seeing it is that, look, we are giving the company benefit of improving business post the fundraise. We also believe that there is a high probability of some relief in the AGR liability case. But given how the stock has run up from its FPO price, so right now we are sort of staying on the sidelines on this name.
So if there is relief in the AGR case, what will the target price rise to for Vodafone Idea?
So our target price assumes some relief from the calculation perspective, which is around 3 to 4 rupees a share. So the target price of 15.5 assumes that some relief on the AGR liability case.
And on Indus Towers, do you think the stock has run ahead of fundamentals?
So we don't have an official coverage on Indus Towers, so I'll refrain from giving comments on that.
All right. What about Bharti Airtel? It stood the test of time. It's been doing well for the longest time until Vodafone did extremely well. this was the only game in town when it came to playing pure play telecom. Where do you stand on that right now?
See, Bharti is in very good shape, right? So if you take a step back, we are in a period today which is something similar to what we saw in 2006, 7, 8, which is, benign competitive intensity and free cash flow generation. Obviously, that time the growth was much faster, given that it was a tele-density kind-led growth. But in terms of the absolute free cash flow, I think so the company will be generating a pretty strong free cash flow. We are of the view that there is a high chance that there could be some sort of a formalization of dividend policy from this name in the coming quarters, just because of the free cash flow generation, and that could become an additional catalyst for the name going ahead.
Okay. When you say that you're expecting some relief in the AGR case, could you quantify that? So, for instance, Vodafone Idea's AGR dues is 70,000 crore. How much do you think it can come down to, according to your own estimates that you've priced in?
So it could based on the errors in calculation, it could come down to, say, roughly around 40,000 crores.
Okay, and
So
your
around
15.5 target price, it comes down to 40,000 crore. So it reduces by 30,000 crore. And 15.5 takes into account that. So
Yes.
unless it's more, don't expect too much upside in Vodafone Idea, according to you.
See, the relief the relief is predicated on the errors in calculation, which is where the case has been filed at.
Understand what's already priced in by the market. And in terms of tariff hikes, your own estimate, when is the next one? And after that, what could be the cycle of tariff repair?
See, the thing is, we are not of the view that the tariff increases will happen every year, right? The tariff 2 to 3 years, which has been the case in the past from 2019 onwards. So you will see the industry taking increases sporadically, but not on a recurring basis. And that's the way we are sort of looking at it. See, end of the day, it takes around 6 months for the tariffs to just get absorbed within the system itself. So then to assume that every 12 months you will be having a tariff increase is a little bit aggressive in our view.
By the way, Gaurav, do you track any of the sort of telecom equipment sort of companies at all? No? Okay. Only operators. Thank you very much. Appreciate you joining in and running us through what you make of the space and some of these individual names. I think it's 9:09. We're at the end of the pre-open session. Sudarshan and Mitesh are with us with their 9-10 calls. Gentlemen, good morning again. Sudarshan, what do you have?
Well, consider buying LTIM with a stop under 6,050.
Okay, and Mitesh?
Long only ACC if we start getting about 24.51 for targets of 25.50.
Okay, LTIM and ACC coming in from Sudarshan and Mitesh. Gentlemen, thank you very much for that. We'll just quickly look at the Nifty and where it has finally settled, and then we'll bring in individual names to put the spotlight, and then 30 points lower in the pre-open. So 24,823 is where we are starting. So it's not bad at all. It's actually practically flat from Friday's change. Though I suspect at some point you'll start to see some pressure on the downside starting to come through. So will you get away with a 25-30 point cut? I'm not so sure. Let's look at Lupin now with what we are watching out for. Ekta is here with more details on this one. Ekta, morning again.
Hi, morning. Well, there is a particular piece of news with regards to a drug which is used for kidney conditions, which is Gynarc generic for Lupin. There was a ruling which had taken place in the US, which was in favor of Lupin. But now the innovator of the drug, which is Otsuka, has filed a notice of appeal against the US court's verdict on this particular drug, which was in favor of Lupin. So now Citi is written on it. They have a sell with a target price of 1,700 on Lupin. They've said that Lupin may still prevail in the higher court, but the company's generic launch in 2025 may now be at risk, which means that they've launched the drug, though there is a litigation going on if it goes ahead. An at-risk launch is where the generic share remains generally low as compared to a normal launch. Lupin could also delay the launch of the generic version of this drug in the US markets, hence may not be able to fully realize the potential of being a sole first to file, which is basically having 6 months exclusivity on the drug once they launch. It contributes to around 30% of their Citi's FY26 estimated EPS, which is this drug, Jynarque generic. And there could be a possibility of a downside to this number, according to Citi, if in case these scenarios do play out.
Right, Ekta, thanks a lot for that. So Lupin is one of the stocks that we'll keep on our radar. The other one are banks on the whole. There are some rate cut implications. UBS too has raised, the target on Shriram Finance. Abhishek joins in with an update on that. Abhishek.
Well, to begin with UBS on Shriram Finance, they have a buy recommendation. Increase the target price by 32% from their previous target price levels to about 3,850 per share from the earlier target of 2,915 per share. So synergies from merger to keep aiding the growth is what they are expecting. Net interest margin compression is transitory in nature. Accomplishing new segments further is the key for the growth ahead. So asset quality will remain stable. Credit cost is within the guidance that the management had given earlier, is what they have mentioned in their note. Management expects the cost to income ratio or operating efficiency of the Shriram Finance to be between 26 to 27%. Remember that it was around 27.5% in Q1 of FY25. So that is what they have written in their note. Nomura, on the other hand, has written a note on banking sector. They say that a potential 50 basis point rate cut can impact the net interest margin of the lenders negatively, anywhere between 15 to 20 basis point lower for SBI, AU Small Finance Bank, IIB, that is IndusInd Bank, as well as Bandhan Bank. ROA hit will be about 5 to 10 basis point, but lower for IIB, AU and Bandhan as well. Deposit growth and CASA could see a positive fillip. However, benefits from a potential CRR cut will get offset by the fact that LCR requirement is now on the higher side. Rate cuts is a sector dampener. They will not jump the gun based on net interest margin alone. Top pick is Kotak Bank, ICICI Bank, SBI, as well as Federal Bank. Back to you.
All right, Abhishek, thank you very much for that. So that's financials and banks in focus. IEX is the next one. Vivek has got more. Vivek, morning.
Well, good morning. Very interesting note from UBS on IEX. They've gone ahead and raised the target price quite sharply, a 30% hike to 260 rupees a share versus 200 earlier. What is it that they're saying? A couple of key points. Number one, as far as IEX is concerned, some of the newer markets in terms of the long duration contracts, the green products, as well as the right to match products, these are the ones that are seeing significant driver growth as far as, the previous month was concerned. And UBS believes that this particular growth trend can sustain going forward. So that is one key kicker for them. Along with that, what they're saying is that as far as market coupling overhang is concerned, they believe now it is no longer such a worry, given the fact that Grid India, which had gone ahead and asked for trial runs to be done, they haven't seen too much of a progress, and they also believe a lot of market participants will go ahead and oppose this particular move. So they believe, market coupling, if it happens, could be delayed out and be pushed out much further. Along with that, they believe market currently is not fully pricing in potential growth acceleration in trading volumes, largely driven by the green product segment.
All right. Thanks very much. So we'll keep an eye on IEX as well. So these are some of the top stocks. We're a few seconds away from the first rates, which will be on your screens. The Nifty, the Sensex, the Bank Nifty, some of the sectoral indices, and then we'll look into individual names. So what do we have? It's 24,818. So that's the first rate coming through, 24,800. Very quickly. The Sensex is starting about 0.25% lower, 80,972. So 961, 950. Moving around. So 67, 70 points lower on the Nifty right now. So 24,775 is what we have. That's 1/3% now. Bank Nifty is down 150 points, 50,427 on the Nifty Bank. That's 150 point knock, about 1/3% lower there as well. So this is, I think, largely on expected lines. The IT index is down about 0.4%. The Nasdaq was down 2.5% on Friday. The heat map, the Nifty heat map gives you a snapshot view. The thing that about 14, 15 stocks are higher. The rest of the sort of Nifty 15 names are all starting at least in the red at this point in time. But all about stocks as always. Reema, take it away.
So let's start with Shriram Finance. That's the top Nifty gainer. UBS has raised the target price to 38.50. Abhishek was just telling us about it. Britannia also opens up in the green. Remember, they've got all the approvals for capacity expansion. They're planning to invest about 300 crores. This is at the Ranjangaon plant. HUL is also one of the big movers. It's a near 1% gain on HUL. They formed a committee to evaluate the future plans for the ice cream business. So some FMCG stocks are higher. You've got strength in Asian Paints. It was up 4.5% last week on the back of a decline in crude prices. They've started off this week on the positive note. Life insurance companies, SBI Life, HDFC Life too, have opened up with strength. In the IT names, it's TCS, which catches your attention. And Bajaj Finance, remember, it'll get nearly 3,000 crore from the monetization of its stake in Bajaj Housing Finance. So there is a green tick on Bajaj Finance on Monday morning. On the way down, power stocks are seeing some profit booking. So NTPC Power Grid under pressure. Metals are on the back foot. Maybe the decline in global, just a global outlook. The sell-off, the risk-off that we're seeing in global markets is putting pressure on Tata Steel, Hindalco this morning. ONGC too is coming under a bit of pressure. So ONGC is down nearly 1.5%. For banks, it's Axis Bank is a bit subdued in trade. We'll pull up some of the other private sector financials to see how they've opened up. HDFC Bank is flat. ICICI Bank a little bit of a downtick.
All right, let's look at the mid-cap end of things as well. There are nearly twice as many stocks declining as against the number of stocks which are advancing on the National Stock Exchange right now. The mid-cap index actually is faring much worse than the frontliners. At least at the open, the mid-cap index down almost 0.6%. So that's something we most definitely keep an eye out on. What's actually leading the losses from the F&O space, we have Granules, which is down about 3.5%. Remember, Ekta did tell us about the US FDA issuing 6 observations for their Gagillapur facility in Hyderabad. The other one which is losing is also Lupin. Again, here too, the company may not be able to realize the full potential of its kidney drug Jynarque. And this contributed, as per analysts, almost 30% to their FY26 EPS. So there's a bit of a downside risk out there. Nippon Life India is down as well. Though a couple of these life insurers are doing well this morning. So HDFC Life is up about 0.7%. SBI Life is up around 0.8% as well. So Nippon is the only one which is an outlier with a cut of almost 1%. The FMCG stocks, they're by and large doing extremely well. Marico is up around 8%. Colgate is up around 1%. Dabur itself up around 1.5% as well, as is United Spirits up about 1%. One stock which really stands out on the way up is SP Apparels. Remember, we had the management join us earlier today speaking about a possibility of a 20% growth and nearly 20% of their production coming in from Sri Lanka in the near future, along with some uptick coming in from Bangladesh as well. So all these factors doing well. Seems like Metro Brands too, the large trade, has been absorbed. The stock up around 3%. So a lot of stocks in focus, though more declining than the number of stocks which are advanced.
No, clearly. So it's about 3:1 in favor of declines. So that's the first look at the breadth of the market. It's skewed in favor of what is down right now. Now, Prestige Estates has got tremendous volumes. It's coming up as the second largest volume-led loser. It's down about 3%. Stock actually had a bit of a sharp up move recently. You had Granules, I think we mentioned, with a 3.5% cut. I was talking about Ola Electric earlier with Prakash. Ola is down about 3%. That lock-in opens up today. I mean, essentially, not all those shares are going to be sold, but you got, I think about 4% of the equity that is free for trade now with the lock-in ending. Godfrey Phillips, we mentioned, 4% lower. There is Tile Bazaar, which is the recent listing, which is down about 3% right now. Moripun Labs is down about 3%. SJVN is down about 3%. Hindustan Copper is coming up with a 3% cut. Wockhardt Pharma was, of course, it sold off on Friday as well. There was, of course, there was a press conference by the opposition, and the stock actually has come off from the recent highs of about 1,100 to about 989 in 2 sessions. So that's a 4.5-5% cut. VST Industries is down about 6%. I think we were mentioning a block deal which has happened on VST earlier. We'll put that up. But that's a large, sharp cut coming through. 450, 451. The block deal happened, of course, on Friday. And a large marquee sort of investor in VST has been the seller. Bector Foods is down about 5%, 1719 on Bector Foods. Raymond is down about 3% or so as well. Raymond has also moved up very, very sharply. The advanced decline is not budging. It's right there, and very little is moving it at this stage. On the upside, Premier, the new listing is up 7%, 7.5%, 8% actually. So 1179 on Premier Energies. Look at that go. I mean, just incredible. We have Deep Industries, which is coming up with a 13% pop, 450 on it. Very large volumes, and that's why we're sort of talking about this one.
And there's an order win for Deep Industries, about 1,400 crore plus.
So it's a large one. So it's reacting. JM Financial is up about 2.5%, 127. Mankind is showing some action. Mankind is up about 3.5%. I mean, stocks largely, it's come off the lows, but it's not done very much. So they made that large acquisition. Keytex is up about 2%. I mean, small name. And Mahindra Corp, but volumes start to dry up if you go down the list. So this is broadly what's going on.
I'll be very interested to see what happens with the sugar stocks because, you know, it's around September, the sugar season, so sugar year starts between September, October, and Balrampur Chini has taken off. And typically, sugar stocks move in tandem. So Dhampur sugar down about 2% right now, Balrampur Chini up around 1.7%. But if you pull up the intraday chart of the stocks, you would know that, you know, there is some traction building up out here. All these stocks typically move in tandem. So if one leads the charge out here, do others follow or not is something that we'll keep an eye out on. So there you have it. You know, opened in the red, saw a bit of a spike, saw another spike, and now at the high point of trade, whereas the others are still struggling at lower levels.
All right. So we'll keep an eye out on this space. Usually moves as a pack when it does. And we'll see if that is the case today. Harish Krishnan is with us, co-CIO, head of equity at Aditya Birla Sun Life Asset Management Company. Harish, good morning. Good to have you here. Thank you for your time. You know, I want to just understand what you guys are doing at Birla in terms of allocations, activity. And I want to preface that with something that you tweeted recently. You sort of you quoted data from a report from ICICI Securities, and you said that the number of companies in the top 500 where earnings yield is greater than bond yield is now about 47. The lowest reading was 32 in December of 2017. This is, you know, top 500 universe where earnings yield is greater than bond yield. So just sort of prefacing my question with that data which you yourself put out. Go on, Harish.
Morning, Prashant. So what we have seen over the course of the last 18 months or so has been that risk has got disproportionately rewarded, especially as we go down the curve, be it in terms of mid, small, and more so in micro caps and, you know, SME, lesser said the better. Now, in this context, what we are kind of doing in our portfolios is basically moving up the curve. We are trying to consolidate our holdings. We have increased our allocation to larger mid caps, you know, trying to book our profits into many sectors which have done exceedingly well. We've also seen over the course of the last 6-7 months or year till date, actually quality as a style doing significantly better. And this was our call at the start of the year that, you know, value had done exceedingly well over the course of the last 2-3 years. We did think that growth and quality would start making a comeback, and we've seen quality starting to make a comeback out there. Sectors like, say, pharma, where we have a large position, IT, again, a sector where we have an overweight, to a certain extent on the consumer or the consumption side. These have all been names that have kind of helped us, you know, kind of position for this kind of a change, I would say, in terms of sectoral churn, which is happening. So by and large, the sense that we get is that one needs to be mindful of taking on more risk at this point of time. Doesn't mean that, you know, we're going to see a massive crash, etc. But we do think that there can be a reasonable amount of churn in terms of performance going ahead. And that is what we are kind of moving and navigating within our portfolios.
So what's the kind of...
Sorry, Harish, hi, morning. So what's the top-down call now? First on the US economy and on the markets there. Because investors are still grappling with the uncertainty of US health. Then there is uncertainty related to the elections. You know, US markets are virtually at all-time highs, barring the little bit of a correction that we had last week. And historically, this has been a challenging year. So what's the call first in the global markets, US in particular, and then the flow through to India?
So from a US perspective, we do think that the corporate health of US is in very good shape. The consumer health of US is also in very good shape. So clearly, while there is an interest rate which has climbed up significantly and there is an anticipation of a slowdown and rates are likely to be headed lower, we think that this is possibly the most well-anticipated recession or slowdown in the making. Market observers and people and CXOs have been waiting and watching for this over the course of almost the last 18 months. So therefore, when it does happen, we don't think there's going to be a panic. Yes, in the near term, there could be some amount of consolidation, some amount of steam which is going off. But we don't think that this is a precursor of a massive fall or a massive correction in the US, and that kind of flows through across most other risk assets as well. Wherein we think that especially emerging markets which have not really performed barring India could be a good place to be in as and when the rate gets through over the course of the next 12-18 months. Coming through from an India point of view, I think while we are going to see continued strength in the economy, I think at the margin, and markets do work at the margin rather than in absolute terms, we do think that there is some amount of softness. So if you look at top line growth of corporate India, there has been reasonable amount of sluggishness, and while there has been a significant margin expansion that helped through earnings over the course of the last 18 months, I think top line growth needs to be a lot more focused upon going ahead, given the fact that there is only so much margins that can go up. So in that context, we do think that it makes sense to be in fewer pockets where there can be a potential improvement in top line growth. There can also be fewer sectors where there can be a potential of significant margin expansion. So if I were to think about sectors where there is and which haven't performed well over the course of the last 3-4 years, sectors like, say, for example, cement, which has been a space which hasn't had a great 3-year run. We are seeing consolidation. Also, we do think that cement is a proxy play on energy prices because at every aspect of the value chain, it's essentially transporting energy, and lower energy prices therefore can help with improving margins. So I think that could be a space that we have a contrarian kind of a stance. Similarly, consumer durables is a space which hasn't done much over the course of the last 5 years. Of course, this calendar year it has kind of got its act right, but we think that there is still a lot more room to play out as far as consumer durables is concerned. So I think there are pockets where we do incrementally allocate, but a broad brush kind of a move is not something that we anticipate, especially in the near term, even as we continue to remain positive on the broader stance in equities from a medium to long term point of view.
All right, we'll ask you to hold on to your thoughts, Harish. We also have Vetri Subramaniam, man of many cycles, Chief Investment Officer, UTI Asset Management, joining us now. And as we speak, on cue, the market's extended its cuts. The Nifty is down by about 100 points, close to around 24,750. SBI is one of the stocks which is lower right now. The midcap index, when it started, was down 0.6%, now down about 1% as well, with a cut of almost 600 points. What are the stocks which are leading the declines? It's the same ones which led opened lower are now extending their cuts. So Granules, for instance, now down about 4% as well. Good time to welcome you, Vetri. Where do you stand at where the market is right now? What are your thoughts, and what are the investment ideas?
Sure. Thanks, Manu. Well, not much has changed. It's still a reasonably richly valued market, and therefore one really has to, dig quite deep to be able to identify where there is value. I think what our messaging to investors has been that this is actually a time where one should be more concerned about risk. This is a time where one should be more concerned about asset allocation. Stick to the asset allocation in line with your, goals. This is not not a time to dial up risk. If your neighbor is making more money than you are, so be it. You should be aligned with, where you think your asset allocation is tolerable relative to your medium-term outcomes. When you think about valuations in the current marketplace, I'd particularly point to the small and mid-cap space where, valuations are not only very rich in absolute terms. This is one of the few times in my career where small cap valuations have actually moved to a premium to large cap valuations, and that I think is very unusual and also a sign of perhaps a need to be slightly more risk averse in that territory in particular.
Vetri, hi, morning. Sort of retail inflows are still gushing through this month as well as fast?
But we don't get daily data, but I don't think there's too much of a change, simply because keep in mind that essentially the pipeline that's coming through SIP is intact. But keep in mind, Prashant, and I think I've seen you all talk about this as well, there's a gush of supply coming through at the other side as well. So as a capital market participant, I'm happy that capital formation is well and truly underway, but I don't think this is a one-dimensional perspective that we should be keeping. There is a massive supply of flow which is coming through from promoters, from new issuances, as well as from strategic holders, including Ps and VCs. So every day you're flooded with a new set of either block offers happening in the marketplace, or QIPs, or OFS, or IPOs. So it's a very hectic market, and that's the reality of it.
I was talking to a banker over the weekend, and he said, well, everybody wants to do an IPO, and that is maybe not such an exaggeration as well. He was joking, well, it not be very far away when people securitize their own personal earnings and IPO themselves. It's I mean, just joking. But, Vetri, the paper which is coming, again, very difficult to generalize. Is there a bit of euphoric element in how these issues are priced as well, or they are reasonably priced? A lot of what is coming, and you must be seeing most deals.
We do, but we've been selective. We've been selective for a long time now, and I think it pays to be selective in these kind of environments. So we typically don't participate unless we are clear that this is something we are willing to hold for the medium to long term. I think many people have seen the data about how much flipping is going on in the IPO market. That's certainly not something that we do from the fund perspective. So we only participate if we are clear that we are willing to add to our positions at some point and stay invested for the long term. But I don't want to generalize, because I think you've just got to treat each IPO on its merits rather than generalize it.
Harish, have you all been participating in any of the IPOs?
Of course, we've been participating, but I guess we've been selective as well. So roughly about 1 in 5 IPOs over the course of the last 3 months is where we've generally kind of, put in our monies. I think, as Vetri said, it's great to have formation through the equity markets. And we do think that many of these IPOs need to be evaluated so that, we are ready as and when we get greater comfort on valuations. And more importantly, like I said, it's more an assessment of the risk that we see at this point of time, wherein we want to consolidate into our holdings rather than adding to the tail. So that really is the focus at this point of time. Because, rather than having a fringe holding wherein we may get, say, 10, 15, 20 crores, we would rather want to consolidate at the top where we can take meaningful bites of, say, 1,000, 2,000, 3,000 crores. And there are many listed companies which have not kind of been in the limelight over the course of the last 3-5 years, which do provide greater margin of safety for us, wherein we are moving our overall portfolios towards.
All right. Vetri, you did, and both of you all actually, to be very honest, did stress a lot on asset allocation at current point in time. As we speak, in fact, the Nifty Bank's taken cues and has recovered from the lows, moved mildly into the green. But on asset allocation itself, you said you'd be happy to underperform in the very near term so long as you have all your portfolio investments, etc., secured over the medium to long term. For a moderate risk capacity individual, what should the asset allocation be according to you, Vetri? And in the allocation towards equity, in that, what according to you would be your sectoral breakdown?
Sure. Honestly, that's a very difficult one to answer because I think every person's risk appetite and financial goals are different. But what I can talk to is essentially the kind of asset allocation which we manage in the schemes where we take responsibility for asset allocation. So if you look at our multi-asset allocation fund, our net equity exposure can come down to a minimum of 20. It can go up to a maximum of 80%. Currently, we are less than at the halfway mark at about 45%. So in a way, it is an underweight equity stance in the context of asset allocation that we make in that scheme. And that's a function of valuation. So I wouldn't presume that this is the right number for everybody. But really the point that I would make, and I keep getting asked this question, when will the market correct? Will it correct over time? Will it correct in a sharp cut? And the answer to that is that we really don't know. But there is a way for every prudent investor to prepare himself or herself for those kind of outcomes by sticking to your asset allocation rather than trying to predict when the market will correct and how it will correct, neither of which I have seen anybody do consistently and accurately over 30 years now in the marketplace. So, use the tools available to you rather than focus on something which is impossible to do. In terms of sectors which are attractive, honestly, there's only one sector top down that we find reasonably attractive at this point of time. It's a combination of above average fundamentals with below average valuations, and that, roughly speaking, is the banking and financial services sector. So though that's the one sector where I have absolute comfort.
Only half joking. I've been Mangalam's in asset allocation usually, but asset allocation gold and equity and debt, etc. Right? Right now, asset allocation means
in equities,
large cap, SME, micro, mid caps.
And not to lose sight of a lot of people who are sitting on the sidelines, via the unlisted space as well.
I'll tell you, I was at an event a month, maybe it's been a month now. There was a fixed income CIO, there was an equity CIO. The fixed income CEO was more bullish on equities than I won't name names here, but that's the kind of market we're in. Vetri, the old saying, right? This time it's different. You sometimes do feel that, and that's the beauty of markets. They, the rise can make you believe, the rise, the fall can make you believe anything. And you start to have to, you really have to pinch yourself to say, well, this has happened before. But what's your sense? I mean, I'm not saying, well, the question is not whether this time is different, but do you think there are things maybe a little different, maybe a little more supportive of the underlying sort of exuberance that we are seeing? And I'm sure you would agree with some, right? And disagree with others. Just briefly, if you can share your thoughts.
Yeah, sure, Prashant. Look, it always is the case that when valuations are rich, you've got news flow, which is extremely supportive. And when valuations are, at the cheaper end, the news flow is rarely supportive, right? So this is the reality that we deal with in the marketplace. Could things be different this time around? Maybe they could be. But, I've learned the hard way that rich valuations tend to sort of eat into forward returns, whereas cheap valuations tend to add to forward returns. So I'm not suggesting anybody go 100% into fixed income or whatever other asset class they deem to be attractive relative to rich equities. All I'm saying is stay the course. This is not the point of time where you want to look at what others are doing. Now, I hear things like this is India's decade, this is India's century. As an Indian, I'd be delighted to see that happen. But as an investor, the lesson that I've learned over time is that prudence and risk management is the only way to stay in this game for the long term. Being invested for the long term is as important as what happens. And what people forget is that if you overextend yourself, if you leverage, if you overextend yourself, you compromise your ability to stay invested for a very long time. And the most important part of the compounding equation is not how fast you go, it is the period of time that you are able to remain invested.
Great conversation. Thank you, Harish and Vetri, for your insights in the markets and the way ahead. We need to slip into a very short break. On the other side, we'll be joined by Atul Jain, Managing Director of Bajaj Housing Finance, as their IPO gets set for subscription today. What does it take to build India's largest startup platform?
It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour.
Welcome back. Well, the markets bounced nicely. We're down about 20 points, which is off the lows by quite a bit. More on markets in a bit, but the primary market action is as hot as ever. Bajaj Housing Finance's much awaited 6,560 crore IPO opens for subscription today. The issue includes an offer for sale of 3,000 crore rupees and a fresh issue of 3,560 crore rupees. Bajaj Housing Finance has also raised 1,758 crore rupees via anchor book ahead of the IPO. Well, let's talk about what Bajaj Housing wants to do in terms of growth rates, because that will be relevant for you as a potential investor. Atul Jain is Managing Director at the company. He's with us to take some questions. Atul, good morning. Great to have you with us here. Thank you for your time. Prashant this side. Housing finance is the sweet sector, long runway for growth, unending demand as far as the eye can see. I mean, Bajaj Housing comes from a stable which is really very highly rated, so cost of funds is not a problem. So give us a few numbers, Atul. What should we expect in terms of AUM growth at Bajaj Housing for the next many years? What should what's the ideal net interest margin for Bajaj Housing going to be from here on? Go on.
Prashant, I think you have got me off the wrong start. You're fully aware during the IPO process, we cannot talk about projections. So I'll have to take excuse on this question, because what we can refer is what we have delivered till today. Prashant, what we have been growing at the rate of, in last 3 years, at the rate of a 31% AUM. Past growth is not a reflection for the future growth. But the housing market, as you called out, is very big. The market is very big, and compared to while our absolute size, which is a 91,000 crore assets as of 31st March and a 97,000 crore assets as of a 30th of June, look in absolute sense reasonably big. But compared to the market size, I think we are still very small. So all segments of the market, whether it is, because we are in mortgage in all segments of the market, whether it's a home loan, loan against property, lease rental discounting, or a construction finance, I think all segments of the market have a clear runway and a very large runway, given country is growing, given housing demand is growing, given mortgage segment itself has been growing at the rate of a 12 to 15% across industry. So we believe, given our relative size, we have a reasonable path and a highway to grow. We can't talk about specifics, Prashant.
So on a 1 lakh crore book, can you continue with the historical growth rate? Now, I'm not putting any numbers out, but you said we could talk about what you've done.
So our attempt will always be to grow faster than the industry. That's what, Prashant, we can say. Yes, of course, as a size grows, what you are referring is the difficulty to grow at the similar percentages. However, we feel, again, to in a way repeating what I said, that given our relative size compared to the market being lower, we feel that we have a clear highway in front of us.
I remember our conversation, Atul. Hi, this is Reema here. You told me that the housing loan market itself is 30 lakh crore plus. The loan against property market is 10 lakh crore plus. And projections by CRISIL suggest that this market is growing at about 13 to 15%, at least for the next 3 to 4 years. So for you, per se, the developer finance book has been growing faster. Is that something that will continue for the next 2 to 3 years? I'm sure you have that visibility. So in terms of the products that you offer, for the next 2 to 3 years, which ones are growing faster? Where will we see perhaps a little bit of slowdown?
So Rima, what we are, since we are registered as a housing finance company, there is a regulatory construct on our asset composition, which is first regulatory construct is 60% of our total assets have to be residential and 50% have to be home loan. So construction finance is a part of the non-home loan segment because as a regulatory construct, only 50% of the assets can be which are non-home loan. So construction finance, lease rental discounting and loan against property, we take a view depending upon at a point of a time in the market, what is the return versus risk in that construct. If the market had been growing faster for construction finance in the last 2 years, we have grown faster. If the market grows in future in other segment faster and we believe the opportunity to grow there and the risk return ratios are better, there will grow. For construction finance, we also have a requirement to keep on working in the way we work because it acts as a funnel for home loan, which is our retail business, because it helps us build the relationships in the market because developers are the primary sales points. And if we have a relationship with them, it helps us to be present and their counter for home loan. So again, a clear pathway, I think, depending on the market situation. And as market grows in construction finance, their housing boom, what has been there currently, boom remains and the demand remains. Happy to keep on growing.
Right, happy to keep on growing. You've spoken about, a reasonable path / highway to grow. So we'll while not pin you down to numbers because you can't obviously project them, the last 3 years, your loans have compounded at a little over 30%. Just wanted to know, when you say it's a highway, is it, compounding at 25 to 30% or probably higher now that you get a little more money into your kitty as well? Just a rough range over a medium-term period that you're aspiring to grow at.
Again, regret we cannot be specifics in terms of a range. Like I said, that highway to growth is there. And just to add the point, money raising is not going to change the highway to growth because we are well capitalized. So the capital had been available as a private company as well as a 100% subsidiary of Bajaj Finance. We had been raising capital as and when required. This is an effort to diversify the source of capital. We had been raising money on the lending side separately from the parent company. But now this is an opportunity because having reached a particular size, we felt there is a time for us to even diversify the sources of capital. That is why this is a diversification of a capital source, not in a way creating an extra width for growth. The growth which would have happened as a private company would continue to happen as a public company as well.
So with this being diversified, do you getting capital from other sources as well? What does that then do to your margins? Because, I mean, if, the growth side is intact, no problem. It is the liability side, which, you are diversifying right now. What happens to your margins? Do you have any targets on improvement out here?
No impact on margins from the capital raise because, of course, for some time when there is a capital excess, their margins expand because of, your leverage ratios goes down. But on the borrowing side, since we already enjoy the highest credit rating in the country from the credit rating institutions, and lenders have been having the confidence on the parentage and our track record, we had been borrowing at a quite competitive pricing. So we don't expect compression in the cost of borrowing by public issue or by going public, or expansion in the margin or a contraction in the margin. Margins are not getting impacted by our raising money through public. The only impact, which is the impact of excess of capital for a period of time, that expands margin to a certain extent.
Okay, all right, we'll leave it there. Atul, appreciate you joining us. Good luck with the issue. And thank you very much for being with us here. And we'll hope we can talk specific numbers in terms of guidance, etc. Post-listing, on the day of the listing, which I'm sure is going to be a great one. So that is Bajaj Housing Finance with some perspective. Well, the GST Council will be meeting later today, and this is going to be important. And they're going to talk about a number of crucial issues, from taxing gateway fees for small car transactions to deliberating on tax treatment for insurance premiums. The council has its plate full. Let's get a curtain raiser with Timsy, who is joining in, who's been reporting on some of what could be on the GST Council's agenda. Timsy, over to you.
Well, a slew of items on the agenda for the GST Council when it meets on 9th of September. Let's take you through some of the key ones. The Council is likely to have a heated discussion on cutting GST on health and life insurance. Council will discuss Fitment Committee's proposal to allow GST exemption for only pure term individual life policies and reinsurers, which comes with a revenue implication of 213 crore rupees. For health insurance, sources say that the Fitment Committee could not build a consensus, and thus it has suggested a four-option mechanism, including a complete exemption for senior citizens and for policies up to 5 lakh rupees, or exemption to only those premiums which are paid by senior citizens, or reducing GST on all health insurance premiums to 5% with ITC. The Fitment Committee has flagged the potential revenue implications for all of these options, saying that any cut or reduction in the GST on both life or health insurance should come only when it is being passed on to the policy holders. The Council could also clarify on whether 18% GST should be levied for card transactions below 2,000 rupees on payment aggregators such as Pine Labs, Razorpay, etc. The Council-nominated Fitment committees of a view that these aggregators are intermediaries and not banks or financial institutions, thus they are not liable for GST exemption. Currently, payment aggregators are exempt from GST for transactions below 2,000 rupees. The Council will also be taking a status update on the Group of Ministers panel on rate rationalization and real estate, where both the panels are likely to seek more time before presenting a final report. The Council will also discuss upon the current status of the compensation cess. Here, the Council will be presented with a view that the cess collections are still short of about 1.37 lakh crore rupees and thus will have to be continued through FY26. Apart from this, a lot of clarifications are expected, including a breather for the foreign airlines, data hosting sector, namkeen and FMCG sector, and auto and two-wheeler industry on the taxation of seats, relief for power discoms and consumers on electricity connection ancillary services, setback for highway builders, and much more. So let's see what all does the Council decide when it meets on 9th of September.
All right, Timsy, thank you very much. That's a pretty comprehensive readout of what could be on the agenda. Mr. M.S. Mani is partner GST, Deloitte India. Mr. Mani, good to have you with us here. So you heard Timsy, but if you could tell us, for viewers who are watching, and they're looking at which sectors could come in for changes. What is top of your mind? 3 or 4 sectors.
So the top of mind sector is obviously insurance, where we have seen some action in the last GST Council meeting as well, and some action is expected in this GST Council meeting as well. Now, health insurance and term cover up to a certain amount are essential ingredients of insurance. And the logic over here, to my mind, is very simple. On the one side, we are aware that India is an under-penetrated insurance market. We are also aware of the fact that there is no health insurance that applies to the masses through a social security network. And therefore, most people have to go and get their own health insurance, whether it's on their own or whether it's through their employers. In that situation, having a minimum threshold, which is exempt from GST for health insurance, similarly for life cover, would be very, very welcome and would do very well with the whole philosophy of GST, that the intention is not to burden the masses or burden the common man. The challenge, I believe, is going to be in what kind of segregation is made, because there would be a segment of people who take very high amounts of health cover and very high amounts of term cover as well.
Got it.
How do we segregate that, and how do we keep that outside the exemption limit, I believe is going to be the discussion.
Got it. No, that is insurance. And I'm assuming most of this will be passed through. This will, at the end of the day, they'll have to lower the premiums, etc. So that's insurance is one, health and term cover. What are the other sectors, sir?
I think airlines is one sector where we are expecting something, because in the past, airlines have been having a tough time together with shipping lines. Both need to be taken together at some point of time. We also have some issues with respect to the information technology companies, where some of them have received demands in respect of, transactions which are merely in the nature of remittances without any underlying services. So that's again one sector which could see some clarity possibly in today's meeting. One very key area which is... one very key area, which is a bit sector agnostic, is the fact that everyone would like to hear what is the latest on the rate rationalization, because at some stage we would like to see fewer rates in GST. I also heard your colleague mentioning that compensation cess is expected to be extended till 26. That is something where, again, industry would want some clarity, because this was originally intended only till 2022 and we are in 24. So at some point of time, the compensation cess has got to, go.
Is it possible, Timsy also mentioned real estate. Do you think something could be done on cement? We've seen some news reports, etc. I mean, at least demands.
So we have been, cement is taxed today at 28%, unlike many of the other building items like steel, which are taxed at 18%. So yes, there could possibly a reason to look at that. But there is also an issue with the real estate sector faces in respect of transfer of development rights, in some cases, land transactions which are being subjected to GST today. So possibly we'll see some clarity in respect of many of the other real estate transactions, such as lease of freehold land, such as transfer of development rights, all of them.
Okay. All right, Mr. Mani, we'll leave it there. Thank you very much for joining us. Sorry, a quick preview. This is just a preview, and we'll get into some of the details later through the course of the day. And I hope you will join us then when the meeting, etc., does get underway. That's going to be later. The market has bounced nicely. We're down just 10 points now, 24,842. But Mangalam, we have Senco Gold with us.
We do have Senco Gold, and as on cue, a lot of the jewelry stocks are actually doing quite well. Senco Gold itself is up around 2.5%, but look at something like a TBZ up around 8%, has been a big mover all of this month. Some of the earlier known jewelry companies have seen a big move as well, debt-ridden ones, which are seeing some bit of an impact, after their settlement. So PC Jeweler, for instance, up around 4% as well. That's another stock which is up around 31% this year, and a big mover too. Senco Gold, the news that's backing this company is that they've incorporated a new subsidiary called Sense Fashion for exploring new businesses in categories like lifestyle products, lab-grown diamond jewelry, among others as well. A lot of the jewelry companies are actually looking to cross-sell some of these luxury products once they establish connect with the customers at the luxury end itself. We have with us the MD CEO Suvankar Sen joining in. Thanks a lot, Suvankar, for joining in. So one believes that the rationale for that is to improve upon the relation that you've already built from a high-profile customer and try and cross-sell them some of the other luxury products as well. What I want to know is, one, the expected investment in this business over the next few years, target revenue from the non-jewelry businesses over the next few years as well.
So see, the investment that we would like to put in, against these new businesses that we are putting will be around 50 to 60 crores in the initial phase, and then every year maybe we will keep adding about 25, 30, 35 crores for the next coming 4-5 years. And as we would keep on increasing the traction, in terms of opening more number of stores or diversifying of the products, investing on the brand. So there has to be a sustainable, profitable proposition towards this. But what is most important is the opportunity that lies along with us. As you rightly said, that you're already having a group of customers who are loyal to you, who have been buying products which are mostly jewelry from you. Now, if you look at it, Sense, the brand name we're calling it Sense Fashions Limited. Now, our lab-grown diamond comes under that particular brand. The leather accessories that we shall be launching would be coming under that particular brand. And there will be more such products that will keep launching over a period of time. If you look at the international luxury market, if you see those brands, they are serving customers with a variety of products. If you look at the young generation of India today, they are aspirational. It is the upper middle class who would like to evolve themselves and with the growth of the country and economy. And as a brand which has been focusing on design, focusing on lifestyle, on luxury, because jewelry, though in India it is culturally very much integrated, but with the everyday wear and with all the various collections and designs and occasions that are coming up with, women today would like to upgrade themselves with the latest trends in fashion. And with that thought process, with the new age opportunities that are coming up, I think that is with which we have been incorporating this company. The operations of such products had already come under the Senco Gold Limited. This is just like a wholly owned subsidiary that has come under Senco Gold. Yes.
You decoded the opportunity size, you've decoded the rationale. 50-60 crores is what you're looking to invest in, thereafter 25-30 crores every year. What I wanted to know is that these leather, non-leather accessories, perfumes, lab-grown diamond jewelry, are you going to sell them under your brand, or are you going to sell third-party brands? Because there is an already established preference for known brands. To build a brand again in the luxury end may require some doing. What's your right to win here, despite having a lot of customers?
So, we would want to build our own brand. If you look at the existing brands that are there, well, most of them would not be from our own country. Many of the brands are international brands, which we as consumers would be, aspiring for the brand that they have built over the years. But then while we are globalizing ourselves and India is opening up to the global market, I think that Indian jewelry brands or Indian brands per se, nothing to do with jewelry per se, would want to strengthen themselves, upgrade themselves, focus on quality, and ensure that we ourselves create enough traction for our Indian consumers as an option for them to consider. I think that's the thought process with which we want to move forward.
So as a part of your business plan, Mr. Sen, how much do you think the non-jewelry business will contribute, say in the next 3 years?
See, the non-jewelry business over the next 3 years, if you look at lab-grown diamond jewelry, that has a big opportunity. Now, that can be up to 3%, 4% of the overall business, because in terms of the ticket sizes, they will be much lower than the jewelry ticket sizes that are there. Even for that matter, the other products would be of a much lower ticket size. So I think in the coming 4 to 5 years, I think non-jewelry business would be about 4 to 5% of the overall business to begin with.
Will be about 4 to 5%, right, of your overall revenue. And what about margins?
See, the margins for these kind of products are usually on the higher side. So if you look at it, like in diamond jewelry, we have a margin of about, say, 25 to 30%. Similarly, for such products, the margins will be in the range of 25 to 35% as well. So, as we keep moving on and keep discussing that, yes, when it comes to gold jewelry, there is a competitive intensity, there is a downward pressure on the margins. I think that, bringing out the whole concept of lifestyle, fashion, design, and also the kind of products that we are selling in, it will give us an opportunity to protect our margins while we keep increasing our business and volumes and acquire more customers. These products will help us to buffer up on the margin side.
Steady state basis, what kind of margins would you do in a business like this? Because, the first few years you will be building brand, you will be investing, and obviously, it will cause a bit of a dent to your overall book. So on a steady state basis, what are the kind of margins that you're expecting here?
So the margins for this product, if you look at the gross margin level, would be around 30-35%. The investment that we will be needing to do is in terms of brand building, in terms of the inventory and the products that we would be putting in. It will be in terms of the infrastructure of the stores that we shall be opening up on. So those will be more on the fixed asset side, when it comes to the store part of it. Other than that, it's all working capital. It is all about the inventory. And with your customer base, so we have about more than 10 lakh active customer base and building up and adding 3 lakh, 4 lakh customers every year. And with the young generation focus in mind, I think these will only help in to cater to their needs and their preferences.
All right. Just finally, before we let you go quickly, how things on the jewelry side? You said second quarter is when, the fireworks will start to begin ahead of the festive season. And in the geography where you are, in East India, festive season comes a little earlier than every other part of the country. How's sentiment shaped up so far? 8 to 9% sort of growth is what you've targeted this year. Is there any chance of an uptick here?
So let me tell you that post the cut of the duty rates, which happened in the end of July, I think that the whole jewelry industry has been seeing a very large traction, consumer interest. A lot of their wedding jewelry buying of consumers are being done already in this season, because I think consumers have tried to avail the opportunity of the lower of the gold prices. And the footfalls have been very well. I think that in a way, if I may say so, that it is quite unexpected, because our whole focus was the festive season of October. But then the September itself have been very, very, I would say, we are very happy with the way that we are seeing the customer traction happening. And we are very positive that the coming month of festive season will also be very good. So the target growth that we have been talking about, so Q1, we've been growing at what, 7.5%. That's what we saw in the after the end of the Q1 results. But if you look at the Q2, we are in the middle of September. But till August, the growth rate compared to last year has been about upwards of 15%. So you can imagine that the July and August have had substantial growth in order to make sure that YTD growth till August has been above 15%.
Oh, wow. Mr. Sen, good to hear that, and thank you very much for joining us. Market certainly listening. Stocks moved to the high point of the day. It's up about 4% or so. Good luck with the new lines of businesses as well. We'll speak again soon. Thank you very much. Well, I think the market deserves attention because that has also picked up just about 15 points lower. Mitesh is with us with what he'd want you to do now. Mitesh, morning again.
Good morning, Prashant. So I think it's a market, which while did open weak and was weak, I think it's tried to recover. I'm still hoping that the index could, possibly start getting past 24,850, and that could pave a way for a pullback to about levels of 25,050, 25,100 odd zone. So it's still not a strong market, but because of the fact that we've just seen first bout of selling and profit booking, there is some hope of a pullback which could be happening. So we're trading with a mixed bias right now. On the stock side, I have a sell on Power Finance Corporation with a stop at about 536 and a target of around 500 on the downside. I think that's the area which the stock could possibly test. While also a buy on AU Bank with a stop just below day's low of 696. So 694.5 is what I would recommend, and a target of 730 on the upside.
Got that, Mitesh. Thank you very much for that. If you can pull up the intraday for Senco, I think it's up even more. I mean, I think we started the interview with about a 2.5%, 3% pop. It's up 5% now. So 4.5%, that's a sharp spike coming through. The last bit about how the Q2 is spanning out, especially September, I mean, looks like they've been very pleasantly surprised with the underlying sort of strength and demand which they've
It's actually caused a flutter among all the other jewelry companies as well, which have been doing well already. But look at something like a Titan. Titan's moved to the high point of trade. And if sentiment improves for one, it improves for everyone, because it's still a largely unorganized market where all these organized players are gaining shares. So let's see how this goes.
Absolutely. We'll take a quick break. We are back. Manisha will put the spotlight on commodities. Who knows, maybe gold is something she's eyeing. But I'm sure there's more. Stay tuned. That's coming up.
If we go back when I was started just about 12 years ago, the per capita consumption in India was as low as beauty and personal care was as low as $6. And today we are at about $15 per capita. And even this, for our income level, is below where we should be. Countries with similar income levels, to answer your question, have per capita consumption which is 3 to 4 times. So they are already at somewhere around $45 per capita. So India is below on beauty consumption habit, and that's where Nykaa always felt that education and social media is also helping a lot, but education at scale is the way to kind of bring more consumers into beauty consumption, and that is happening very rapidly.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable?
Okay, welcome back. 35 lower on the Nifty is what we have. Manisha standing by with what's top of mind for commodities. Manisha, morning.
Morning. Well, thank you for that, Prashant. You've been talking gold and the metals have continued to decline. But there's one thing that seems to be slightly inching up right now, and there is some opportunity buying, and that is the crude oil prices. Well, after declining 9 to 10% in the previous week, we've started crude oil prices slightly on a positive note. And this is one, there was some opportunity buying. It was slightly oversold on charts as well, with 10% of decline on a week-on-week basis. But the prices are firm on a potential hurricane in Gulf Coast. Remember, 60% of U.S. refining happens in Gulf Coast, and there is a hurricane building up, which might see a landing around Wednesday or Thursday. So whether there are shutdowns ahead of that, evacuations, is something that the street will keep an eye on. Well, as I said, the Brent prices have declined by nearly 9% in the previous week. We saw WTI prices decline by 10%, and this has been the biggest weekly decline that the crude oil prices have seen in last 11 months. And with that, the Brent is now trading at the lowest since December 2021, and WTI at June 2023 lows as well. But the markets also have seen, or not reacted rather, to the OPEC and allies postponing their increase of 180,000 barrels per day since the month of December. The markets clearly did not react to this much. We saw 1% of gain, and that also went by the intraday markets ending itself. Now, OPEC and allies also have said with this that they can be looking at a longer pause. They can also look at a reverse if needed, as in they can cut more output as well. And then apart from that, when you look at the OPEC and allies spare capacity, that is a huge 5 million barrels per day. I mean, with that kind of a capacity, markets do believe that there is bearishness that can continue. I also want to take you through what we've done in sense of price range in this year until now. We did see a high of 91. We are trading at 71 right now for the Brent prices, and from 87 to 67 for WTI. That's a $20 of a decline that we have seen until now from the highs in sense of crude oil prices there. In the Asian markets also, the Chinese demand is not so strong, and the refining margins are at the lowest since 2020 as well. There also is increased production from Libya that has come back. The money managers, the latest CFTC data shows that their also net long positions have been closing down. I'll quickly take you to the last slate, which tells you on what is the forecast now coming in for the crude oil prices. Bank of America, for one, says that for the second half, they've lowered the forecast from $90 to $75 a barrel as an average. You also have Goldman Sachs, which also has revised the forecast by $5 on the lower side for this year and the next as well, to $80 a barrel there. Citi says that if you see demand destruction continuing like this and the supply coming in, there is a probability you could be looking at $60 a barrel for 2025 as well. Remember, we are trading at 71 already at this point in time, so that's $10 on the lower side. UBS is the only one that still continues to hold a bullish call on crude oil prices. They estimate that for this year now, 80 is where you could be averaging for the rest of the year.
All right, Manisha, thank you very much for that. Oil in focus. We shift the focus away from commodities, and we're going to take a quick break here now. So our special segment is the economy. My colleague Lata will be in conversation with Neeraj Seth of BlackRock, and they put the focus on global macro data. US payrolls came in on Friday, slightly below expectations. We have Japan's second quarter GDP growth revised down slightly, and China's inflation rate coming in below estimates as well. All of that and more, and implications for markets with Neeraj on the other side.
To stop the war.
It is making us like traumatized, and like it is very difficult us to study.
We have heard that there is a drop of bomb in the village of Maitays.
People are getting like being like a monster.
This is a very critical situation for Maitai community. We, all the students of it, to stop the war to stop the prevailing situations in Manipur, and we have heard that there is a drop of bomb in the village of Maitays, and this is a very critical situation for Maitai community. And for the students of HRD Academy, from the students of HRD Academy, I would like to say that our minds have been distracted from this all situations and all. So we would like to stop this.
We want to stop all the wars that is happening between Meitei and Kuki tribes, and it is making us like traumatized, and like it is very difficult us to study, and then people are getting like being like a monster, and we don't want that. So we are just making a human chain on that. On behalf of that, all our HRD students are here to make human chain.
Down day for markets overnight. US indexes and Asian markets today are flashing red because growth data has been that way. The US August non-farm payrolls data on Friday, today morning's GDP data from Japan and inflation data from China are all mostly pointing to weak growth. Jobs in the US in August rose far less than expected, and even the July and June numbers have been rather substantially revised lower. Only the hourly wages ticked up higher than expected in the US in August. So how will all these impact actions from the US Fed and other central banks? Should equities rejoice over rate cuts or worry about global slowdown? What asset classes should one bet on? I have with me a person eminently placed to answer all these questions. Neeraj Seth, BlackRock's Chief Investment Officer and Head of Asia Pacific Fundamental Fixed Income. Neeraj, good morning. Thank you very much indeed for sparing time for us today. Well, first, the August payrolls and the revisions to June and July. How are you looking at the composite data? Is it pointing to a weaker US than you thought?
So it does actually point towards a gradual slowdown that we are experiencing in the US economy. So certainly weaker than expected. But it was still a mixed report. So I think the market's focused and zoomed in on the missing at 142K, the 86,000 of downward revisions for the last 2 months. And in fact, the weakness you saw in manufacturing and retail, losing 35,000 jobs. But as you touched on briefly, there were positives. The unemployment stayed at 4.2, or in fact came down from last month. You had 80,000 job growth in construction, leisure, and hospitality, which is still doing well. And you had the average hourly earning at 0.4 month on month, which translates to 3.8% year on year, which is a reasonably healthy level of hourly earnings, which translates to consumption in a consumption-driven economy. So yes, it's clear slowdown, but it's not falling off the cliff. But there's certainly an immediate knee-jerk reaction of focusing on the weak points and, in a way, redrawing the path forward with regards to the U.S. economy, the rate cuts very, very quickly.
Okay, so how should financial markets prepare in terms of the Fed? Are you still sticking to 1 + 1 + 1 in the current year? And therefore, what's the takeaway for the yield and currency markets?
So, two parts. One, obviously, on the Fed and fundamentals where we go, and then what's the impact on the financial markets. On the Fed rate cut path, I still think in a base case scenario, we potentially get 325 basis points of cut this year, starting in September. There is a possibility of 50 if the CPI data in the middle of this week surprises to the downside, which is not the base case scenario I would have today. So in terms of the market impact, I still like fixed income. I think it's a great time to be in fixed income. In fact, to be in the belly of curve in the US or taking longer duration in selectively emerging markets or in Europe. In equities, now combination of the September seasonality, upcoming political elections in the US, I'm a little more cautious with regards to potential increase in the volatility in the coming months. And specifically, September is never a great time from a seasonality standpoint. So I think the markets need to embrace for some volatility in coming weeks to next couple of months.
Okay. But what would be the range for the 10-year for you from now to end of year? Or even 12 months?
So I think in some ways there's a slight asymmetry at the 10-year point, more to do with the fiscal financing and less to do with the Fed rate path. So you can see a mid-threes on a 10-year, but you can obviously see backup going back to a 4% level. So I think we're sitting in the middle of the range right now, but the overall yield and carry that you can build in your portfolios gives you the cushion to actually counter some of that. But I do think you will see, but if I put it in very simple terms, the bull steepening of the curve, which is the front end keeps coming lower, even though it looks overdone for now, with maybe some steepening of the curve between 2 10-year apart.
For the next 12 months, do you see migration of smart money from equities to bonds, especially in the US?
I don't think that's necessarily the trade I would focus on. I would look at more of the money moving from the sidelines, the money market funds, savings, the short end of the treasury to more into risk assets and fixed income. US equities, I think, still are well placed unless you see a big risk of recession going higher or the soft lending scenario turns towards a hard lending scenario. So I think the equities are placed okay in terms of where they are, obviously with higher volatility. But you do have close to $9 trillion in money market funds globally, with a significant majority in the US. You have a very heavy ownership in the T-bills right now, given what they're yielding. So I think there's a significant amount of capital sitting there, which even a part of it gets reallocated. I think that will come into your risk assets, specifically in credit, for locking in the yields where we are in this scenario.
Okay, your base case is the US economy is still, decent for people to bet on equities. Let me come to Asia. Japanese growth is lower than expected. China, I mean, inflation is just not budging, 0.5%. Do you see a fairly severe fall in, core inflation everywhere because of commodity prices falling? Our commodity expert was telling us that copper, several iron ore are all trading at multi-month lows. So is there a disinflation on in Asia?
So not in Asia, but you do have the disinflationary pressures in China, right? The data at 0.6%, which includes, in fact, the volatile food and energy. If you take that out, it was 0.3% for CPI this month, or this data that came out today. PPI was still minus 1.8%, which was, again, deeper in negative than expected. If I take a step back and look at what's happening in the economy in China, there's a structural shift towards more state-owned enterprising taking market share. The consumer sentiment, and that's a critical, remains weak due to a lack of job growth, lack of wage inflation, and the wealth effect coming from the negatives from the real estate sector. So all in all, the Chinese economy is still in a muddled-through scenario with a weakening bias, and hence you're seeing that playing out through the commodities, specifically the hard commodities, ex-gold, as well as to some extent oil, which I think will continue unless you see a rebound in the activity in Chinese market.
I'm building all this to your expectations on India. I mean, if there is this Chinese disinflationary overhang, as well as the US Fed more likely to cut than not, what's the expectation? Do you think India will also change stance and then cut before the year is out?
I do think in a base case scenario, I would expect RBI to move in December. Now, key is obviously we have the inflation CPI print expected this week, which I would expect to be in the mid-threes given the base effect and the food prices a bit better behaved. The monsoon has been okay, so we'll see how that plays out in rest of the year. But with the Fed cutting and the inflation maybe undershooting a little bit compared to the RBI expectations for this quarter and next, I do think there's room and potential for RBI to start moving in December. The key is the commodities, the oil price, both from an inflation as well as a macroeconomic perspective in terms of trade, it's actually a positive for India right now in terms of the backdrop.
That was, I mean, you're giving me the cue to the question that was in my mind. If you look at the global indexes, the active ones are still not really in India. They are quite deeply in developed markets. Do you think this jump will come as both the global macros look India positive because we are net commodity importers, as well the local situation is likely to become easy liquidity?
I do think the gradual shift is already happening. As you saw, the MSCI IMI index increasing India's weight now to the largest as a single country above China. In the standard one also, India is reasonably high, just behind China. You're seeing close to now $15 billion of inflows in the bond market, out of which north of 12 is just on the back of index inclusion, where we have only gone from 0 to 3%. We have another 70% as into 10% yet to go. So we're seeing this integration of Indian capital markets, and I would say a little more tilt towards debt at this point. Yeah. But as the markets remain buoyant, and if you do in fact get corrections, I do think the equity will see more flows in India, which we haven't seen as much this year.
Exactly. I mean, I have no complaints about bonds. There has been a decent inflow of fixed income money. But equity funds are still not looking at India as much as we would have thought. Many of them are underweight the active funds. So, I mean, if you were to advise them, would you advise step in? And what is your worry about valuations? In spite of the valuations, will you pick any sectors?
I think I would still stick with some of the growth sectors in India, more in the large cap. The valuations obviously look rich, but at the same time, this is when you start looking at the active management and look under the hood in terms of both the sectors and the companies which are less inflated in the valuation terms. And if I have to do it, I'll still be actually gradually still continue to build exposure in India, given if I take a 5 to 10 year view, it's still one of the best macro stories in the world, and it's hard to completely ignore it.
Okay. If you could be more specific in terms of which sectors you will pick right now. I mean, if you will talk stocks, nothing like it, but...
No, I unfortunately can't. Maybe
You
we
can't.
take that offline. I still like actually the IT services, the financials, some of the domestic stories in terms of consumer. The discretionary side actually is becoming more interesting in India as you get through a certain GDP per capita. So I think if you look at asset management industry, all those have secular growth trends. And I think that certainly is something which I'll be positive on. And lastly, I think the decarbonization effort, as you have seen the renewable power sector, I think they have a long runway for growth in India when you look at the government plans and the implementation from here.
Okay. Well, let me try and squeeze a last one. If you have to advise some rich person with money, what will be the top 3 asset classes you will advise?
For India or for global?
Both.
So I think where we are, I still would actually be, you always want to have obviously an asset allocation framework where you have exposure to the growth sectors in equities. I do think we still want to keep that. One area which I think is actually still under owned is the emerging markets, local currency, and maybe more selective. So the local currency, government bonds, and high quality credit. I think that's a very, very interesting sector, specifically given the shift in the Fed path from a rate perspective, opening the room for emerging market central banks to cut. And the third is private markets, and within that specifically private credit and infrastructure.
Okay. Now that calls for a separate discussion altogether, private credit and infrastructure. Thank you very much, Neeraj, for sparing time with us and whetting our appetite as to how to look at asset allocation and the interesting sectors that you point out in India. Well, on that optimistic note, wrap up on Bazaar. Chartbusters coming.
If we go back when I was started just about 12 years ago, the per capita consumption in India was as low as beauty and personal care was as low as $6. And today we are at about $15 per capita. And even this, for our income level, is below where we should be. Countries with similar income levels, to answer your question, have per capita consumption which is 3 to 4 times. So they are already at somewhere around $45 per capita. So India is below on beauty consumption habit, and that's where NICA always felt that education and social media is also helping a lot, but education at scale is the way to kind of bring more consumers into beauty consumption, and that is happening very rapidly.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar.
Market recovers from opening lows to trade flat despite a weak handover coming in from Wall Street following the August jobs report. Banking stocks trade with slight gains. The mid-caps are relative underperformers with cuts of nearly 2/3%.
Godfrey Phillips shares slip over 5.5% after shareholders approved the reappointment of Beena Modi as the company's managing director.
Ola Electric skids more than 3%, down 4% now as the post-IPO one-month lock-in period ends today. Nearly 18.2 crore shares are eligible for trade now.
Deep Industries has hit a 52-week high, surging over 17% after it has won an order worth over 1,400 crore rupees from ONGC. The order value is almost half of the company's market cap.
The new kid on the block, we have Gala Precision Engineering seeing a strong debut at a near 36% premium was the listing. The stock now trading at a 43% premium to its issue price of 529 rupees per share. Hello and welcome. You're watching us here on Chartbusters. I'm Mangla Malu. With me, Hormaz Fatakia. We saw the markets open with deep cuts. At one point, the Nifty was down by almost 100 points as well. But from there, we've seen a recovery, and the recovery has been led by Nifty Bank, which was an earlier underperformer, currently sitting mildly in the green. So one green block is what you can see on top of our heads, as against the three red ones, and the mid-cap index being a lot more in the red.
The mid-cap index is in the red. Firstly, welcome back to you, Mangalam. It's not a pretty-looking screen if you look at the sector-specific indices. Although the Nifty has recovered from the lows of the day, the PSU banks continue to sell off from where they left off on Friday. The index was down 4% on Friday. It's down 1.5% as we speak. The small-cap index is also down 1.5%. Losses also coming in from metals. And the one pocket, barring the PSU banks, is the overall PSU space as well. The Nifty PSE index, if you could pull that up, that index is also trading with losses of almost 2% now as we speak, and all 20 constituents of the PSE index now are trading with losses, but lots of primary market action to focus on as well in today's session.
Indeed. So let's talk about Cross, a company that is in focus. It manufactures and supplies trailer axles and suspensions. Opens its 500 crore rupee IPO for subscription today. Will close on the 11th of September. We're joined by Sudhir Rai, who's the CMD of the company, to discuss the opening and strategies post their launch. From the 500 crore issue that you've launched, 90 crore is slated for debt repayment. So that leaves us with a two-part question. One, what is the current debt on books? And post this repayment, what will be the delta on your finance cost? Because that will then directly flow down to your bottom line.
Yeah, hi. Thanks. Good morning. So our total debt is 128 crores. This includes short-term as well as long-term. And we will be paying back 90 crores from our IPO proceeds and the balance amount. So there will be our cost of funds as of our last financials was about 2.2% of our top line. So this will have an effect of at least 1.5% on our margins.
Mr. Rai, good morning. Thank you so much for joining in. Congratulations on the IPO. And I'd like to ask you that you're planning on acquiring and on equipping your existing manufacturing facilities as well. Is there a capex plan that you plan on incurring from that? And how do you plan on funding that capex? And by when does all of this come on stream and the resultant synergies of that as well?
Right. So yes, we have plans for capex also. We have a plan of 70 crores from the IPO proceeds to go into capex. So we are now in this business of trailer axles and suspension, which is a new part which we have added just 4 years ago. And this very short span of 4 years, we have become a major player in this segment. So we would like to spend money on this in this particular segment. 30 crores of our 70 crores would go into the trailer axles and suspensions, where we plan to bring in newer technologies, technologies of extrusions, which are currently being fabricated in India. This not alone, we plan to spend about 22 crores in our forging setup, which will go into increasing the general capacities of our factory. And also in the exports, which we are also planning right now, we will be spending close to 18 crores in that segment.
All right. So, just a question to understand how this will reflect in your revenues. The 70 crore capex that you're doing, what are typically the asset turns across the capacities that you are, laying down? And as a result of which, what could the incremental revenues and revenue mix look like? Because you said that you are also increasing some capacity towards exports. Now, that accounts for just about 1% of your sales. How much does that increase by going forward? So, part one is increased asset turnover because of this capex that you're doing. And secondly, export. How does that change?
Yeah, we have a very good asset turnover ratio of our factory. It's 3.5, 3.6x, which is a benchmark, you could say, in any industry. And going forward, maybe a year, we will see a small dip. But otherwise, long term, we will continue to maintain such margins, such ratios. And
70 crore capex that you're doing will give you additional revenue of close to around 200 crores, right?
70 crores capex will allow us to grow for the next 4 to 5 years, especially our main backward integration of extrusion as well as from the forging capacities which we set up. We also plan to increase our foundry setup by putting up a second line. So going forward, we plan to grow in a similar trend which we have in the past 2-3 years.
Could you quantify that revenue potential, Mr. Rai, and also that 70 crore capex that you're talking about? How would that reflect on your margins as well once everything comes on stream?
So our current margins, our PAT margins are at 7.2, and this PAT margin also has grown sizably in the past 2-3 years. So going forward, we see the same growth in our PAT margins.
All right.
It is, yeah. Please go ahead.
Yeah, I look at your margins. They've increased from what, 9% all the way up to 13% in the period that you've reported in your red herring prospectus. What are the other triggers for margins and what do they settle at? This is the EBITDA margin that I'm talking about. Can we look at somewhere closer to mid-teens? Because some of your peers are very close to that 20% mark as well.
Some are closer to 20%, some are closer to 5 also.
Right. So let's talk about where you would want to go then.
We don't want to go there. So margins, you see, if they keep growing, is because we are backward integrated in a very big way. Okay, we have a forging umbrella under us. We have now a foundry. We have all the machining operations, and we spend in manufacturing. This new technology of extrusion, which we want to bring in, is going to be the first of its kind in the country. And it will be a better technology. It will be a stronger product. It will be a more cost-effective product. So we spend money in technology, and that's how our PAT margins and margins grow year over year.
Clubbing two questions into one, Mr. Rai, due to paucity of time. Part one being, what is the kind of demand that you're currently witnessing across your business verticals? Part one, and part two is almost 2/3 of your business comes from your top 5 contributors, top 5 customers. Is there a plan to bring that number down as well?
See, we are very happy with our customer base and how we have spread it out. We want to grow with each of our customers. And coming to your first question, what was it, please? Can you just repeat it?
I wanted to ask you, what are the kind of demand trends that you're witnessing across your business segments?
Yes, one or two demands basically which we are spending forward. One is on the exports, which I have not yet touched upon. We have tied up with two major export partners, and we see a big demand for auto components from the rest of the world. That is one I expect, and the demand within the country for the trailer segment is growing phenomenally. That is because there is a major shift from rigid vehicles to going to your prime movers. And this, all the OEMs also are aware of.
Right. Since you touched upon exports, Mr. Rai, very quickly, it's currently only 1% of your business. Would that go up to say around 5% or maybe even double digits, say in the next 3, 4, 5 years?
Yeah, 5 years, definitely it's more than double digits. Yes, that's what we
All right, Mr. Rai, we leave it at that. Thank you so much for joining in. Wish you good luck for your IPO. Looking forward to conversing with you on your listing day as well. That was the management of Cross. The IPO opens for subscription today. Shifting focus now to our special segment where we get you a few ideas for profit from Money Control Pro. Bharat Gianani of moneycontrol.com joins us now to talk about a stock that he is tracking closely.
Today's idea will be Sandy Hotel's Limited. The company posted better than expected quarter-one performance. While the same-store sales growth was subdued owing to the Lok Sabha elections as well as heat wave, the company posted better than expected margin performance. Integration of the ICICI portfolio as well as cost control measures led to better than expected margins. SAMI's balance sheet has improved significantly post the IPO last fiscal. With a strong balance sheet as well as a healthy cash flow generation, the company's focus has now shifted to growth. The company has highlighted inventory addition plans of 10 to 15% every year. The company has highlighted plans for adding rooms in existing properties. Apart from that, the company will be acquiring new properties as well as adding properties on a long-term lease basis. Apart from that, the company is rebranding about 10% of its overall inventory, which will also aid in the overall growth momentum. There is scope for margin improvement from the current levels, given the integration of the ICICI portfolio and better pricing due to the demand upcycle in the industry. The hotel industry upcycle is expected to continue over the next few years, which will be beneficial for players like SAMI. At the current market price, the stock is trading at an EV by EBITDA of 14.7 times after 26 projections. We expect the valuation multiples to re-rate and hence recommend investors to add the stock in the portfolio.
All right, with that, we'll take a short break, come back on the other side. We have a rare conversation. Amit Dahanukar, who's the Chairman and Managing Director of Tilaknagar Industries, joins in to discuss the company's business outlook, the likely impact of the new liquor policy in Andhra as well. Stay tuned for that.
On CNBC TV18 and CNBC TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as
Welcome back. Let's talk about Telecom Industries. Why is that? Because news reports suggest that Andhra Pradesh is likely to bring in a liquor policy similar to the Telangana one, where retail liquor businesses will be handed over to private parties. To understand this, the impact of this new policy and get an outlook on the business for that, we have Amit Dhanuka, who's the CMD at Telecom Industries, joining in. Remember, 85% of their revenues do come in from the southern part of the country itself. Thanks a lot, Amit, for joining in. The regulation question out of the way. One, how much of your sales actually come in from Andhra and Telangana? And were this policy to be announced, basis what you're hearing, what could the impact on players like you be?
So at the outset, thank you for having me on the show. We're very pleased to be here this morning. So we have, as you mentioned upfront, about 85% of our revenues do come from the southern territories. Andhra and Telangana account for around 50% of our total revenues, with Andhra Pradesh being around 30%. So with the change of government, with the recent elections, which concluded in June, we have been expecting, in fact, the government has made an announcement that there would be a new policy effective October 1. So we are also curious as to what this new policy would be, but going by the track record of the leadership, we do expect it to be fairly progressive, which will be forward-looking, for the next 5 to 10 years, and will provide a level playing field for all national parties as well. So we are quite optimistic as to what the policy would be, but to really elaborate on the contours, it would be too premature right now.
Amit, good morning. Thank you so much for joining in. In a hypothetical scenario, if this policy does come into place, what kind of an impact would that have on your company's volumes? And if you can couple that up with the overall business in general for the current quarter, what are the kind of trends that you're witnessing on the volume front so far?
So just to put it in perspective, I think in the last 5 years, if you see the 2019, when there was a regime change in Andhra Pradesh, the exit volumes in 2024, we see that Andhra Pradesh hasn't really grown in terms of the overall market opportunity. There hasn't been much change in the Andhra Pradesh market in terms of volume. Whereas in that same period, if you see, Telangana would have significantly grown, huge change in the Telangana business opportunity, whereas Andhra has remained stagnant. And we see no reason why, that should have been the case. So I think it would be fair enough to say that if there's a policy which provides a level playing field for all participants, is progressive in its outlook, there have been talks of perhaps privatizing the retail trade as well, though I think they're unconfirmed reports. We can't say with any level of uncertainty. Currently, the route to market is that the shops in Andhra Pradesh, they're government controlled, government operated, whereas the on-trade business, which is the bars and the restaurants, of course, that is private. There have been murmurs that the trade could be privatized, and I think the opportunity could be fairly large. So
right.
But really to quantify what type of impact that would be, it's quite difficult to say. But
got it.
Andhra is one of our key markets.
So for one, to make a reasonable comparison, you did allude to the fact that from the exit of the government change, Andhra has remained stagnant, whereas Telangana
Fairly
has seen
stagnant.
a big growth.
Yes.
Right. So what is the delta between the two, if you could give us a sense, over the last few years?
So I would say if the Andhra growth has been largely flattish, whereas Telangana would have grown probably mid double digit over a 5-year CAGR.
So if this does come by, would it be safe to assume that given the base difference, etc., growth in Andhra could be, say, high single digits or lower double digits as well over a 5-year CAGR?
Yes, we would certainly expect that. We would certainly expect that with the right support and the right infrastructure, the right policy, we would, I think, certainly expect that. The leadership has been known to be progressive. I mean, going by past record, we have seen that the leadership has been progressive in terms of its outlook towards industry as a whole. I'm not specifically mentioning the liquor industry, I think, but quite supportive to industry as a whole. So we can be fairly optimistic at this stage.
Coming back to the question that I had asked you, Amit, earlier, what are the current volume trends that you are witnessing in this quarter, and is there a target that you have set to end the year with as well?
So I think we would end this year with a double-digit growth. I think that's what the expectation is. Of course, the Q1, in fact, in Q4 itself, we had given guidance that owing to the ensuing national elections and state elections in Andhra Pradesh, growth would be muted due to a lot of policy regulations and restrictions during that time period. So Q1 for us was largely flattish, but I do expect it to recover also. At the current time, one must understand that while the new policy is going to be announced, there's a lot of flux and uncertainty in the market, which is continuing even now. But I think long term, the trajectory looks very positive. I think a month or 2 months, here and there could be some minor hiccups. But if you look at a trajectory, say for a 5-year period, I think we are very hopeful.
Mid double-digit growth is what you targeted in terms of volumes, and value would be about 300 basis points higher than volume growth. So should we see somewhere around 18 to 20% sort of revenue growth for this year, given how things are?
Yes, the revenue growth will certainly outstrip the volume growth. I think that's been the trend. I think that's largely due to the product mix and the state mix also, which we have run. So I do see that to continue in this year. And we'll have margin expansion also. In fact, the first quarter margins itself was around 14.5%, which is typically it's our weakest quarter. It's usually typically the beer sales are very high in the first quarter. Our sales are little sluggish compared to the remaining quarters. So, going by that trend, I do expect that 14.5%, which we have reported for Q1, that will kind of form a base now.
All right. So 14.5%, this is ex-excise. The reported margins are close to around, ex-subsidy, the reported margins are close to around 16% right now itself. Just a final question before we let you go, with a promise to join us back once the policy is announced for a much detailed conversation. Your product mix is something that you alluded to. Going forward, currently about 94-95% of your revenues come in from brandy. Going forward, what is this mix likely to be, say, over the next 1, 3 and 5 years? And in brandy as well, flavored brandy, Flandy as you call it, has been gaining some traction. So how much would that account for in your overall sales?
So Flandy, I think now in the states where we have currently launched it, it accounts for around 10% sales of the mother brand, which is fairly good now. Entering the second year of launch, it's something which we're quite happy of, something we're quite proud of, the progress it has made. In the next 1 to 3 years, I think, the brandy volumes will still dictate the growth which we will have. I think there's a lot which we are currently planning to do also in terms of brandy, in terms of certain new launches and new flavors which we plan to introduce. So brandy will continue to dominate our product portfolio for the next 1 to 3 years. But if you take a longer term horizon, say the next 5 to 7 years, I do believe that we would look at opportunities in flavors other than brandy also, strategic opportunities, tactical opportunities, geographic-based opportunities. So we'll be quite selective and guarded in terms of our foray into flavors other than brandy. But yes, I mean, the company now is moving September. By March 25, we do expect to be net debt-free. So we will have, cash generation, which will allow us to subscribe to various growth opportunities in categories other than brandy as well.
So you're looking to make inorganic acquisitions in the second half of this year, is what we've read from what you've said so far. Though I know you won't comment on specifics and say that we're always on the anvil and looking for some opportunities. We'll hear from you and also speak to you once the policy is announced. Not too far from now, you're saying October 1. So we'll get you back on the show. Always a pleasure speaking with you. Take a short break, come back, get you more on the markets and a lot of stock-specific action. Stay tuned.
It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
To stop the war.
It is making us like traumatized and like it is very difficult us to study.
We have heard that there is a drop of bomb in the village of Middays.
People are getting like being like a monster.
This is a very critical situation for Meitei community. We, all the students of to stop the war to stop the prevailing situations in Manipur, and we have heard that there is a drop of bomb in the village of Meiteis, and this is a very critical situation for Meitei community. And for the students of HRD Academy, from the students of HRD Academy, I would like to say that our minds have been distracted from this all situations and all. So we would like to stop this.
We want to stop all the wars that is happening between Meitei and Kuki tribes, and it is making us like traumatized and like it is very difficult us to study, and then people are getting like being like a monster, and we don't want that. So we are just making a human change on that. On behalf of that, all our HRD students are here to make human change.
Investing.
Back with us on Chartbusters, the recovery from the lows of the day continues. The Nifty has now slipped into the green, now is headed into the green. The Nifty Bank continues to surge, now almost 400 points off the lows of the day, and is now at the highest point of the day, now nearing levels of 5,800. The broader market still in the red, but better compared to where they were at the start of the show. But with that, it's a wrap on this edition of Chartbusters. From Mangalam, me and the team that put this show together, thank you so much for watching. Trading hard takes the action forward.
If we go back when I was started just about 12 years ago, the per capita consumption in India was as low as beauty and personal care was as low as $6. And today we are at about $15 per capita. And even this, for our income level, is below where we should be. Countries with similar income levels, to answer your question, have per capita consumption which is 3 to 4 times. So they are already at somewhere around $45 per capita. So India is below on beauty consumption habit, and that's where Nykaa always felt that education and social media is also helping a lot, but education at scale is the way to kind of bring more consumers into beauty consumption, and that is happening very rapidly.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro...
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonal Butra. And now, Sonal, it's looking like not such a bad morning, right? In the morning when we woke up, you know, we were staring at deep gashes across Wall Street on Friday. Asian markets were under pressure, in fact, nearing a near 3% cut on some of those indices. But in the morning, we had that big slam dunk at about 9:30. The Nifty went on to hit lows of about, I think about 24,750. Approximately that was the low, and since then there's been a recovery, first between 9:30 and 9:45, and again in the last 30 minutes markets have picked up, and now we're back towards that closer to 24,900. Asian markets still continue to remain under pressure. Hang Seng is down nearly about 2%, and sectorally it's the FMCG names which are fighting for the bulls, aiding that recovery. So names like Tata Consumer, Britannia, HUL, ITC up and about in the green. IT2 is managing a positive tick. And banks have pulled up. So pull up the Nifty Banking Index. About 20 minutes back, before the second leg of recovery, the Nifty Bank was pretty much flat, and now it's up 200 points. Hi.
Yes, hey Reema, and this is something which is pushing the Nifty higher, of course, and lending some support, but what's not doing well is the Nifty CPSE index. Just pull that index up for you. It is the top loser right now. It's down 1.8%, and a lot of these constituents which are not doing well. So talk about an ONGC, be it Coal India, PFC, REC, the other big PSU names, they are lower in trade. PFC, for instance, is down 5%. We have ONGC, which is declining by around 4%, and the other names will come up for you on the screen as well. Across the board, we are seeing big cuts when it comes to the PSC index, and that is something which is putting some pressure. But of course, as Reema pointed out, there has been a massive recovery from the lows. We'll have to see whether that sustains or not. But with that, let's move ahead and welcome the first management of the show. Dream Folk Services, the travel and lifestyle experiences company, announced foray into highway dining for travelers. The service is to be available at over 600 outlets along key highways across the country. Members of Dream Folks can now have specially designed meals at popular restaurants on more than 60 highway routes from major cities, including Delhi, Mumbai, Bengaluru, Hyderabad, Chennai and Kolkata. To discuss the impact of this and a lot more, we are joined by Liberta Peter Kalak, the chairperson and MD at Dream Folks. Liberta, good morning. Thank you so much for joining in. Well, it's an interesting expansion that the company has gone into. Can you explain to us what kind of investments will you be making here? What the impact of this expansion be on your balance sheet and P&L as well, of course?
Good morning. So as you know that, our business is an asset-light business, right? So in terms of investment, I would say that, the only investment is about the technology, what we actually have to, invest. So as such, there is no such, I would say, investment required for this. In terms of the benefit, I would say that, if you have actually seen the way we have added different set of services in the travel in terms terms of the airport services, then again in railways. So this is one of the, I would say, the entry into highways, because we feel that, the way the government has initiated, and if you actually see in terms of the infrastructure as well, the way it has changed, and also now with the AV stations coming in. So yes, we see a huge opportunity there. And we also have seen that, yes, there is a huge interest as well from our existing set of clients who would want to offer these benefits to their consumers.
Libata, hi. Morning. This is Rima here. Can you give us a breakup of your current revenues? How much comes from airports? How much from railways, visa application centers, highways? And what exactly is the kind of work that you will be doing for highways? And is there any kind of synergy?
So, Rima, yes, the majority of our revenue is from, the airport. And the major contributor, of course, is the lounge. But however, if I have to actually talk about the other services as well, I would say that, from 2022 to now, I mean, we have actually grown. So the contribution from the other services, which were hardly 2%, now the other services have started contributing nearly around 8%. So I would say that is the growth in the other services. In terms of railways, I would say that right now the numbers are pretty small in compared to what the airport lounges are. But I would say that, the way it is growing, it is actually growing month on month around more than 50% right now.
Okay. So just to get the numbers right, non-airport lounge business is about 92% of your revenues today, is 8% of your revenues, right?
8%.
Versus 2% about in 2022. And this business and this non-lounge airport business includes railways, highways, and visa application centers. Is that correct?
It majorly actually it's meet and assist services at the airport. Then you also have the spas, the airport transfer, the golf. So these are the services which actually contribute.
Okay. Can you give us a sense of what the take rates would be like in the highway dining center versus the current, the bigger business that you have? I just wanted to understand the margin profile of this new expansion that you'll be making.
So the take rate would be, I would say 50% to what the airport lounges are. Or maybe 50 to 60%, I would say, less than the airport lounge rates. In terms of the margins, I would say that, we will try and maintain a similar margin. But yes, the other services compared to the airport lounges would be at a higher margins.
Have you assessed the total addressable market for this new offering of yours catering to highways? What's the TAM?
Right now, actually, if you look at it, that we are, focusing more on the bank cards. So obviously, it's around 100 million credit cards which are under circulation. And in terms of the usage, if you actually look at even the airport services, what we are presently doing, it's around only, I would say, 4% is what the usage is. So I would say that, right now the focus is more on the credit and the debit card. So I would say that would be the focus market for us.
No, sorry, I was asking about this current, new venture that you've gotten into, catering to highways. What is the total addressable market or the opportunity size?
So I would say the opportunity size, which, I think the report also had come for 2019, it was around 1.7 billion. And it is growing at a CAGR of 20% year on year. And that is what is, I would say that the addressable market is.
Okay. Libata, I wanted to understand the guidance that you've given for FY25. Does it take into consideration this expansion that you've made, or you would like to revise it upwards? Or by when do you expect contribution to come in meaningfully from the highway dining?
So obviously highway was already a plan, and when we actually gave the projection, this was already considered because this was a plan what we wanted to do it. As we always mentioned that that all these services would start contributing in a larger scale in next 2 to 3 years. So I would say that, around 20 to 25% of, the other services contribution would be to the top line. So yeah, in terms of, absolute value, I mean, if I have to talk about the percentage, yes, it would be around 20 to 25% on the top line in next 2 to 3 years.
Okay, and your FY25 guidance, 20% top line growth, gross margins 11 to 13%, EBITDA margins 7 to 9%. Do you maintain that?
Yes, we'll maintain the same.
Okay. All right, Liberta, it was a pleasure speaking with you. Thank you so much for joining in today and letting us know everything about these new segment plans and the outlook going forward as well. It's time to slip into a break. When we come back, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned for that.
Chart Wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest?
Welcome back. Still tuned into Trading Hour. It's a 40-point uptick on the Nifty that we are looking at right now. Mid-caps continue to sulk, though the advance decline ratio, it has improved in favor of advances. Still around 1,400 stocks on the advancing side on the BSE, but the declines are at around 2,500 stocks. So watch out for that one. There has been some recovery from the lows on the Nifty, but we'll have to see whether that sustains or not. And of course, so we have that big event. The GST Council meet is underway, and we'll be getting updates soon. Our colleague Timsi Jaipuria has been getting us all the updates which are expected from there. There are a lot of items on the agenda as well, be it with respect to insurance premiums, be it with highway infra, and a lot more as well. So that is something that we will be tracking for you very, very closely. But for now, we will also be talking about a lot of stocks that will be in focus. IEX is one of them. It is in focus on the back of positive commentary from UBS. Vivek Iyer is here to tell us more. Vivek.
Well, that's right. So, very interesting note from UBS today morning as far as IEX is concerned. What they've done is they've gone ahead and maintained a buy stance, and they raised the target price quite significantly, almost a 30% hike from where they were earlier. So now the target price is 260 from the earlier 200 rupees a share. What is it that is actually going ahead and making their stance even more favorable or more positive than it was earlier? Number one, that they say that improved volumes as far as IEX, which the company has been delivering in the last few months, they believe that this upward momentum can sustain. Along with that, RTM as well as green products, as well as the long duration contracts, all of these newer products of IX have actually seen very, very sharp growth in the last few months. UBS believes that this can sustain, especially as far as the renewable energy certificates is concerned. Now, the other key overhang as far as IX is concerned has been the implementation of market coupling. While this particular overhang, according to UBS, has not completely ceased, they believe the likelihood of implementation is a lot lower now. Remember, the regulatory authority, that is CERC, has directed Grid India to develop a software and run simulations to go ahead and see the viability of market coupling. But so far, there has not been too much progress that has been made, indicating that market coupling, if it is implemented, is still quite some time ahead. So what they're saying is that the market right now is not fully priced in potential growth acceleration in trading volumes, largely driven by the green product segment.
Thank you very much for that. As promised, let's now talk commodities. Manisha is now joining in, and she's got her eye on gold. Manisha.
Thank you for that, Reema. Well, today is the day when you have most of the metal prices trading in the negative. You have aluminum at 2-month lows, iron ore at 1-year lows, and that's exactly what we have seen in the precious metal prices. Also, silver prices fell 3% on Friday, and if you look at the gold prices, we were down by more than 0.5% in the previous week as well. Importantly, on charts, it has been making lower lows, so $2,500 an ounce has broken on the lower side here. There's one major reason for that, and that is that the U.S. non-farm payroll data came in much weaker at 142,000 than what the street was anticipating, and that tells you that perhaps 25 basis points of a rate cut is what you will see on 18th of September. That is when the US Fed meeting is there. Also, the speed, the size of rate cuts going forward, the guidance, that is something that the markets will keep a keen eye on. In the Indian markets, in the meanwhile, this is festival season, and because of the high volatile prices, there is a latest report suggesting that the gold discount is at a 7-week highs of $13 an ounce. So if it is $2,500, Indians are perhaps buying it at 87 or 88 kind of level. So there is a deep discount happening here. Also, when you look at the Indian prices itself, on budget, when you saw that rate cut coming in, the gold prices fell all the way down to around 67,000, which is gained up to 72,000 right now. So a 5,000 rupees jump up in matter of a month or so is also led to some weakness in sense of buying. Of course, it's festival season going forward, and the markets will pick up in that sense. But at this point in time, all eyes on the US data and, of course, the rate hike.
Okay, yes, we'll be watching out for that. Manisha, thank you so much for joining in with all those details. In fact, Senco Gold told us that because of the duty cut, there's been a massive increase in gold demand as well. As Manisha said, prices have increased substantially in the last 1 month as well. Time for a short break now. Upasana Chatra, the chief India economist at Morgan Stanley, will join in next to discuss the FY25 outlook for India in terms of economy, inflation and GDP growth as well.
It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
To stop the war.
It is making us traumatized, and it is very difficult us to study.
We have heard that there is a drop of bomb in the village of Mahindra.
People are getting like being like a monster.
This is a very critical situation for Meitei community. We, all the students of to stop the war to stop the prevailing situations in Manipur, and we have heard that there is a drop of bomb in the village of Meiteis, and this is a very critical situation for Meitei community. And for the students of HRD Academy, from the students of HRD Academy, I would like to say that our minds have been distracted from this all situations and all. So we would like to stop this.
We want to stop all the wars that is happening between Meitei and Kuki tribes, and it is making us like traumatized, and like it is very difficult us to study, and then people are getting like being like a monster, and we don't want that. So we are just making a human chain on that. On behalf of that, all our HRD students are here to make human chain.
Welcome back. So recently, Morgan Stanley upgraded India's FY25 GDP forecast by 20 basis points to 7%. This is post the high-frequency data for the month of August, which has recorded positive growth in sequential terms after declining for the previous 3 consecutive months. So to talk more about this upgrade to India's economic outlook, we have with us the author of the report, Upasana Chachra, Chief India Economist at Morgan Stanley. Upasana, morning, and thank you for joining in. This is Rima here. So take us through the economic indicators that you've picked up recently, which makes you more bullish. And is this an upgrade only for FY25, or is there an upside risk to FY26 too?
Hi, good morning. So on GDP, what we've done is that we have upgraded our numbers for fiscal 25 by 20 basis points to 7%. This was on the basis of one being higher GDP growth numbers that we saw for the June quarter numbers. So quarter ending June has been a little better, especially if you look at the GVA or the supply side of the growth data points. Despite some headwinds from lower government spending due to the election cycle, as we know, and also the lingering impact of poor weather on agriculture growth. So despite that, GVA growth did surprise our numbers by about 30 basis points, coming in at 6.8, i.e. the supply side of the economy was pretty robust. And if we look at now, the X-forward indicators for growth trajectory, especially in the next 3 quarters, I think if we were to normalize government spending from just the June quarter numbers for what we know from the budget, we will see incrementally or sequentially the fiscal support to be better than the June quarter. And also now there is greater confidence or certainty that the agriculture growth would be better than last year, given that the monsoon season has been pretty decent, and crop sowing activity is also picking up. So in that context, we do see some pickup in these, driven by these 2 segments, and also still sustaining the growth momentum across other drivers, and therefore the upgrade to fiscal 25 numbers. So to your question, yes, this is an upgrade to fiscal 25 right now from 6.8 to 7. For the next 3 quarters, if I have to see, then the upgrade is a little bit more at about 30 basis points versus our earlier trajectory. Currently, we retain fiscal 26 at about 6.5%.
Okay. Upasana, morning. In that case, in the consumption basket itself, which are the major contributors? We've been talking about rural recovering, but do you think it will outpace the urban consumption, or will it remain at par?
So yes, rural has been definitely a positive and the support factor for consumption growth. And if we look at the overall consumption numbers as well, private consumption surprised positively, I would say, in the June quarter, coming in at 7.4%, a 7-quarter high. And if you look at the previous few quarters, it was pretty dismal at about 4% levels. Rural demand, I think, from the high frequency data, if you were to see, has been showing signs of recovery from, say, the beginning of this this year or the March quarter onwards. High frequency demand indicators like two-wheeler sales or FMCG volume growth in rural areas versus urban areas has been picking up since the March quarter. The trend has sustained in June as well. And going forward, I think, especially for fiscal 25, farm incomes should be supported, as we discussed. Weather has been decent and better versus last year. Crop sowing is going to be higher versus last year, and therefore farm incomes should be supported this year versus last year. There's also support from inflation moderating on a YOY basis, like fiscal 25 will likely be around 4.5 in our view versus close to 5.5 last year, and therefore purchasing power does get supported from that trend as well. And I think therefore rural demand would probably continue to outpace urban for a little bit longer, just because these tailwinds are there, and therefore fiscal 25, I think you may continue to see this play out in terms of rural sort of catching up due to the sluggish growth that we've seen in the last 2 years.
Upasana, what explains the drop-off in India's growth rate next year versus this year? Next year, 6.5%, and this year it's 7%, according to your estimate. So why the decline?
So I would say that I wouldn't really characterize this as a decline or a major slowdown. I would say that, India's growth on a more medium-term basis would probably be somewhere between 6.5 to 7%. And these are more sustainable levels of growth. So there will be some amount of base effect that will play out in the next year on the agri growth numbers. It could also play out a bit on like the rural demand numbers, just the base effect. And therefore, I think that shouldn't really be seen as a major slowdown, but just as coming to a more sustainable level. Now, obviously, there are various growth drivers, and external demand remains a key one where there is still some uncertainty. So how that plays out will finally influence those fiscal 26 numbers as well. But as of now, I would say that think about it more as a medium-term growth handle where you will see growth more trudging in the 6.5 to 7, which is pretty robust levels.
Upasana, now let's talk about the inflation number, because we are getting into the festive season as well. We've been talking about how food inflation is a big part, 45.86% of the overall CPI basket. Considering that we are entering the festive season, what kind of inflation targets do we see? Will we see food prices increasing further because of the kind of environment would be in? And what is your FY25 target here?
So for fiscal 25, our CPI inflation number is at 4.5% YOY on an average basis. For the second half, we are going to be close to that level itself at about 4.5, because there's been a lot of base effect, especially in these recent readings, and we'll probably be seeing, as we saw the July print coming in at 3.5, we'll probably be seeing August also similar at 3.5, but that's mostly driven by base effect. So as the base effect neutralizes, you'll probably settle at around a 4.5 level. Now, if you have to think about the drivers and especially food, as you asked, food inflation has been a problem, especially trailing 12 months. We've seen food inflation spike due to the poor weather impacting, the longer cropping cycle products like cereals and pulses, as well as some of the shorter cropping cycles like vegetables due to demand-supply mismatch or unfavorable, bouts of weather. So that has been an issue. But going forward, given that sowing activity is picking up, rice sowing is up, pulses sowing is up quite meaningfully, you will see better crop output, which will start kicking in from the September, October or the harvest season. And therefore, this cycle of the agriculture season, which starts from this harvest cycle and goes up to the end of the winter cropping cycle as well, I think that's where we will see more improvement in food inflation outlook. So I think the festival season, I know, is generally characterized by some bouts of pickup in prices, especially vegetable prices. I think that seasonal trend can continue on the shorter cropping cycle products like vegetables, but more from a 6 to 12 months perspective, I think outlook on food inflation is actually better than worse or improving versus last year.
Quick answer here, Upasana. What's your August CPI inflation print that will be out later this week? Your own expectations, and when should we expect the first rate cut from the RBI?
So August CPI around 3.5, flattish versus July. The base effect is still playing out somewhat, and then you also have sequentially better or trend in the food price basket. So no major change in the August CPI in our view. Going beyond August, we see numbers reverting into the 4.5 range. In terms of first rate cut, so we don't have a rate cut anytime soon in our forecast horizon from the RBI, driven by the fact that growth is pretty robust at 7%. RBI's numbers are higher than ours at 7.2. And also inflation remains above the 4% mark at 4.5. So I think with this construct of where we are seeing growth and actually the drivers of growth remaining pretty robust and indicating a more broad-based growth recovery, I think the focus can sustain on ensuring that inflation aligns to the 4% mark, and therefore, in our view, probably we're not seeing rate cuts that quickly. If we were to go wrong, I think either growth is weaker, probably driven more by the global slowdown, global growth surprising on the downside, or inflation coming more closer to the 4% handle.
All right. Okay, Upasana, thank you so much for joining in today. It was a pleasure speaking with you about a whole host of things, everything macro, of course. We'll speak to you soon again. But with that, we'll slip into a break. When we come back, we'll discuss market technicals with Soni Patnaik of JM Financial Services and also discuss the top trading bets. Stay tuned.
khênh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc xe máy của bọn cô là trong nhà khi đang ngập nước mà nước bây giờ là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
To stop the war.
It is making us like traumatized and like it is very difficult us to study.
We have heard that there is a drop of bomb in the village of Maitais.
People are getting like being like a monster.
This is a very critical situation for Maitai community. We, all the students of it, to stop the war to stop the prevailing situations in Manipur, and we have heard that there is a drop of bomb in the village of Maitais. And this is a very critical situation for Meitei community. And for the students of HRD Academy, from the students of HRD Academy, I would like to say that our
Welcome back. You're still tuned into Trading Hour on CNBC TV18. It's a good time to get a technical check on the markets. It's been volatile. Yes, of course, it has recovered from the lows. Let's get in Soni Patnaik from JM Financial Services for just that. Soni, good morning. Thank you so much for joining in. Well, what's the market's mood? Some recovery. We've been able to sustain that so far. But what is the next important level to watch out for?
Good morning, Sonal and Rima. Thank you for having me on your show. So I think Nifty, we can see that 24,800 is trying to defend itself in today's trade. And, the more it can sustain, there can be a trading range between 24,800 to 25,000 mark. So we can see a lot of aggressive call writers position themselves at 25,000. From those levels, we can see the highest strike price is still 25,500 as well. So I think that level is going to play very important. Until and unless there is not a weekly close above the 25,000 mark, you can see that a lot of selling pressure may continue as soon as Nifty will approach the 25,000 mark. So I think the level to watch out for right now is 24,800 to 25,000. There's a significant shift in put writers from the 25,000 base to 24,500 on weekly basis. So any break below 24,800 will open gates for Nifty that it can test towards 24,600 to 24,500 odd levels. And that's the level to watch out for. 24,800 is quite crucial. And similarly, if we talk about Bank Nifty, 51,000 mark is quite aggressive when it comes to the call writers. So 51,000 is a resistance for Bank Nifty. Until and unless it does not cross, there can be a trading range towards 50,000 to 50,800 at max. So I think Bank Nifty is also looking quite weak. It has given a significant breakdown on weekly basis. Both the indices, any rise towards their resistance zones can act as a supply zone from those levels.
Okay. Hi. Morning. So what would your stock calls be for today?
So Rima, I think it's best to stick to the stock strategies where we can see the stocks are continuing to exuberate a lot of strength and above its breakout. The first breakout that we can see is in JK Cement. It is continuing to hold above a 4,600 mark. Very strong it is. In futures, one can buy JK Cement around 46.60, 46.70, keeping a stop loss of 45.70. And a positional target of 4,800 can be seen for JK Cement. The second stock pick comes in UBL, United Breweries, which has seen a bullish engulfing candle pattern today on daily charts. It has held on to a very strong support of 2030. It has bounced from those levels. So UBL, one can buy it on very small declines till 2050, keeping a stop loss of 2030 and a target of 2085 to 2100 can be seen.
Okay, all right. Soni, thank you so much for joining in today. So those are some technical bets coming in from JM Financial Services. Let's take a short break. When we come back, we'll talk about market fundamentals now with Anirudh Sarkar of Quest Investment Advisors. Some interesting stocks there. Stay tuned for that.
I've been distracted from this all situations and all. So we would like to stop this.
We want to stop all the wars that is happening between Meitei and Kuki tribes, and it is making us like traumatized, and like it is very difficult us to study, and then people are getting like being like a monster, and we don't want that. So we are just making a human trend on that. On behalf of that, all our HRD students are here to make human change.
if we go back when I was started just about 12 years ago, the per capita consumption in India was as low as beauty and personal care was as low as $6. And today we are at about $15 per capita. And even this, for our income level, is below where we should be. Countries with similar income levels, to answer your question, have per capita consumption which is 3 to 4 times, so they are already at somewhere around $45 per capita. So India is below on beauty consumption habit, and that's where Nykaa always felt that education and social media is also helping a lot, but education at scale is the way to kind of bring more consumers into beauty consumption. And that is happening very rapidly.
Welcome back. Ola Electric is under pressure. Its 1-month lock-in has ended today, so there is more supply in the market. Hormus now joins in with the details. Hormus.
It's not been a single day since its listing on the 9th of August that Ola Electric has not been in the news, and today is exactly a month since or you can say the most awaited listing of the year finally happened. That was Ola Electric, and the 1-month lock-in period ending today. 18 crore shares become eligible for trade. Needs to be clarified here that they'll not be sold immediately. They become eligible to trade in the market. That amounts to around 4% of the company's outstanding equity. Now, Ola Electric as an IPO has also seen its ups and downs. It listed exactly at its IPO price of 76, but ended the listing day 20% higher, and then had a series of upper circuits. Within 6 days of listing, the stock doubled from its IPO price, made a new high of around 157, and since then has been in a corrective mode, and now almost down around 35% from the highs of around 157 that it had made on the 20th of August. Now, since its listing, there have been many announcements made by the company. It launched its new bike, the electric bike, the Roadster, on the 15th of August. It also reported its first quarter results, where its net loss also widened compared to the same period last year. And it also reported a loss in market share to players like Bajaj, Hero and TVS. So that has kept the stock in news. Bhavish Agarwal was with us last week. He told us that this market share concerns will be addressed as the company increases its penetration and distribution. On the financial side, they said they are very close to the break even on the EBITDA level, is what Bhavish Agarwal told us, and the fundamentals of the business remain strong, is what he said. Now, HSBC, within a day or two of its listing, had come out with a note on Ola Electric with a buy rating, a price target of 140. It crossed that very soon, but now it is well below that price target of HSBC. It said that despite the concerns that the brokerage has over the EV penetrations and all the other headwinds, Ola Electric is still worth investing, but slower penetration of EVs and the issues with regards to its battery plant remain the key downside risks. For now, the stock remains under pressure, heading towards the mark of 100 rupees, almost down 35% from its all-time high.
Thank you very much for that. Anirudh Sarkar from Quest Investment Advisors is now with us on the show. Anirudh, morning. Thank you for joining in. I know Zomato is one of your top holdings, but did you analyze Ola Electric? As Hormus was pointing out, it's fallen 35% from its recent peak.
Yeah, hi, good morning. So I think that is one company, when the company got listed, we had a lot of discussions around the valuations, and I think that continues to remain a big concern, that, what is the right valuation for companies in that space, because I'm also invested into the two-wheeler companies, which are doing exceptionally well when I talk about both on the IC engines and on the EV. When I look at valuation of that company compared to Ola Electric, it's very difficult for me to make a sense that, what is the right valuation for this company. So we have avoided it from the day of IPO, and even now after the 1-month lock-in has opened, we are avoiding it as of now.
Okay. Talking about valuations, you're avoiding Ola Electric on the back of that, but you do have some interesting names in your portfolio, be it Zomato, which has run up so much in the last couple of months, be it Trent as well. That's a one-way move. Are valuations justified at current levels for these two names?
Yeah, absolutely. I think, one thing which we need to keep an eye on is the earnings supporting the valuations. That is most important. Like if I look at, what has happened with a company like, say, Tata Trent, it's very difficult for anyone to give me a company which is growing at 55 to 65% Y on Y with regard to its, top line, bottom line. And the amount of expansion which the company has been doing has been exceptionally well. I would say from our initial entry point, though the stock has become almost 5 times, but I would say we continue to have it among our top 3 holding because the management's execution quality has been impeccable with regard to all the expansions which they have done. Also, the new growth area which the management is talking about, which is the Star Bazaar, that is something which we are also very, very bullish on. So we'll have to see how they are able to execute all the different business verticals. Coming to Zomato, I would say, yeah. So coming to Zomato, I would say yes. If I look at the past numbers, it looks very expensive. But if I look at where the numbers can be in FY 26, 27, I would say it looks very attractive because considering the fact that, Blinkit, which is the big growth driver for Zomato, that will give a lot of cash flows. And you'll see the numbers looking very attractive on a FY 26, 27 numbers.
Any other stocks that you guys are pushing now, where valuations is still okay, relatively attractive?
So without getting into names, I would say that some sectors where I feel a good amount of valuation comfort is there. One is the healthcare space. So I think pharma is one space where from not having any pharma stock 6-8 months back, we have almost 6-7% exposure to that space. Along with that, we are looking at increasing exposure into the pharma and healthcare because I think that gives us a good amount of opportunity with what is happening in the US with the most recent, the Biosecure Act. I think that opens up a lot of opportunity for Indian healthcare companies because if they want to cut down on their exposure into the Chinese healthcare companies, I think biggest beneficiary will be the Indian companies. So I think pharma is one space where valuation comfort is there. IT is again another space where I would say good valuation comfort is there. The very fact that with the rate cuts in the US likely to happen in the next couple of months, I think in the next policy meet itself, we could see a rate cut. That is again going to be a very good trigger for the discretionary IT budgets, which will be again good for the Indian IT companies.
Okay. Anirudh, the other interesting name in your PMS is TVS Holdings. Out of the entire holding company space, you have this one stock here. Can you explain the rationale first up and what is the trigger going forward for all these holding companies? Because we do see some of the notifications that keep coming in from the regulator here.
Yeah, absolutely. I think, many of these holding companies, they have excellent deep value built into it. Now, if I talk about TVS Holding, which is my, among my top 5, top 10 holdings, I would say if I look at the core underlying, so now this TVS Holding would have the 3 verticals. One is autos, which is basically the holding company for TVS Motors. Now, TVS Holding, it owns around 50% of TVS Motors. And where the stock trades today, though the stock has given us almost like 60-70% upside from our initial entry point, but I think where it stands today, it still quotes at a 55% holdco, 55 to 60% holdco discount to its holding company, to its holding in TVS Motors. The other 2 parts are, it has a real estate business called Emerald Haven Realty, which is doing exceptionally well. It has already developed around 2 million square feet. Another 6 million square feet is under development. And the third part is the NBFC business. This NBFC, which is called the TVS Credit, that is kind of a very high growth business area. TVS Motors owns around 80% into the TVS Credit. And most recently, TVS Holding, they acquired a NCR-based NBFC. The combined AUM of the NBFC would be around 30,000 crore plus. I believe each of these verticals, auto, the real estate and NBFC, they are all doing exceptionally well and it looks like a very deep value to me, even at these levels.
SH Kelkar is a stock we don't often talk about, but it's a company which makes fragrances, particular for the food industry. Now, even the stock return has been subpar compared to the kind of market returns many of the mid-caps have given. I think I was looking at the 5-year CAGR return. It's just about 14%. So it would have been an underperformer compared to, many of the mid-caps. So why is it that you find it attractive?
So we entered into SH Kelkar around 6-8 months back because we had the same concerns in the past that, so basically the company was seeing an erosion in their margins because if I look at the 2 business verticals, the 2 parts of its business, the bigger part is the fragrance business, That makes up almost like 80-85% of the business. And the food business, which is the food flavor business, that is the smaller part. Now, within the fragrance, I think fragrance typically is not used if you're not going to go out, and that was one part which got impacted during the COVID, wherein that if people are being at home, you typically won't be using the fragrance. Now, post COVID, I would say in the last 18 months, a lot of growth has picked up. A company had done a couple of acquisitions in the past overseas. And I think because of that, they are seeing now a good traction in the overseas market. They got a good, decent, large order from a global MNC FMCG company, and that opens the gateways for them to tap into other FMCG companies internationally. Margins have bottomed out, margins are improving. So that was one kind of the inflection point which gave us an entry that the margins have improved, top line growth is coming in. The leverage and everything which was there in the past, that is declining, and all the acquisitions are going to pay off. It's the largest aromatic chemicals in the country, and I think it's again kind of the niche play in the chemical space.
Right, Anirudh, it was a great chat. Thank you so much for throwing light on different sectors and different stocks as well. We'll speak to you very soon again. That's all about market fundamentals and valuations. But it's time for another break. When we come back, we'll get you more on the markets on the other side, so stay tuned for that. Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe,
Welcome back. Well, the general insurance business data for the month of August is out. Yash is joining in with all those details. Yash, how did the numbers look?
Well, the industry is slowed down a bit from the performance that it was exhibiting. We saw that in the month of July and again August. The numbers for the industry looks like, the acceleration has been reducing. So the industry has grown its premium by about 4% in the month of August. For the first 5 months of FY25, the premium growth stands at about 11%. Standalone health insurance industry, that has grown at about 25% in the month of August. Up to the first 5 months, the growth stands at 24%. If we speak about individual players for ICICI Lombard, the August premium is up 10%, 5 months premium is up 17%, market share gain of 59 basis points. So in a slowing down industry also, ICICI Lombard has continued to outperform the industry. New India Assurance, after some bit of recovery which we saw in the month of last month, growth has again contracted. So August premium is down about 13%. First 5 months, the premium growth is just about 2%, and there's a market share loss of about 108 basis points in the first 5 months of FY25 versus the same time last year. Go Digit General Insurance August premium has slowed down considerably, a growth of just 3%. For the first 5 months of FY25, the growth stands at 13%, market share gain of about 6 basis points. Finally, Star Health Insurance, the August premium is up 15%. Up to 5 months, the premium growth stands at 17%. Market share gain, if it has to be compared with all general insurance companies, then it's up 27 basis points in the first 5 months. But if one looks at only the standalone health insurance companies, then it's down about 287 basis points for Star Health Insurance.
Okay, all right, Yash, thank you so much for bringing us up to speed with the insurance data for the month gone by. With that, it's a wrap on Trading Hour, but stay tuned. All the market action coming up on Halftime Report that comes up next. Stay tuned.
A success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
khinh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc xe máy của bọn cô là trong nhà kia đang ngập nước mà nước bây giờ là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
Frontline stocks steady after an early dip, even though the broader market sees some weakness after a dip in US equities on Friday. FMCG and financials eke out gains, while energy and metals are the big drags today.
The 6,560 crore rupee public offer of Bajaj Housing Finance opens today. The company is looking to raise around 3,560 crores via fresh issue of shares, while the offer for sale is 3,000 crores. The lender's anchor book has drawn a very strong response from leading foreign and domestic institutional investors.
Hindustan Unilever has constituted an independent committee to chart the future of its ice cream business after parent Unilever's decision to spin off ice cream vertical by 2025. A sweet goodbye may be on the cards.
There's lots on the plate of the GST Council today. Prominent on the list is a review of GST levy on life and health insurance, a proposal to impose GST on payment gateways, the need for GST relief to give Realty a fillip, and taking stock of compensation cess. Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Manglam Malu. Well, it is a day where we're just about consolidating in terms of the frontline indices as we speak. So we have the Nifty, which is just about higher by around 25 odd points. The midcap index, let's see whether there's any kind of recovery from the lows. So down around 0.6% at this point in time for the midcap index. And we have the advanced decline ratio, which is trending on the declining side. But specific stocks continue to attract attention. So we just about spoke about HUL, about the fact that they could be looking at their ice cream business in terms of, any kind of restructuring. So that stock is up around 1.3%. A couple of the banks are doing well because the bank Nifty is outperforming. So it's up around 0.5%. ICICI Bank, for example, is up around 1.3% at this point in time. So overall, that's what's taking place in terms of the markets. The broader markets could see more in terms of gains as of now. So that's the one which is a bit sluggish. Hi, Manglam.
Hi, Ekta. There is consolidation. The mid-cap index underperforming. There is a firm gap between the number of stocks which are advancing versus the stocks that are declining. So we already have, nearly 2 stocks which are on the red side as against one which is on the green side if you look at the NSE. What's interesting, however, is that we're consolidating, but we've navigated through a lot all of last week, and today's dip was bought into. So that's something that the street would like. A lot on the street were fearing that maybe, after the big dip that we saw on the NASDAQ on Friday, there could be an impact on our own IT stocks as well. That's actually not the case to be. In fact, as we speak, a lot of these IT stocks are actually spiking. So we have TCS, which has moved towards the higher end of today's trading range. Infosys sitting the gain of almost 0.89% odd as well. So those stocks are doing well. And secondly, the Nifty Bank, which has been an underperformer over the last 2 weeks, is pulling its weight behind and supporting the Nifty. Now that we've averted any sort of worry on the downside, the question is, can we go ahead and conquer the upside? Because the levels that we are at currently do have a fair amount of resistance. A little over 50,850 thereabouts will be the 50-day moving average of the Nifty Bank. And for the Nifty as well, 25,000 remains a psychological, resistance. So now that we've managed to, navigate through the accident at the lower level, do we go ahead and cross the upper level is the big question.
Yes, absolutely. And not to mention that, we're quite stable as compared to at least the global cues. And we have been showing that over and over again, despite, weak data coming in from the US and stoking fears of maybe a slowdown. India has been largely resilient in the face of all of that. But nonetheless, let's talk about one particular piece of news which was reported over the weekend, or on Sunday to be precise. India has reported its first suspected case of monkeypox after a young male returned from a country currently experiencing mpox transmission. The suspected individual has been isolated in a designated hospital and is in stable condition as of now.
The Health Ministry has confirmed that samples from the individual is being tested for Mpox and is being treated and contained in line with established protocols. To talk more about what the impact could be on labs in case they need to test, we have with us Dr. Nilesh Shah, who's the president of Metropolis Healthcare, joining in for a quick chat. Dr. Shah, hi, welcome to the show. If you could just start by telling us that are private labs ready to test for monkeypox, and have you all tested as yet, considering that it's been around for the past 2 to 3 odd years, but we're just talking about a more virulent form of it?
So the labs, not all labs, but few labs for sure, they are ready for it. So there are two techniques for doing tests for monkeypox. One is serological test and another is a molecular test. And molecular is the one which is the need of the hour and it's most reliable. And for molecular test, the kits are out and kit is available. We have already validated and kept it. Not on live sample, because live sample as of now, as per a rule of the government, as of now today, private labs are not permitted to do the test. But on back-end side, the technology, the knowledge part, the technical training, validations, everything is complete and we are ready. We are awaiting government's go ahead to run the test.
Okay.
Right. And for the citizens, just wanted to know what price are these tests priced at, and typically, are you getting any inquiries for monkeypox tests?
Yes, there are few inquiries on monkeypox tests, not in large number, but few are for sure there. As far as price is concerned, it is yet to be arrived because there is no commercial decision as of now from even vendors at what price they will sell and all that. The price overall is a game of volumes also. We have seen during COVID time that as volume goes up, price goes down. It started at 4,500 and then it landed down to few hundreds. Here also similar. If at all the disease affects our country, and if testing starts and if volume goes up, the price will surely go down. I'm not expecting too exorbitant price anyway. Okay. Because the setup and everything is ready, and during COVID time, a lot of labs have adopted this setup. So it will not be scenario like what happened in COVID, that there are very few labs who had got trained manpower and the technology available. Here now, a good number of labs have adopted molecular tests, so it should not be that bad.
Okay. So when you say a good number of labs, a lot of labs also shut down post-COVID-19 because there were no samples left. So in terms of molecular labs, how many do you think are available right now on the private side?
See, this will be my rough guess. I remember during COVID time, almost 4,000 odd labs, leaving government labs aside, private, I'm saying they started doing COVID tests, maybe more than 4,000. With high capacity, I'm talking about small capacity, could be a little bit more. But yes, as you rightly said, post-COVID, these labs could not sustain the setup because it requires that level of volumes and that variety of manpower sustainability and so on. And many of them shut down. But still, I believe that at least 400-500 labs still are doing molecular tests, and which is not bad to begin with.
Right. Okay. Dr. Shah, we shouldn't scare people around here, etc. But because it has happened in such quick succession to another pandemic that happens, the human mind wonders whether, is this one similar to that one? If you could give us a sense of what your, understanding of monkeypox so far is and the amount to which it can spread.
I think I would say one should not be scared. Being cautious is very important question on health, but getting paranoid and getting cautious and drawing parallel with COVID is not appropriate, I feel. It is not that bad.
Okay. All right. Dr. Shah, just wanted to ask you about the protocol as well. Because during COVID-19, what we did see is that whenever the private labs do start testing, if in case that is also the requirement, how similar or different will it be as compared to COVID-19 testing? Because the technicians had to wear PPP kits, they had to be completely masked up. There was a lot of, you had to be extremely careful in terms of the sample. Mpox is quite virulent as well. What are the different types of protocols that one will probably need to undertake as a private lab when there is any kind of collection of samples, if there is, from the private side?
So, see, the labs will be more engaged in sample collection, and there is only contact point with patient, and we must know first what are the 3 areas from where the infection can occur. So one is direct contact. Second is respiratory droplets, which may come out from the patient. So don't go too close to the patient without mask. And third is contaminated material from the patient. These are the 3 things to be protected. Now, hence, the guideline today are to wear PPE kit. But you know, in COVID time also, it started with full-fledged PPE kit, and also it's not that severe, but PPE right now is recommended while doing the collection of sample. Sample collection will be lesion where the patient is having blisters and so on. The lesion skin scraping, we have to take it, and this has to be brought in viral transport media in a septic condition in a properly designed boxes and bring it in a cold chain to main lab. This is what is going to be a protocol. So care definitely has to be taken. There is no escape over there. However, in COVID time, we had a lot of confusion about how the disease is getting transmitted. In monkeypox, that confusion is not there. These are the only 3 places. These are the 3 areas where one has to take care and manage the sample. And I'm sure the labs are well prepared, because we are used to doing it for many other things as well.
Okay, all right, Dr. Shah. Well, I hope we don't have to have these conversations either. But thank you very much for joining in and speaking with us and talking to us about the possibility of private labs testing for monkeypox, if in case that does come about. We'll take a short break, but up next we'll be talking to Varun Gupta, who's the director of Ashiana Housing, to discuss their business. Stay tuned.
To stop the war.
It is making us like traumatized, and like it is very difficult us to study.
We have heard that there is a drop of bomb in the village of Mahindra.
People are getting like being like a monster.
This is a very critical situation for Mahindra community. We, all the students of to stop the war to stop the prevailing situations in Manipur, and we have heard that there is a drop of bomb in the village of Mahindra, and this is a very critical situation for Mahindra community. And for the students of HRD Academy, from the students of HRD Academy, I would like to say that our minds have been distracted from this all situations and all. So we would like to stop this.
We want to stop all the wars that is happening between Meitei and Kuki tribes, and it is making us like traumatized, and like it is very difficult us to study, and then people are getting like being like a monster, and we don't want that. So we are just making a human chain on that. On behalf of that, all our HRD students are here to make human chain.
go back when, like I was started just.
Welcome back. Well, for the markets, there's an accelerated loss which is taking place for the mid-cap index, so down around 440 odd points. Good time then to get in a good handle on what's happening in the F&O space. Manglam's joining in for more. Manglam.
Well, the headline from the F&O space is there has been recovery from lows. The question is, where do we go from current levels? At what levels will the congestion come in? And that's exactly what has happened. The Nifty, while marginally in the red, has seen a big recovery from the lows. The Nifty Bank is actually outperforming. The mid-cap index has seen an accelerated decline down almost 450 odd points. If you look at the Nifty right now, 24,838. What does it lie in about? It's the 20-day moving average where it's found support today. It's reconquered that. 24,822 is the mark where there is support for the Nifty. However, on the way up there could be congestion. The Nifty Bank, which is outperforming, is in this range of the 100-day moving average and the 20-day moving average. 100-day moving average was 50,241. The 20-day moving average, a little over 50,850, is where the Nifty Bank is facing some sort of congestion. So that's the range that the Nifty Bank is flying in as well. And looking at this and the movement of the market, the option writers, they're pretty active. For the Nifty, the fact that it's held on to that 24,800 mark has given put writers of 24,800 a fair amount of confidence to go ahead and write that, telling you 24,700 would be an important support to track in the market itself. The 24,900 put writers also pretty aggressive, and that gives you a belief that 24,700 to 24,750 would be the support zone for the frontline index. However, on the way up, there is still some sort of congestion around that 25,000 mark, psychological, and also a lot of calls written at the 24,900 mark itself. A lot of stocks in action today, and the one that I'm looking at is Vodafone Idea. A fair amount of long positions being unwound. Nearly 25% of the open interest has reduced on this counter. The other one that I'm looking at is Apollo Tyres as well. Hasn't fallen as much, but there is a fair amount of unwinding of positions, telling you that there could be some sort of short covering out there. So those are a bunch of stocks today from the F&O pack.
Okay, all right. Thanks very much for that, Manglam. So that's on the entire F&O setup. We'll take a short break. As promised, next we'll be talking to Varun Gupta of Ashiana Housing.
Years ago, the per capita consumption in India was as low as beauty and personal care, was as low as $6. And today we are at about $15 per capita. And even this, for our income level, is below where we should be. Countries with similar income levels, to answer your question, have per capita consumption which is 3 to 4 times. So they are already at somewhere around $45 per capita. So India is below on beauty consumption habit, and that's where Nykaa always felt that education and social media is also helping a lot, but education at scale is the way to kind of bring more consumers into beauty consumption, and that is happening very rapidly.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust, giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order, setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for
Welcome back. Real estate, that's been the buzzword over the last couple of months, a couple of years as well, where we've seen a bit of a cycle, and all these companies who are launching projects are managing to see a fair amount of these turning into sales as well. One of them is Ashiana Housing. They've gone ahead and booked 168 units out of the total 280 in the phase 4 of their project called Ashiana Amara, located in Gurugram, which is a sale value of close to around 403 crores. So to discuss this and more, we have Varun Gupta, who's joining in. Varun, thanks a lot for joining in. You've got EOIs into sales of close to around 403 crores. How quickly do you expect to sell the remaining units? 168 have been sold, 280 currently, and at what price? Current 168 have been sold at 404 crore. So how much higher could the next be?
So we expect the remaining units to be gradually increased prices as we go forward. So I don't know exactly what pricing they will have, but we'll keep increasing prices every few months or even faster if as in the way the sales progress. And the pricing actually in phase 4, the biggest thing was we got very good pricing. This was more close to 25% higher than phase 3, which was launched just at the end of the last financial year. So in let's say a span of 5 months, we were able to ramp up pricing that high and got really good demand against that. So I think in this financial year, I'm hoping to sell off everything of phase 4 and launch phase 5 as well.
Okay. The reason why I ask you that is because if you just do quick back of the envelope math, your current realization per unit of the 168 that you've sold at 404 crores comes to close to 2.4 crores. Assuming the next 112 are sold at a 25% premium, as you pointed out, as compared to phase 3, then this could yield anywhere between 300 to 350 crores, 336 crores to be precise. Is that a number that is far out of expectation, or that is a number which is gettable in this year itself?
Okay, so a 25% increase on these prices, I think, is out of expectations, because if you look at Amara phase 1 to phase 4, we have gone about 2.3x in pricing already. But that said, I think this we should look at about 300 crores of revenue coming in from the remaining 112 odd units, maybe a tad bit lower, but that's what my expectation.
So that's about a 10% increase.
Okay, all right. Varun, just wanted to get a sense in terms of your entire target. Your sales were around 2,000 crores. That's what you've guided to the market. Via an improvement in terms of mix of volumes and realizations. Are you on track, or based on what you're seeing, are you looking to probably even exceed it?
Yes, we are on track to achieve it or exceed it at this moment in time. The market is good, we are doing well, and right now things look very, very good.
So can you tell us what the pipeline is in terms of projects for you to probably achieve that 2,000 crores? What are we expecting in terms of incremental sales from you?
So, we are launching one project called Ashiana Swarang in Chennai, which is a senior living project. Outside of that, we have phase launches. As I said earlier, we expect to launch phase 5 in the last quarter of this financial year for Amara. We are launching the new phase of 144, a phase in Malhar. We expect to launch a phase in Amod. So we have multiple projects where new phases will get launched, and a new project in Swarang in Chennai for sophisticated senior living.
All right. What about the land that you have on your books right now? As per the Q1 FY25 presentation that you had close to around 66.5 acres of land available. So how many land parcels are you eyeing in the next couple of years? And what's your current net saleable value that you are sitting on?
So current net saleable value of unsold units is around about 8,000 odd crores put together. Unsold stock in launch projects to future phases, land bank, everything, excluding one land, which is Milakpur, which is under litigation. So we don't have a line of sight on that particular parcel, but I exclude that. We have about 8,000 crores of saleable stock. And as of June, we had sold about another 3,000 crores for which revenue has not been recognized. So I think overall potential revenue recognition over the next, let's say, till about 31st March 30 is about 11,000 odd crores, putting these two together. We are also working on multiple land parcels. I hope to close probably 4 transactions this financial year. We closed one in Jamshedpur. We are actively engaged in 4 more transactions. I hope that maybe probably 3 of those 4 will definitely should conclude in this financial year.
So these 3 out of 4, what would your outflow be in terms of acquisition, and where is it? Because you were looking to get into Jamshedpur, you mentioned Jaipur and other smaller cities.
So we concluded a Jamshedpur transaction and which we disclosed to the stock exchanges. We have ongoing talks in Panvel, in Bangalore, and in Jaipur. I hope to conclude all of those. All of those will be funded through internal accruals itself. We might, we will put them on the platform with IFC, where we have a platform with them to provide capital for project acquisition. So either, so if it's a JV, it will be completely on our own, and others will go on the IFC platform. The overall outflow would, I don't think for us, we'll need to raise any other external capital outside of IFC right now.
Okay.
All right, take that point. Thank you so much for joining in and giving us the outlook on your business. Wish to connect with you once you sell the remainder of this project as well, and at a promised near 10% premium to the first 168 units at which you sold in this business. Take a short break. On the other side, an interesting discussion lined up for you. It's a conversation with Prem Pavoor, who's the senior partner at 8 Road Ventures, to talk all about their $250 million healthcare fund and, more importantly, growth opportunities in India.
For century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back. Well, flat for the markets. We have the midcap index, which is under pressure, so down around 0.8%. The advance decline ratio has a lot to long for today. So advances are around 1,400 and declines are around 2,600 plus. But let's talk about, let's shift our focus and talk about a global venture capital firm, Eight Roads Ventures, which has a dedicated 250 million healthcare and life sciences fund for India. They recently held their third edition of their annual healthcare conference, Scale Up Health, with the theme of disruptive trends for 2025 and beyond. To talk in detail on the growth opportunities in India and their investment plans, we have with us Prem Pavur, who is a senior partner, head of India and healthcare investments at Eight Road Ventures, joining in. Prem, hi, welcome to the show. Well, you know, first, just wanted to get a sense in terms of the recent conference that you held, Scale Up Health. There were a couple of various topics which you all spoke on, CDMO, oncology, as well as, you know, weight loss drugs. From your perspective, from an India standpoint, India pharmaceutical standpoint, which is probably the biggest trend to watch out for, which is going to add profits to the table?
First, thank you for having me on the show. And it was nice to see such a well-attended conference. I think it's our third year of the conference, and the life sciences and healthcare community only seems to grow from strength to strength. I think of the three topics, the one that has the potential to be most needle moving in the near to medium term is perhaps the anti-obesity opportunity. Perhaps less from a profit perspective for the Indian pharmaceutical companies, but much more from a global perspective. I also believe that the trend will have spillover effects into some of the other aspects that India can support, like contract manufacturing and patient services and safety surveillance, clinical trials, etc. I think the second big opportunity is the CDMO opportunity, given the increasing geopolitical tensions and also the impending biosecure legislation with the US Senate, which can be quite game-changing for the Indian development and manufacturing sector.
So on the Biosecure Act itself, what kind of impact do you think it could have on the entire space and in India, for India in particular?
It's a good question. I would say that, you know, perhaps we'll not see any immediate term change, though as you poll well-established and high-quality biopharmaceutical companies in India, they are all seeing an increase in proposals from the big pharma companies as well as the small biotechs. I think most of the customers in the US and Europe from our conversations are adopting a wait and watch approach to see where this legislation plays out. But I think it is safe to say that, irrespective of the legislation and just given the geopolitical uncertainty, it is highly unlikely now as a customer in the US or Europe that you will put all of your eggs in one basket, that you will look to diversify your sources beyond China, and India is the obvious opportunity. So I do believe that you will see a lot of spillover into India. I think the question is whether the Indian contract development and manufacturing firms are ready with infrastructure and services to be able to provide and cater to this large demand.
That's exactly what I wanted to ask you, Prem. We've spoken a lot about the possible opportunities, but all of the companies are saying that they still currently have queries, and it's still not changed into, tangible business. That's one point. But do you think India is just far too behind when it comes to technology as compared to, the South Korean companies of the world, or even Europe and US, which is emerging as a hot opportunity when it comes to CDMO?
I think you made a very good point in that if you look at the large manufacturers, and let's take the example of the anti-obesity drugs, the large manufacturers, interestingly, are looking to insource manufacturing as opposed to outsource it. But there are plenty of other smaller biotechs who still don't want to invest in capacity, who are still looking for a high quality, reasonable cost destination. And the reality is that, whether it is South Korea or other parts of the world, they just will not be able to absorb all of the spillover from China. So you will see some positive ramifications from an Indian context. I think it's very hard for Indian companies to set up, as we call it, put steel in the ground overnight. I think it will take time. But where Indian companies can do well is to differentiate on their offerings. For example, we have a partner company called Enzene, which is a subsidiary of Alchem, and that offers a continuous biologics manufacturing platform, amongst the first globally to customers. So those types of offerings will help India leap up the curve in terms of taking share.
Prem, let's shift focus away from your conference now, because you have an interesting portfolio. While you don't invest directly into listed companies, you have some kind of investments indirectly in them. One of them, interestingly, is Bicara Therapeutics, which is basically an associate company of Biocon. And it's expected to go public soon in the US markets. Give us a sense in terms of what exactly does the company do? How much do you have invested? Are you exiting via the IPO? And what does it bring to the table?
Bicara is our second partnership with Kiran Mazumdar-Shaw, both on the innovation side. Our first one is a CAR-T therapy company called Immunil, which is offering a CAR-T therapy for Indians in India. Bicara was our second investment. It's an interesting example where a novel drug and the IP was moved from India to the US so that you could create a best-in-class team in the US and take advantage of the US-India corridor, India for some activities and the US for others. What's most compelling about the company is that it has in its pipeline a drug which has the potential to be a best-in-class drug for treating head and neck cancers. And so the company has filed an S1 to think about a listing on the NASDAQ. We invested largely about 12 months ago as the company was, still generating data. So it's actually good to see a world-class asset coming out of India. Some of the other details, unfortunately, Ekta, around the IPO are confidential, and given strict US laws, I'll probably sort of talk to you about what's public if it's okay.
Right, finally, before we let you go, what's interesting, I like a couple of things in your portfolio, and it all circles back to the point that you made first, which was about the opportunity that the weight loss drugs could have for the global pharmaceutical industry. While it may have, a solid reason when it comes to health, etc., you can't take away from the cosmetic aspect of this possibility. And that brings me to your investment in one Tootsie? And secondly, I'm sure there are a lot of these, beauty therapies that people are looking at when it comes to de-aging and looking a certain way as a business opportunity. Do you have any, investment plans out there? That's point number one. And secondly, on muscle rehabilitation, that too is a growing opportunity as people are, injuring themselves more while they work out a lot more.
So again, both excellent questions. I think in general, aesthetics, but with a clinical bent, has been a key area of focus for us. And Tootsie is a great example in that it's a market leader in providing aligners to the Indian population at a very effective price point. And it's able to do that because it's full stack. I think we are, as investors, very clear that quality is sacrosanct, and Tootsie has a platform where it starts right from 3D printing aligners to providing aligners to patients. So I think that's one example. The second example is a nutrition business that we are partners in with Unilever called Oziva, which provides a range of nutrition products, some with a beauty element, to customers. So those are the two that we have. We continue to look for interesting ones, finding a balance between an unmet need and also being able to provide the highest quality product. In terms of your second question, pain in general, I think, is a growing area globally as an unmet need. And I think everyone now is aware of physiotherapy and the need for it. We have an investment in India in a company called Healthcare at Home that sends physiotherapists home to patients. But we also play the US market opportunity through one of our India for global companies called Spry, which has a software platform for US physiotherapists and for their clinics, which is seeing significant traction in the US. So those are the two ways that we participate in that opportunity, but one that is here to stay and grow.
Okay, just before we let you go, Prem, you have less than 2% or just about 2% in API Holdings, which is basically PharmEasy. Tell us, what is the plan with that? Are you planning to exit entirely? Are you sticking on to your investment? And what is the cumulative amount that you've probably made or lost in that particular investment?
No, hopefully, we've only made money on PharmEasy. We were early investors in the platform, and it's one that we tracked the sector for 6 years before we made a bet, and we're very happy with the bet. We were early investors. We did de-risk the investment a bit in 2021, and we continue holding it for the long term. It's a company that has turned a corner very effectively and now focused on profitable growth with a very good team. It's a team that we've had a lot of conviction in over the years. So a very happy and significant from a dollar perspective position for us, Ekta.
An intuitive follow-up on that, because pharmaceutical went to e-commerce through PharmEasy, etc. Now everyone's moving to quick commerce. Are there any bets out there, a medical company or a pharmaceutical company dabbling with quick commerce, given the sort of rise that we've seen in Blinkit and Swiggy's e-commerce ventures?
Not yet. I think the quick commerce opportunity is an interesting one, both for acute drugs, maybe for chronic. But I would say that, today we haven't seen anything that is scaling at that level on the quick commerce side. Most of the neighborhood chemists and pharmacists also provide an element of quick commerce. But I think one to watch out for, I agree with you.
Okay, all right, Prem, we're going to let you go on that note. It's a pleasure. Thanks very much for joining in and speaking with us in terms of your whole list of investments as well as the ideas and themes that you're proposing within the entire Indian healthcare space. We'll take a short break. On the other side, Manisha Gupta will join in. She has with her Peter McGuire.
kịp mà khênh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc xe máy của bọn cô là trong nhà kia đang ngập nước mà nước bây giờ nó là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
To stop the war.
It is making us like traumatized and like it is very difficult us to study.
We have heard that there is a drop of bomb in the village of Mahindra.
People are getting like being like a monster.
This is a very critical situation for Mahindra community. We, all the students of to stop the war to stop the prevailing situations in Manipur, and we have heard that there is a drop of bomb in the village of Mahindra, and this is a very critical situation for Mahindra community, and for the students of HRD Academy, from the students of HRD Academy, I would like to say that our minds have been distracted from this all situations and all. So we would like to stop this.
We want to stop all the wars that is happening between Meitei and Kuki tribes, and it is.
Welcome back. Let's take note of all the things commodities, and Manisha joins in with that. Manisha.
Thank you so much for that, Mangalam. And joining us now is Peter McQuire to talk all things commodities, rather all things metal. And we have seen further decline come in for this sector. Peter, thank you so much for joining us. And I want to start with a copper, where we've seen 2 weeks of declines, and an aluminum, which is trading at a 2-month lows, and an iron ore, which is trading at a 1-year lows right now. Well, we have seen most of the economic data come in on the weaker side, especially China, and that really seems to be weighing on, would you say?
Absolutely. Lovely to see you, Manisha. And a couple of things I just want to add to that. And the CSI 300 nearly at a 5-year low. So it's structural weakness across the Chinese equity markets. And that's really showing you internal what the situation is there, I'd say. And then naturally, you've got weak demand globally for finished products because people are tapped out with credit cards. And I think how China plays this is going to be quite fascinating. So, yeah, whilst I would have thought that maybe copper may have bounced a little bit higher, it's back through 9,000, and it seems to be one-way trade at the moment, Manisha, bearish.
Oh, yes. So how much bearish do you think it can go from here? And do you see any buying opportunities on those dips?
Oh, there'll be buying opportunities, but we've got a lot of big global themes that are going to play out over the next 2 weeks and really up till the end of the month. First off, ECB decision as far as Wednesday. What you're doing as far as Fed this time, well, next week, whether we see 25 or 50 basis points, how cooked are the stock market's going to be, what action are we going to see as far as energy markets, and naturally rolling that across to base metals, and then a possibility even of, US government shutdown at the end of the month. So there's a lot of big themes that have to play out, and there's always times to just take it very, very easily because markets are very volatile at the moment.
So, Peter, as you said, in 2 weeks, we will have the US Fed meeting. November is US elections, and the markets will look at a whole host of data between all of these events as well. Of course, the guidance, the size and the speed of rate cuts also. What is it that you would want to watch out before you take that concrete directional view on metals?
I want to see, Manisha, first off, what how everything stacks up as far as Eurozone, what happens as far as Fed Chair Powell, where do equity markets trend over the rest of the month? And then, as you said, less than 2 months out from an election. And I think that there's just seems to be a drag to the bottom at the moment, softening. And crude prices also, with WTI is, 67, 66 going to be the new floor. And then once you see that, then there might be a time. But there's just so many big themes, again, have to play out until you actually see where the market takes itself. And I think for every retail trader out there, be careful and hedge your positions.
All right, Peter, thank you so much for giving us that insight. Manisha, thank you for taking us through with that conversation. We take a short break now. Come back on the other side. We focus on the markets and some flashes that came at the bottom of your screen when we're just starting that conversation.
Traumatized, and like it is very difficult us to study, and then people are getting like being like a monster, and we don't want that. So we are just making a human trend on that. On behalf of that, all our HRD students are here to make human change.
If we go back when I was started just about 12 years ago, the per capita consumption in India was as low as beauty and personal care was as low as $6. And today we are at about $15 per capita. And even this, for our income level, is below where we should be. Countries with similar income levels, to answer your question, have per capita consumption which is 3 to 4 times, so they are already at somewhere around $45 per capita. So India is below on beauty consumption habit, and that's where NICA always felt that education and social media is also helping a lot, but education at scale is the way to kind of bring more consumers into beauty consumption, and that is happening very rapidly.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy?
Well, while the market is consolidating, the Nifty flitting between red and green, just keep an eye out on the FMCG index. The FMCG index has now moved to the high point of trade, a gain of almost 1.5, 1.6 odd %. That's largely led by HUL. HUL has been doing well all through the morning and now has only extended those gains up to around 3%. Maybe the street is factoring in some sort of development on their ice cream business very soon, largely because the company has gone ahead and constituted an independent committee to decide the future of the ice cream business. As per Unilever's timeline, they are likely to speak on the future of how they will separate the ice cream business from the overall company by end 2025. And time and again, Rohit Java has told us here on CNBC TV18 that they will be well within the timelines itself. Add to that, you have the prospects of improving demand, which is actually doing well for all the other companies as well. ITC, for instance, up around 1.5%. Tata Consumer is the other one, which too has moved higher. And Berger Paints is the other one, which has followed gains of Asian Paints that we saw all of last week. In the other parts of the market, we're seeing some traction in names like Dabur as well, which is up around 2.5%. Honeywell has moved higher from lows, currently at the high point. And we've also seen some traction come by in names like Voltas, which has seen a big move already in this year itself. Finally, when we started the last segment, we had numbers at the bottom of your screen for the IPO of Ather Energy. Close to around 3,000 crore IPO is what the company, or papers is what the company would have filed as per reports coming in on Bloomberg. With that, we'll take a short break, come back. On the other side, we'll have the team of Business Lunch take all the market action ahead. Thank you for watching.
How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and
Frontline stocks are steady after an early dip, even though the broader market sees some weakness after a dip in US equities on Friday. FMCG and financial stocks eke out gains while energy and metals are the big drags. The 6,560 crore rupees public offer of Bajaj Housing Finance opens for subscription today. The company is looking to raise 3,560 crore via a fresh issue of shares, while the offer for sale is for 3,000 crore rupees. The lender's anchor book has drawn strong response from leading foreign and domestic institutional investors. Hindustan Unilever has constituted an independent committee to chart the future of its ice cream business after parent Unilever's decision to spin off its own ice cream vertical by 2025. A sweet goodbye may be on the cards. There's lots on the plate of the GST Council today. Prominent on the list is a review of the GST levy on life and health insurance, a proposal to impose GST on payment gateways, the need for GST relief to give Realty and a fillip, and taking stock of the compensation cess. Hello and welcome to Business Lunch here on CNBC TV18 in the Mumbai News Centre. I'm Horvus Fatakia. Let's first take a look at how the markets are faring this afternoon. It's been a recovery from the lows, at least for the benchmark indices, and since then the indices have been fairly stable, almost on even keel. Around the flat line is where the Nifty lies, around those levels of 24,850, 24,900 is where the Nifty continues to trade, and that recovery has largely been led by the financial names. The Nifty Bank was the one that was the outperformer, but even that index is now continuing to trade around the flat line off the highs of the day, and that too, there you can see the off the highs of the day, 100 points higher on the Nifty Bank, and that is ensuring that the Nifty remains in the green. But the pain though is coming in the broader markets. Both the mid-cap and the small-cap indices are seeing selling pressure in today's session. The mid-cap index is down 0.7%. The small-cap index though is the top sectoral loser, down 1.5%. As we speak, there is also selling pressure coming in from the PSU space, the Nifty PSE index. Now, all 20 constituents of the Nifty PSE index are currently trading with losses at the lowest point of the day, now over 2% down for the PSE index. REC PFC, they are leading the losses, but bucking the trend though in today's session are FMCG stocks, and they are being led by Hindustan Unilever, and the FMCG index is up almost 1.5% as we speak. There you can see at the high point of the day is the Nifty FMCG index led by Hindustan Unilever, 3% higher now at the highest point of the day. But there is a lot to focus on today. Prominent among that is the GST Council meet that is underway to deliberate on a number of crucial issues, from taxing gateway fees for small card transactions to deliberating on tax treatment for insurance premiums. The council has its plates full. Timsi Jaipuria, who's been bringing us the updates on the GST Council's likely agenda over the past few days, is here with the details. Timsi, is there anything that you're hearing from the council meeting as of now?
Well, as of now, my sources say that there's a lot on the plate, so the discussions are taking a lot of time. And as you rightly mentioned, some of the key agenda items that we must watch out for includes whether the council decides to give an exemption or a relief on the health insurance premiums and life insurance premium. Here the proposal is to exempt premium on pure term life insurance from 18% to 0, which would mean a revenue outgo of 213 crore rupees. And there are 4 options given on the health insurance side, whether to exempt all, or only for senior citizens, or only for policies up to 5 lakh rupees, or when it comes to only group, etc. So over here there are options that have been given. Fitment committee and officers could not decide, and they have now left it open for the council to take a discussion and decide upon. Apart from that, other proposals include to levy 18% GST, that is in terms of a clarification, 18% GST on payment aggregators or payment gateways which are used during a digital transaction below 2,000 rupees via payments made via cards, etc. If approved, this could be a big dent on payment aggregators, 18% GST on the fees that they earn by getting this transaction concluded. Here, Fitment Committee is of a view that payment aggregators are not financial institutions or banks, thus they were never exempted from this particular GST. Opposition has come out saying that this could impact people. It is against Digital India mission. No payment aggregator is going to absorb it. Opposition says it will be passed on to consumers, thus it should not be taken ahead. Let's see what council decides on it, but yes, opposition has come out saying so. Apart from that, also proposal to levy 18% GST on oil and gas exploration, on farm-in, farm-out contracts. Simply put, this means on subcontracting or giving away the contract after winning to another person, another party over here. This is in terms of clarification. If allowed, this would mean 18% GST with ITC. This is having a potential heavy outgo on these companies, but yes, a revenue plus for the government could be possible if this goes through. Then proposal to clarify on taxation of highway builders when awarded a contract on TOT model. If clarified, 18% GST will apply. Remember here DGGI had sent notices worth 670 crore rupees, so that could be coming in. For FMCG sector on namkeen and extrusion based namkeens here, if clarified, big relief could come in for players like ITC, PepsiCo, etc., where DGGI notices have gone on treatment of namkeen and fryams. Here Fitment Committee has proposed that for the past, that is in the retrospective, 18% should be applicable on extrusion based and other namkeens should be 12%, and on prospectively it should be only 12%. Another on the agenda is much awaited review of online gaming casinos. Compensation cess review, 1.37 lakh crore rupees shortfall, so compensation cess could continue for FY26. And yes, many more items, whether it is for two-wheeler and auto car seats, whether it is for cancer drugs, whether it is for getting in details on the film producers, on the film production, that could be a relief. Then power company, discoms and consumers on electricity connection could get a relief. Then metal sector.
There is definitely a lot on the agenda to track, but thanks a lot for those updates. There is a lot indeed on the plate of the GST Council, as Timsy was highlighting. But moving on to action in the primary markets, and there is a lot of action there. Bajaj Housing Finance is one of the IPOs that has opened for subscription today. The 6560 crore rupee issue that includes an offer for sale of 3,000 crore and a fresh issue of 3,560 crore rupees. The company has also raised around 1,750 crore rupees via the anchor book ahead of the IPO. To discuss their IPO offering, we had spoken to Atul Jain, the managing director of the company, who said he believes there is a clear highway of growth for the company going forward. Listen into that.
What we have been growing at the rate of, in last 3 years, at the rate of a 31% AUM. Past growth is not a reflection for the future growth. But the housing market, as you called out, is very big. The market is very big, and compared to while our absolute size, which is a 91,000 crore assets as of 31st March and a 97,000 crore assets as of a 30th of June, look in absolute sense reasonably big, but compared to the market size, I think we are still very small. I think all sectors, all segments of the market have a clear runway and a very large runway, given country is growing, given housing demand is growing, given mortgage segment itself has been growing at the rate of a 12 to 15% across industry. So we believe, given our relative size, we have a reasonable path and a highway to grow.
Bajaj Housing Finance, one of the 3 IPOs that have opened for subscription today. Now, Road Transport Minister Nitin Gadkari says that the government's focus is on pollution-free and cost-effective cars. Now, speaking at the 64th Annual Automotive Component Manufacturers Session, the minister added that he is not against additional subsidies for the electric vehicle sector. Listen into what he had to say.
I am not against petrol and diesel or fossil fuel. Sometimes unnecessary my statement is misinterpreted in the media. Import substitute cost-effective, pollution-free and indigenous. We have got the import of 22 lakh crore for fossil fuel. It's really $1 million question to all of you, that in our own country we need to make the import of 22 lakh crore is not a challenge for the country. This is the time that you have to change as far as the market is changing. You have to change as far as the choice of the people is changing. And in the interest of the nation, the society, economic point of view and pollution point of view, government, it is our duty to implement that policy. I am not against any incentives. Actually, the heavy industries minister is responsible. If you want to give more incentives on e-vehicle, I don't have any problem. What I was given my argument from my side, that when the e-vehicle starts, the cost of the vehicle, suppose is X. But now at that time, the price of the lithium-ion battery was $150 per kilowatt per hour. Now it is something 108 to 110 kilowatt per hour. I am confident it will come $100. So actually, my feeling was because the number also, manufacturing number is also increased. So on the basis of that, my assessment was that without subsidy, you can maintain that cost because the cost of production is less.
Well, time for a short break here on Business Lunch. Up next, we get your roundup of the weaker than expected August jobs data from the United States. Stay tuned. Back on the other side.
Team.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
khênh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc xe máy của bọn cô là trong nhà kia đang ngập nước mà nước bây giờ nó là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
Welcome back. Now, the US economy added fewer than expected jobs in the month of August at 142,000 versus the expected gain of 161,000. CNBC's Steve Leisman has a roundup of the data and what could it mean for the Federal Reserve's next move.
I'm calling this a mixed jobs report that is leading to mixed views about what it means for the Fed and the economic outlook. On balance, and it is a close call here, the street taking this as a report that leans more towards the soft landing camp than the hard landing and recession one. Here are the numbers real quick. 142 below the 161 estimate. 4.2 on the unemployment rate, down a tick. Average hourly wages, though, pretty healthy, speaking to a reasonably healthy jobs market if those wages are that high, up to 3.8% on the year over year. Maybe important part there is it's beating inflation. So you have real wage gains, and you've had those for quite some time now. A big part of the story, minus 86K on the downward revisions to June and July payrolls. That's part of a series of big downward revisions from the BLS. And sometimes these downward revisions tell us which way things are going. That would mean further weakness ahead. Where the jobs were, leisure and hospitality, it's been where the jobs have been. It's where they were in August. Healthcare, social assistance, those two. Those are the main ones. And then you have government not shown there, up 24,000. Construction also doing well. A big part of that, especially trade contractors. Retail down 11, manufacturing down 24,000. Here's how we're set up for the Fed in the wake of this number. Briefly, the market priced in a 50, and then it said, maybe not, and went back to pricing in essentially a 25 for September with a 63% probability, back to pricing in a 50 for November at 94%, and then up and down, on and off with a 50 or 25 in December, just barely at 52%. Bottom line is the market's sticking to this idea of 100 basis points between now and the end of the year. Here's some of the commentary that I've been reading about. Joe Biswella says it was a solid, if unspectacular, report. Morgan Stanley says it implies recession fears may have been overdone, but confirms slowing. PIMCO says it's consistent with an economy that is slowing but not crashing. This has been an expansion where skeptics outnumber believers and have done so from the beginning. What's clear is the job market is slowing. Revisions support the idea of a further slowdown, but so far, nothing in the data tells us it's more than a soft landing. But the Bears guys seem ready to stampede the Bulls at the drop of any piece of bad data.
Steve Leisman there with the jobs data on Friday that led to a massive sell-off in US equities. Moving on then, the real estate arm of IKEA, Ingka Centres, plans to unveil its second major project in the Delhi NCR region called Likli Noida. Now, Sebastian Hilving, the global expansion director of Ingka Centres, and Suzanne Pulverer, the CEO of IKEA India, spoke to Shivani Bajaj and revealed that India is among the top 3 markets for the company.
So today we have the unveiling ceremony. We have already gotten started, but today is the official start. And by 2028, we will open the doors to welcome all the visitors. And from an investment point of view, we're looking at 607 million euros. That's about 5,500 crores, to my understanding.
What we have learned is we have made very, very large stores, and they have almost been too big for the Indian consumers. So now we go down to a more decent size of still very big, 250 square feet in these 2 Likli centers. And I think that will also adjust much more from a range perspective, offer perspective, as I said, showing solutions even more integrated for the Indian consumers. And I'm hoping that this will be very good fit to the Indian market and to the Delhi NCR.
The top brass of IKEA in conversation with CNBC TV18. Time for a short break. Up next, the Health Ministry says the suspected monkeypox case in India is under investigation. We get you more details on this story on the other side. Stay tuned.
To stop the war.
It is making us like traumatized, and like it is very difficult us to study.
We have heard that there is a drop of bomb in the village of Maitais.
People are getting like being like a monster.
This is a very critical situation for Maitai community. We, all the students of to stop the war to stop the prevailing situations in Manipur, and we have heard that there is a drop of bomb in the village of Maitais, and this is a very critical situation for Maitai community. And for the students of HRD Academy, from the students of HRD Academy, I would like to say that our minds have been distracted from this all situations and all. So we would like to stop this.
We want to stop all the wars that is happening between Maitai and Kuki tribes, and it is making us like traumatized, and like it is very difficult us to study, and then people are getting like being like a monster, and we don't want that. So we are just making a human chain on that. On behalf of that, all our HRD students are here to make human chain.
Welcome back to Business Lunch. Now, the Supreme Court hearing the RG Kaur rape and murder case has taken note of the status report filed by the CBI and the Kolkata police and has said it will not be appropriate to make public comments as it does not wish to influence the investigation. Taking note of the centre's claims that the accommodation and equipment is not being provided for the CISF soldiers at the hospital, the Apex Court also has directed the state government to provide accommodation and necessary security equipment by 9 p.m. tonight. The court will now hear the case again on the 17th of September. Well, India has reported its first suspected monkeypox case yesterday in the form of a male patient who travelled back to the country from a monkeypox-affected region. Ekta is here to tell us more about the case, the symptoms the disease presents and how it spreads. Ekta, over to you.
Thanks for that. Well, India on Sunday reported its first ever suspected case of monkeypox or mpox involving a young male patient who recently travelled from a country experiencing mpox transmission. The patient has been isolated and is currently in stable condition. Now, samples are being tested to confirm the presence of monkeypox, according to the Health Ministry. Now, according to the Health Ministry, there is no cause for undue concern. The case is being managed in line with established protocols and contact tracing is ongoing. The ministry has said that the country is fully prepared to deal with such isolated travel-related cases and has robust measures in place to manage and mitigate any potential risk. This development, remember, comes after the World Health Organization declared mpox a public health emergency last month. Mpox caused by the monkeypox virus presents symptoms such as skin rash, fever, headache, muscle ache and swollen lymph nodes. Transmission occurs through close contact with an infected person, contaminated materials or infected animals.
Ekta, thanks a lot for that. Now, in fact, earlier today, we spoke to Dr. Nilesh Shah, who is the president of Metropolis Healthcare, to enlighten viewers on the current facilities available in India for running tests on the virus. He also explained how the virus gets transmitted. Listen in.
But on back-end side, the technology, the knowledge part, the technical training, validations, everything is complete and we are ready. We are awaiting government's go-ahead to run the test. Post-COVID, these labs could not sustain the setup because it requires that level of volumes and that variety of manpower sustainability and so on. And many of them shut down. But still, I believe that at least 400-500 labs still are doing molecular tests, and which is not bad to begin with. Must know first, what are the three areas from where the infection can occur? So one is direct contact. Second is respiratory droplets, which may come out from the patient. So don't go too close to the patient without mask. And third is contaminated material from the patient. These are the three things to be protected. Now, hence, the guideline today are to wear PPE kit. But you know, in COVID time also, it started with full-fledged PPE kit, and also it's not that severe, but PPE right now is recommended while doing the collection of sample.
The latest there on the monkeypox suspected case in the country. Now, a Deloitte report indicates that remunerations for CEOs of India's top companies have surged over 25% since last year, with the average CEO taking home a pay package of 27 crore rupees a year. Yusuf is here with the details of that report.
The average remuneration of top executives at Nifty 50 companies surged to 27 crore rupees in FY24, which is an increase of 26% from FY23. During the year, top executives of Nifty 50 companies drew a combined compensation of 1,347 crore rupees, showed data compiled from their annual reports. So who tops the list? Wipro's former CEO Thierry Delaporte is on top with an annual compensation of 168 crore rupees, which also includes severance-related costs. Two more CEOs were part of 100 crore club in FY24. Pawan Munjal of Hero MotoCorp earned over 109 crore rupees, and Rajiv Jain of Bajaj Finance earned more than 101 crore rupees. Just below the 100 crore club, CP Gurinani of Tech Mahindra, the promoters of DV's Lab, and Chief Vijay Kumar of HC Tech. So the top 6 companies put together, they earned 641 crore rupees, which is almost 48% of the total remuneration put together. 3 more executives earned more than 50 crore rupees in FY24. Infosys CEO Salil Parekh got a remuneration of over 66 crore rupees. Rajiv Bajaj of Bajaj Auto saw his pay increase by 13% to nearly 54 crore rupees. S.N. Subramanian of Realty earned over 51 crore rupees. Among state-owned companies, only 2 executives received compensation more than 1 crore rupees. Gurdeep Singh of NTPC and Arun Singh of ONGC. The lowest remuneration among the PSUs was the chairman of India's largest bank, SBI. Dinesh Khara, who has now retired, received a compensation of 39 lakhs rupees in FY24. All in all, the average compensation of 27 crore rupees for Nifty 50 executives is higher than 21 crore rupees we saw in FY23. But it is below the FY22 average of 28 crore rupees, which remains the highest on record.
CEO salaries at your display. With that, it's a wrap on this edition of Business Lunch from me and the team that put this show together. Thank you so much for watching. Midcap Radar takes the action forward.
If we go back when I was started just about 12 years ago, the per capita consumption in India was as low as beauty and personal care was as low as $6. And today we are at about $15 per capita. And even this, for our income level, is below where we should be. Countries with similar income levels, to answer your question, have per capita consumption which is 3 to 4 times. So they are already at somewhere around $45 per capita. So India is below on beauty consumption habit, and that's where Nykaa always felt that education and social media is also helping a lot, but education at scale is the way to kind of bring more consumers into beauty consumption, and that is happening very rapidly.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, there has been a substantial recovery from the lows on the Nifty, 70 points higher, and that's, of course, courtesy Bank Nifty. So big moves being seen there. Midcaps, though, continue to be under pressure.
Midcaps continue to be under pressure, and for a change, whole of last week before that, we actually saw the broader end of the markets outperforming the benchmark indices. Today, it's actually falling, and in fact, the small cap index too has fallen quite a bit. But let's start off with the top headlines. Frontline stocks gain after an early dip, even though the broader market sees some weakness after a dip in US equities on Friday. Oil and gas, along with PSU banks, drag, while FMCG and private banks eke out gains.
Senco Gold surges nearly 3% after incorporating a subsidiary, Sense Fashion for new business. Management tells CNBC TV18 they will invest 50 to 60 crore rupees in non-jewelry business initially, and this vertical will form around 4 to 5% of the total revenues.
SpiceJet gains nearly 3% as it issues shares to Carlyle Aviation to convert dues into equity. The deal is part of a settlement plan and brings down the company's dues to Carlyle to $97.5 million from $138 million earlier.
Deep Industries hits a 52-week high, rallies nearly 19% after it wins an order worth 1,400 crore rupees from ONGC. The order value is almost half of the company's market capitalization.
Welcome to Midcap Radar. In line with the global cues, we actually opened quite low, but there has been a significant recovery as far as the benchmark indices are concerned. It's the broader end of the markets, that's the mid-cap as well as the small-cap segment, that are seeing a bit of a sell-off in today's trading session. One pocket of the market that we can highlight right now is actually the life insurance space. Just 20 minutes ago, you saw the data flash on your screens, and amongst all of the companies that have reported data, the one that stands out quite significantly is actually Max Financial Services with its life insurance arm, that is Max Life. It's seen a growth of almost 17% off an already stronger base. So Max Financial trending in the green, hasn't reacted too much, but the data there is something that stands out. But this is our special segment, Midcap Movers. Hormaz is standing at the wall to take us to the midcaps that are moving around in this session.
Significant pain seen in the broader markets. You'd call that significant considering the benchmark indices are trading in the green. We'll start off with the losers then within the broader markets for a change today. And Sona BLW, after a run-up that we have seen in the stock, is seeing some bit of a sell-off today at the lowest point of the day, 4% lower, as is Petronet LNG after that Jeffries note on the stock as well. Piramal Pharma at the lowest point of the day as well, as is Raymond and Birlasoft, all of them seeing losses of anywhere between 3.5% to 4.5% in today's session. A pocket that has seen selling pressure through last week, continues to do so today as well, is the PSUs, and it is within the PSU basket that you're seeing stocks like REC and PFC, the high flyers of last year and for a better part of this year as well, seeing a bit of selling pressure today, almost 5% down for PFC, Bharat Dynamics too within the defense space, and IREDA at the lowest point of the day, almost 3% lower in today's session. Some movers on the other side as well. These stocks are the metal stocks, and they are the ones that are also continuing to face selling pressure in line with what happened last week. Nalco, Hindustan Copper, NMDC, SAIL, almost every constituent of the metal index trading with losses in today's session. And lastly, some stocks that are bucking the trend. You mentioned Deep Industries earlier, but besides that, there is Jubilant Pharmova, most of them within the pharma space that are bucking the trend in today's session. Jubilant Pharmova at the highest point of the day, 8% higher, followed by Alembic Pharma. Gujarat Fluoro continues to build on its gains, almost 3.5% higher today, and DOMS Industries having a good day in an otherwise weak market. Back to you guys.
All right. Okay, Hormaz, thank you so much for joining us. So that is all the mid-cap movers that we have on our radar today. It's a good time to go ahead and connect with the management of SIS now. Quarter 1 was a tepid quarter for them with muted revenue growth and margins under pressure. To discuss how Quarter 2 is shaping up and what's the growth outlook, we are now joined by Dheeraj Singh, the CEO at SIS, joining for a few questions. Mr. Singh, good afternoon. Thank you so much for joining in. Can you give us a sense of how Quarter 2 has shaped up so far? Are you continuing to see that mid-single digit growth? And when do you accelerate back to that double-digit mark that you've seen earlier?
Good afternoon. So SIS, we've always grown at a compounded rate of about 15% over a mid to long-term horizon. And we expect that similar growth to continue. We've seen a robust rebound in both our facility management and security business. In the Q1, we've seen that growth happening, and we see the same trend continuing for the Q2. We are working on the improvement of margins. The security margins has largely been improved from last year onward itself. We've seen a growth from 3.9% to almost 5.5% in security vertical. And in facility management, we are seeing quarter by quarter an improvement in EBITDA margin of about almost 250 basis points. Sorry, 25 basis.
Mr. Singh, thanks for outlining that and thanks for joining us. The important question here is you've actually given a guidance as far as maintaining a 6% EBITDA margin is concerned as far as the domestic business is there. Now, talking about the international business, Q1, you did see the pace of growth slow down substantially over there. And also, you've given a margin guidance in the range of 4 to 4.5%, which is lower compared to what you're giving for the domestic business. Q2 onwards, do you see international business revive, and what will be the long-term margin target over there? And especially, could you give us a sense of how Australian operations have rebounded?
So historically, if you look, our international business has largely operated between 4.5 to 5% EBITDA margin. And we expect similar margin profile to continue for international. However, for the next quarter, next 1 or 2 quarters, we will have pressure under one particular vertical in the international business, SXP, as we mentioned in the Q1. But by Q4, we expect the international business to normalize at about that 4.5%.
Mr. Singh, talking about the international business itself, in July, Fair Work Australia announced a minimum wage hike of 3.8%. That is with effect from 1st of July. Have you seen that happening in the contracts? How does it exactly work and how does it impact your business there?
So the contracts are for a longer term period and it has a lagged impact. So it is usually the impact for us on our books is after 1 quarter. So we will have the cost impact in the initial quarter and the revenue impact in the following quarter.
And how much would that impact be for you?
Sorry?
How much would that impact be if there is a 3.8% hike by Fair Work Australia? How much would that impact the company if you're saying the impact will come in the coming quarter?
So most of our contracts are on a cost plus basis, cost plus a margin basis. So when the costs go up, then our margin will proportionately increase by that amount.
Okay. Mr. Singh, talking about the facility management business, we understand that right now, you're in the midst of undergoing a review as far as the entire operations over there. We understand you've also weeded out a few businesses where, margins were slightly unviable. Give us a sense as we stand at Q2, how exactly has this particular business panned out? FY25, what is it that you're expecting from the facility management business, especially in terms of margins?
So just to recap on the facility management business, we are India's largest facility management business as of now. Right? Our quarterly run rate is about 550 crores. So that makes us almost 2,300 crores annualized basis. The difference is that our facility management is core facility management services. We haven't added other ancillary businesses to the facility management, which we can add in the future. We wanted to focus on the fundamental core pillars of facility management, and the margins that we are having currently in this core facility management business is still better than many of the industry peers if you compare apple to apple. However, we are nowhere near satisfied with our current EBITDA margin, and therefore our focus is to improve on the existing contracts profitability, focus on the kind of contracts that we are taking, new contracts, also work on the SG&A and other synergies that we have across our 4 facility management entities. We expect from Q4 our margins to come back to the 5.5%, and which will continue to build upon for further improvement in the years to come.
Okay. Mr. Singh, I was looking at the growth rates for this quarter. India Security Solution is up 7.8, International is up 2.7, Facility Management is up 2.2, Cash Logistics is the one where you've seen a 12% growth. It's right now, of course, the smaller part of your business. But going forward, which would be the business that would see the highest growth in your bigger chunk of businesses as well? And what kind of growth are you expecting in just Cash Logistics?
So as you mentioned, cash is definitely one of our rising stars as of now. And not just the growth, it is the EBITDA that is very exciting out there. As you're showing on the screen, it is 17% EBITDA. So it is more than 100 crores EBITDA annualized basis as of now. The good part is that we are focusing on more value-added services in our cash logistics business. So the percentage of revenue that comes from more value-added services is about 8%, what we call banking outsourcing solutions. So it's a proxy play for the banking sector. Any outsourcing requirement that the bank has, we are there to provide that. And
Mr. Singh, if I could interrupt you, we understand, you've also appointed a banker to go ahead and see if there could be a demerger and maybe a subsequent listing of this particular business. Where do you stand on that currently?
Yes, our board has approved for exploring the unlocking of value in this particular joint venture. And as you rightly said, we have bankers who are exploring this, and within a year, we hope to see the tangible output of this.
Okay, all right. So within a year, there could be some decision on the cash logistics business from SIS. Mr. Singh, a pleasure speaking with you. Thank you so much for joining in and giving us all those details. So that's the word coming in from SIS. Q1 was tepid, but they expect some improvement coming by due to improving fundamentals across businesses as well. Let's submit to a break now. Up next, we'll get you excerpts from the conversation we had with Bikram Yadav, RBL Bank, on their growth outlook. So stay tuned for that.
Reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Investing.
Welcome back to Midcap Radar. As promised, RBL Bank says it intends to grow its credit card portfolio at a modest 12 to 15% range compared to the industry's 25 to 30% growth rate in the segment. Bikram Yadav, business head of credit cards at RBL Bank, spoke with my colleague Ritu Singh on their business momentum and growth outlook. Listen in to the excerpts of that conversation.
As we have been stating that for last 18 months or so, we have been working on a diversified distribution channel for our growth ahead. So within which we have decided that first thing that we have done is that we have built up our own sales network in our branches and on our direct sales process. We have also done multiple co-brand partnerships so that we do not have concentration risk in our sourcing of cards.
Okay.
Now, we are a fairly large issuer with about 5.2 million customers. We have seen a product stack in which we have multiple co-brands and multiple offerings in bank branded cards also. There was a gap on a fuel co-brand. And fuel is a rising consumption category with disposable income and affordability increasing and people consuming fuel at an increasing rate every year. So we were looking for a fuel co-brand partnership. We spoke to Indian Oil. They are the largest fuel retailers in India. And then we signed up this deal where we'll bring significant value to our customers and loyalty for Indian Oil and a large access to us through their distribution.
So with all of this expansion, what is the share of your largest co-branded partner come down to?
So see, progressively what we are looking at is that we should not have heavy dependency on only one co-brand partner.
So now it is at?
So now we would be, we are already moving about 50-50. And in a progressive manner, we would taper it down further.
Should we assume the partnership continues till 2025 as originally signed?
As I'm saying that, this is one thing which we will not comment because it is in regulatory ambit and it's a discussion between co-brand partner and the regulator. So it's not for us to comment on it.
RBL Bank has come up in the credit card space fairly quickly now at nearly 5-6% market share in just a 10-year period. What are your aspirations here? The book has already grown to a third of your total retail business. At what pace do you expect this to grow?
So we indeed started our credit card business in 2014-15 and through our differentiated strategy we made space in this category. We are about 5% of market share. We would continue to grow in a moderate basis. So for credit card infrastructure to work efficiently, you need a minimum scale. That scale we have already reached. Now we would do more with our customers. So our focus would more be on doing more banking products with them, driving engagement, driving unitary economics, doing more with our customers in terms of other loan products like home loan, car loans, doing deposit relationships with them. So it is going deeper in the base rather than expanding the base rapidly. We would moderately continue to grow in range of 12 to 15% and industry is growing at about 25-30%.
All right, that's the word coming in from the management of RBL Bank. With that, let's move on to an important story. Two Mauritius FPIs named in Hindenburg's Adani report have moved to Securities Appellate Tribunal challenging SEBI's new foreign investor norms. Money Control's Pawan Burugula is joining us with more details on this one. Pawan, over to you. Hi Pawan, can you hear me?
Yes, I can hear you.
Yes, please tell us.
So what we have gathered is that both these cases will tentatively come up for hearing at SAT tomorrow or day after. And it needs to be seen how SAT interprets these FPI concentration norms and whether it will force SEBI to, take a call on the exemption applications filed both these FPIs. Again, if SEBI rejects their exemption applications, then what we are gathering is that funds can come back to SAT file fresh. So basically, is that they are subject to additional standards of disclosure compared to other FPIs, and both these funds believe that they are eligible for exemption from the concentration norms. However, SEBI has not processed the application. We have also gathered that there are other FPIs also who are seeking similar exemptions from SEBI, and their exemptions are pending.
Okay, all right. Looks like there is some glitch, but we'll try connecting with Pawan again and we'll get you more information. But the gist is that more FPIs are coming up and requesting some waiver in terms of the new rules that have come by. Of course, we'll get in Pawan again to get you more details on this important story. For now, we'll slip into a short break. On the other side, we'll put focus on Senco Gold. This is a special offering, Midcap Spotlight.
khênh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc xe máy của bọn cô là trong nhà khi đang ngập nước, mà nước bây giờ nó là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
To stop the war.
It is making us like traumatized, and like it is very difficult us to study.
We have heard that there is a drop of bomb in the village of Mahindra.
People are getting like being like a monster.
This is a very critical situation for Mahindra community. We, all the students of it, to stop the.
Welcome back. Well, markets have come up from the highs, but one stock which is doing well in the broader markets is Senco Gold. Mangalam is joining us now. This is our special segment, Midcap Spotlight. Mangalam, why is the stock buzzing in trade today?
Well, it's because of a development that the company has announced and informed to the exchanges. The fact that they've incorporated a new subsidiary for businesses. It's called Senes Fashion, and this will explore the businesses beyond jewelry. So they'll have lifestyle products. They'll also sell lab-grown diamond jewelry, something that has been gaining a lot of traction lately. Alongside that, they'll sell leather and non-leather accessories and perfumes, etc. We spoke with the management this morning, and what was interesting is that they said that they will invest around 50 to 60 crore in this business initially, and thereafter annually it will be about 25 to 30 crore of investment itself. They will be selling and marketing these products themselves, making them also in their own brand. So brand building will be something that they will be eyeing. Going forward, it will be about 1 to 2% of their sales, and in the medium to long term, close to around 4 to 5% of their overall revenue will come in from the jewelry, non-jewelry business itself. Will it be margin accretive? Well, yes. At a steady state, it could be margins of close to around 30 to 35% on a gross basis. And additionally, on the jewelry business itself, they said that there was a strong pickup. In fact, September has been strong for both the company as well as the industry. From the start of this year to now, they've done 15% sales growth. Remember, sales growth in first quarter FY25 was just about 7.5%. So that indicates a stellar pickup, and that's also actually rubbing off on all the other jewelry companies as well. So Senco is doing well, but names like PC Jewelers, TBZ and others are doing even better. So keep an eye out in the jewelry space.
Thank you so much for that, Mangalam. In fact, if we could pull up the intraday chart of TBZ, that stock today is doing very well. Tribhuvandas BMG, that stock too is up almost 13% in the session today. But that's all the time we have on this edition of Midcap Radar. Your stocks when we return.
Right, to stop the prevailing situations in Manipur, and we have heard that there is a drop of bomb in the village of Meiteis, and this is a very critical situation for Meitei community. And for the students of HRD Academy, from the students of HRD Academy, I would like to say that our minds have been distracted from this all situations and all. So we would like to stop this.
We want to stop all the wars that is happening between Meitei and Kuki tribes, and it is making us like traumatized, and like it is very difficult us to study, and then people are getting like being like a monster, and we don't want that. So we are just making a human chain on that. On behalf of that, all our HRD students are here to make human chain.
If we go back when I was started just about 12 years ago, the per capita consumption in India was as low as beauty and personal care was as low as $6. And today we are at about $15 per capita. And even this, for our income level, is below where we should be. Countries with similar income levels, to answer your question, have per capita consumption which is 3 to 4 times. So they are already at somewhere around $45 per capita. So India is below on beauty consumption habit. And that's where Nykaa always felt that education and social media is also helping a lot, but education at scale is the way to kind of bring more consumers into beauty consumption. And that is happening very rapidly.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a day where we are seeing some amount of red on the broader market screen. So we have the mid-cap index, which is down around 0.6%. The advanced decline ratio, which is on the declining side, and there's been no sort of recovery which has taken place in that ratio as we've through the day. So currently around 1,500 stocks advancing to around 2,700 stocks declining on the Bombay Stock Exchange. The Bank Nifty is the real star for today, so it's up around 0.7% at this point in time, going from strength to strength. And we have the Nifty, which is just about consolidating with a little bit of a positive bias, so up around 40 odd points currently for the Nifty. We have the Sensex, which is up over 200 odd points. Well, it's turning out to be a day where specific stocks continue to be in focus. HUL is your top gain on the Nifty. It's up around 3 odd percent. ICICI Bank is giving strength to the Bank Nifty, so that's up around 2 odd percent. And we have stocks such as ITC, which are doing well as well. So FMCG, banks, all of these stocks are managing to see some amount of uptrend, along with IT stocks such as Infosys also. But joining us this afternoon, we have Shaina Mukaddam, independent market expert, and Rajat Bose of rajatbose.com to answer all of your queries. Shaina joins in on the fundamentals and Rajat on the technicals. Afternoon, Shaina, as well as Rajat. Well, Rajat, let's kick off the show with you. It's turning out to be a day where the Bank Nifty is really shining. So what would your approach be? Rajat, is my voice reaching you? Okay. All right.
The voice is breaking. Anyway, you were asking about Bank Nifty and Nifty.
Yes.
See, as far as the indices are concerned, I mean, they are moving into the red and coming back into the green. But I would say that unless you see the 24,800 mark is taken out by the Nifty decisively, the seesaw movement is likely to continue. And only when the index crosses, say, 25,100, after that, you would get some real bullish strength. Regarding the Bank Nifty, I would say that 50,900 to about 51,100, this 200-point range is very crucial. Once it crosses 51,100, then you can expect further upside on the Bank Nifty as well. Otherwise, this kind of range-bound movement, in some cases you will see weakness, in some cases you will see some buying coming in.
Okay, all right. So that's on the Nifty Bank. But let's get in some queries now. We have Jatin who writes to us from Jatin Shah, who writes to us from Gujarat. He's asking if he can buy Samvardhan Motherson shares at these current levels. So currently, it's an investment question that he has. What would you recommend on this, Shaina?
I would suggest that he wait to buy the stock because they have announced that they are going to raise about $1 billion by QIP. And I would suggest that you wait because this funds will be largely utilized to repay the debt. Valuations, are reasonable but not cheap. So it's better to wait till this whole thing is behind you and then to add once the stock stabilizes.
Okay, all right. What about you, Rajat? Do you have a view on Samvardhan Motherson?
I would offer the same view. That is, see, the major move had already happened from, say, around November 2023 when it was 90 rupees a piece. And now it has already doubled and there had been a one-way traffic in the month of May and June. And now it is consolidating. So probably one would get it around, say, 170. That would be a much safer level to buy.
Okay. All right. So that's Samvardhan. That stock has given returns of over 50 odd % in the past 6 months, doing well. Well, we now have Ashok Khanna, who writes to us from Mumbai. He holds 3,500 shares of Hitachi Energy, which he's bought at around 1456. And I'm sure there's a little bit of a mistake which has taken place there. I think maybe in any case, we'll get back on that particular stock. But in any case, he wants to know what to do with this particular counter. Well, you know, share price aside and whether somebody's sitting on a profit or a loss there, Hitachi Energy, what would your call be on this one, Rajat? Have you seen it?
Ekta, I saw the question. That is, it was, I think, 3,500 shares bought at a price of 1,500 or something of that kind. In that case, if that is the case, then definitely he should continue to hold on. Although the stock is showing a bit of toppish kind of formation, but unless it falls below the 10,000 mark, there is no real weakness there. And if it is really bought, if it was really bought at say 1,500, if one may book part profits. Otherwise, one should continue with it. Powertrain is the NSE code for this.
Okay, all right. Well, the stock itself is, as you can see, in just the past few months has given returns of over 70-odd%. So it's been a complete rank outperformer. Shaina, any view on this particular counter?
That's a good investment stock. You should continue to hold. They are showing very good numbers. First quarter, their EBITDA was up very strongly. Profit growth is also good. Revenue growth is also good. They are doing pretty well actually after the takeover of the power grid business of ABB. They took it, I think, somewhere 4 years back. So it's a stock that is in a good sector, doing well, good promoter, good management. So it's a hold.
Okay, all right. Well, we now have a query on Nalco. We have Indira, who writes to us from Visakhapatnam. She holds 470 shares of Nalco, which she's bought at 178. She's sitting on a loss on this one. Wants to know what to do with this particular counter. Any idea, Rajat, in terms of whether it would, probably show any kind of upside from here on? And do you think that you're confident of it at least getting back to its buy price?
You have put me in a spot. Actually, buy price, going back to buy price is slightly difficult at this point in time because it is showing a distribution pattern. But only hope is that it has not tested in this year the 200-day exponential moving average, which is around, say, 167 or so. So unless that 162, if I'm right, that is 162. If that is not broken decisively, it may not fall much. But then expecting upside, like even if you expect that whether 200 or 210, those levels will be reached anytime soon, very little probability. If I were in her shoes, at least I would have booked part losses and maybe hold the part quantity. That's the kind of thing that one can do. There's not much hope out there in this.
Okay, not much hope out there. You don't even think that it's going to get back to 176, 180, 178 levels in the near term?
178, it might bounce back to those levels because it is trading just at 170 and one can get out of the position that way. But then this is not an investment stock at the moment. This was an investment stock late 2023, early 2024, but not now. Many such PSUs are like that. DEL is another case. But I would say that if one is willing to hold this stock for, say, 1 year or much longer, then probably some good move on the upside can be expected. Short term, very frankly, I feel that it will test its 200-day exponential moving average and it could even go lower if the market turns slightly dicey.
Okay, all right. What would your recommendation be on this particular counter, Shaina? Would you choose this vis-a-vis other metal stocks such as the Vedantas and the Hindalcos of the world?
Well, I do think that it looks interesting at current levels to hold for the medium term. Shorter term, yes, there could be some bit of consolidation. But if you see core aluminium prices, they have actually stabilized. They had come off, over the last 2 months. But if you compare on a Y-to-Y basis, they are relatively stable. So the numbers that the company will report, at least in the near term, the second quarter, third quarter, I think should be pretty good. So in my view, valuations are not expensive. It's about just 2 times price to book. If you look at an EV by EBITDA, it's about 7 times. So yes, while metals, PSU stocks are out of favor, I think valuations stand supporting Nalco for the medium to longer term. So I would suggest you can hold. Do keep a stop loss as usual.
Okay, hold but keep a stop loss at these levels. So that's the word coming in on Nalco. We have Shrikant, who writes to us from Hyderabad, holds 25 shares of Gravita at an average price of 576. Is a long-term investor and wants to know what to do, whether to hold on or what the future prospects of this counter are. Sitting on a very good profit on Gravita. That stock is up around, the profit is around 40,000 rupees. So from that perspective, Shaina, what would your call be on Gravita? Does one hold on, or do you think that it's time to take profits?
That is continuing, so I would keep a strict stop loss, maybe somewhere close to about 2,000, but because valuations are extremely expensive. So for the shorter term, yeah, you can take part in the momentum. It basically, does lead, they process lead, the batteries. So for the shorter term, yeah, maybe it will continue to perform. But if you look at the very, very long term, I will not classify this as an investment stock because lead is being replaced by other, materials in the auto segment. Like you have aluminium, you have plastics. So I would say, for the shorter term, take part in the momentum. For the medium to longer term, it's a switch.
Okay. All right, and what about you? Would you have an opinion on this one, Rajat? Gravita?
I think this investor is making something like 4 times of what he paid for. And it is a parabolic formation on the weekly chart, let alone talk about the monthly chart. Saina is telling that one can wait, but I would say this is one stock, you're getting good money, 4 times appreciation. Why don't you book profits? If you want some memento, keep say a small percentage of stock with you, but otherwise take your profits. This is the time.
Okay, take your profits. This is the time. That's the word coming in by Rajat on Gravita. Remember that the person who's asked the query is sitting on a very good profit of around 40,000 odd rupees. So let's see whether they do heed that advice. Well, on that note, we need to take a quick break. A lot more queries on the other side. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future.
Welcome back. You're still tuned in to Your Stocks this afternoon. We have Shaina and Rajat to answer all of your queries. Well, let's get in another question now. We have Anil Kumar who writes to us from New Delhi. He holds 2,100 shares of Tata Motors, which he's bought at around 234 odd rupees. He's asking if he can hold it for another 5 years. So he's a long-term investor. Look at the kind of profits he's making on this. It's really a portfolio stock. But the key question, Shaina, is that do you hold on to these gains or do you book profits? Because clearly Anil is a long-term investor. He wants to hold it for another 5 years. Do you think that one should just, forget about it for another 5 years and then revisit it? Or is it time to probably take some profits?
Ekta, I believe it's a portfolio stock and one can continue to hold it for 5 years. The way the management is actually even cleaning up the balance sheet, they're talking of bringing down the debt substantially over the next 1 to 2 years. They are doing pretty well in their new launches. They have very aggressive launches in the EV space. They're doing well in JLR. So, I mean, all across the board, things are looking better for the stock. They have merged the DVR also. So, things are looking better for the stock with the longer term. So, I would suggest the investor can continue to hold.
Okay, what about you, Rajat?
I ditto. I would say that, yes, even I feel that Tata Motors should continue to be held. There is no point getting out of it because even technically speaking, although it is showing weakness on the weekly chart because it has been falling for the last couple of weeks, including the current one, but that is course correction that will continue to happen. But if you ask me for the long-term trend, I would say it is clearly up and it is going to continue. So if I were him, I would have kept my position intact. And yes, maybe 3 years down the road or 5 years down the road, you revisit it. But be certain about one thing. There will be, at some point in time, there could be another sharp fall that can happen. But don't get upset because this stock will remain bullish unless it breaks down 700. So Tata Motors is a hold and on dip, it is a fresh buy.
Okay, all right. So Tata Motors is a hold at these levels. That's the word coming in. We now have Jaswinder, who writes to us from Chandigarh, wants to invest in Ola Electric and is asking at what levels he should enter. Well, the management is extremely bullish, in terms of the entire EV cycle, about the kind of market share that they want to get in motorcycles as well. From that perspective, do you think that it's a long-term stock to buy, and would you probably advise buying it at these levels, Shaina?
Yeah, see, I personally also have added some to my portfolio, a small quantity, and I believe that, the future is EV for two-wheelers. I'm pretty positive on their plans for introducing their own cells going forward, and three-wheelers also for the longer term. So they are making losses. So this stock is for a longer term investor, somebody who's looking at 1 year plus holding. And I would suggest, you buy it at dips. It could go down lower also. You never know, because for a new issue, sometimes it remains very volatile for the first 1 year. So you have to go through that pain, if at all, and then hold it for the longer term.
Okay. All right. Well, now we have Venkatesh, who writes to us from Andhra Pradesh. He holds 600 shares of Canara Bank, which he's bought at 114. Wants to know what to do with this particular investment. He's sitting on a loss. Rajat, over to you.
I think the loss is not much. It is minimal, and one should seek an exit of Canara Bank because it has done its course. It has moved up. Now it will consolidate. It will go down. It will take some time, recoup its strength, and then move further up. But before that, if one books some profit, that would be, or minimizes one's loss, that is par for the course as far as Can Bank is concerned.
Okay, all right. That's on Can Bank. And China on Canara Bank, your view?
See, for the shorter term, actually, I will go with Rajat's recommendation that, it may consolidate for some time. But as a long-term investor in Canara Bank, which is like, it's got a very good size in terms of, loan book, in terms of deposit, it is doing reasonably well. It's growing both in loan book as well as in their deposits were about lower double digit. The issue out here is that valuations at 1.2 times price to book is not the cheapest in the PSU banking space. Two is that they are showing some bit of softness in NIMs. We saw it in the first quarter. The cost of raising funds may go up over the near term. So over the next 6 months, I believe it is likely to remain in a similar range for some time. And like all PSUs, especially banking, it is seeing some bit of softness. But if you're a long-term investor and you do not want to trade, then I think you could continue holding.
Okay, all right. Well, on that note, China as well as Rajat, we're going to let you go. Thanks very much for joining in and giving us your perspective both on the fundamentals as well as on the technicals. Well, on that note, we'll leave you with some market opinion from Vetri Subramaniam. It's a wrap on the show, but do remember to email us your questions. We'll address them with our experts. Stay tuned. Closing bell up next.
As a capital market participant, I'm happy that capital formation is well and truly underway, but I don't think this is a one-dimensional, perspective that we should be keeping. There is a massive supply of flow which is coming through from promoters, from new issuances, as well as from, strategic holders, including Ps and VCs. So, every day you're flooded with a new set of either block offers happening in the marketplace, or QIPs, or OFS, or IPOs. So it's a very hectic market, and that's the reality of it. So if you look at our multi-asset allocation fund, our net equity exposure can come down to a minimum of 20. It can go up to a maximum of 80%. Currently, we are less than at the halfway mark at about 45%. So in a way, it is an underweight equity stance in the context of asset allocation that we make in that scheme. In terms of sectors which are attractive, honestly, there's only one sector top down that we find reasonably attractive at this point of time. It's a combination of above average fundamentals with below average valuations, and that, roughly speaking, is the banking and financial services sector. So though that's the one sector where I have absolute comfort.
CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
khênh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc xe máy của bọn cô là trong nhà kia đang ngập nước mà nước bây giờ nó là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
Actually, it's a red-looking screen when it comes to Asian markets. The Taiwanese index is down around 2%.
The next support below that, a break below that, comes in at 24,444, which is the 61.8% retracement of the rally, 24,818. So that's the first rate coming through.
What we have seen over the course of the last 18 months or so has been that risk has got disproportionately rewarded.
I think the markets need to embrace for some volatility in coming weeks to next couple of months.
Last 30 minutes, markets have picked up and now we're back towards that closer to 24,900.
18 crore shares become eligible for trade. Needs to be clarified here that they'll not be sold immediately.
So there are two techniques for doing a test for monkeypox. One is serological test and another is molecular test.
To levy 18% GST, that is in terms of a clarification.
Not against petrol and diesel or fossil fuel.
Well, there has been a substantial recovery from the lows on the Nifty, 70 points higher.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal Studios in Mumbai.
Well, that is a day so far, and it has been a day of slow and steady recovery through the course of the day. I mean, you could say that the recovery is fleeting because it's not being able to build on into a substantial one. But from the day's low, I think this is a pretty decent pullback that we've seen. This is closing bell, last hour coming up. We're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Rima. Rima, hi.
Hi, Prashant. So from the day's low, we've recovered more than 100 points in the Nifty. It's just that in the last 10-15 minutes, we've seen the markets come off a bit because we did cross above 24,900. There you have it, just a little before 2 o'clock. And since then, there has been a little bit of a give up.
You know, it's still possible, right? There's still an hour to go and maybe we'll have a 100-point flourish. But that would be surprising, right? I mean,
from where we started in the global cues.
Yeah, exactly. And so we'll see. So this is a decent day from the day's low and kind of not very much on the upside either. I think broader market, though, are worth looking at as we begin the session. They are still down. I mean, not nearly as much down as they were in the morning. So in the morning, there was almost 3:1 declines to advances ratio. At this point, it's about 2:1. So, you know, 1,800 stocks are lower and about 900 stocks are higher. This is the overall NSE market breadth. Advanced decline, declines to advances. Banks are sort of leading the move. And by the way, the Nifty Bank will come up on your screen. It is above the 20-day moving average. That number is at 50,900. We're at about 50,940 or so. So a little above the 20-day. And I think the close above it will be nice. For the Nifty, it's not really taking out any... I mean, you know, you can look at retracements of the very recent fall and then get to some numbers. But I think that's very, very here and now and very near term. So just give it some more time to give us a bigger kind of a break coming through here, really. I think that bigger number, of course, is that 25,333 level, which is the all-time high. I think that's the bigger one above which you will find more momentum. Otherwise, I mean, it looks very, very ranged. Public sector companies, the CPSE index is down 2% as well. And that is something which we will discuss as we go forward over the next 60 minutes or so. Rima.
Well, Asia has largely recovered from the day's low. It's still ending in the red, given the extent and the magnitude of cuts in the morning. But something like in the Japanese markets, Nikkei is down 0.5%, but at the session's lows, it was down more than 2%. So a significant pullback from the lows for Asia. Europe, by the way, has opened up in the green. So frontline European indices are up close to about 0.5%, and the Dow futures is up nearly 170 points. FMCG and IT, those are the two sectors leading from the front. The Nifty FMCG index is up nearly 2%. The IT index has now come off a bit in the red. CPSE index, which Prashant was talking about, is now down 7.5% this month itself. And from the recent peak, it's lost close to about 10.5%. And individual stocks like a Hindalco, BHEL, NFL, these are all stocks which are down 20 to 30% from the highs which they hit not too long back, very recent. So that profit booking in PSUs continues across various sectors. But Mitesh is now with us for a few closing strategy. Mitesh, your thoughts on the day so far, any trends you've observed, and what would the last hour calls be?
Yeah, good afternoon. So the only good trend is that the Bank Nifty has bounced back. And I would now want to see two levels, which is one 51,100 and then 51,400. I think these two supply points remain important. I think we had a high of 51,100, 51,013. So I think around 51,100, I would expect some strong supply to emerge. But let's see how it goes from there. So if the Bank Nifty fails to get past 51,100, then I think in the next 1 or 2 days, we'll see, some kind of supply pressure again, and the market should again, start coming down. So the view hasn't turned positive, despite the fact that the Bank Nifty is kind of defying the trend. On the stock side, I have one buy and one sell call. UBL is something, which is looking interesting. UBL is a buy. I would give a stop below 2033 here. Look for targets of around 2150. Maybe eventually higher levels, but that's the first target. And Birla Soft or B-Soft is a sell. Keep a stop at about levels of 642. Look for targets of 590.
Okay, thank you very much for that. Dipan Mehta, Director of Elixir Equities, is now with us on the show. Dipan, afternoon. Thanks so much for joining in. Anything interesting that you've done in terms of trades, ideas today or just in the last couple of days?
Yeah, good afternoon, Rima. Thank you for having me on your show. No, I think nothing interesting as such, but just watching the market at this point of time, looking for any opportunities, none of which are coming over at present. But we are seeing that there is at least some marginal correction taking place in a whole host of stocks, although not visible at the index level. But, definitely at stock by stock, once you go, a lot of stocks are off 15%, 20%, 30% off their highs. Popular ones could be in the defense space, railway space, capital goods. So I think that there are opportunities cropping up. And right now, I think we are trying to look for good ideas in the pharmaceutical space, because I think that is one sector, which can outperform over the next 6 to 12 months. And I feel that valuations are reasonable there, and you could find a few winners over there. And maybe the numbers also will surprise us on the upside.
By the way, just look at Ola Electric. In the morning, it was down 4.5%, and now it's suddenly spiked up nearly 4.5%. Remember, we were highlighting how lock-in shares amounting to about 18 crore shares have opened up. So the lock-in ends today, and therefore they're eligible for trading. And the stock has seen a sudden spike starting 2 p.m. and now it's up close to about 4.5%. The high on Ola Electric was 157. Currently, the stock is at 113, so it's still off, considerably, 25% from its peak. But intraday, there has been a big move in that. But Petronet LNG is under pressure. There is a Jefferies note. Sonal joins in with the highlights. Sonal.
Thank you for that. Well, remember, Q1 was strong for Petronet LNG. We did see high power demand, and that is something that led to higher volumes as well. But now Jefferies in its report suggests that these volumes are off peaks, around 30% from the May peak levels that we saw when power demand was high as well. Now it's because gas demand from power has cooled off in the month of July. Spot LNG prices, they are more expensive. That would mean imports would go down, and that is negative for Petronet LNG. And compared to alternate fuels, it is weighing on gas demand in the industrial sector right now. The other thing is that earnings momentum is also turning out to be negative for Petronet LNG, and there are capital allocation concerns with respect to the petrochemical plant that has been ongoing for a while. And the second one is the recent East Coast Terminal project. This would be the medium-term drag for the stock as well. Now, valuations after this 90% surge that we have seen in the stock since November are also unfavorable, and that's why they maintain their underperformed rating with a target price of 240 rupees a share. The volume decline is something that Jefferies is worried about when it comes to Petronet.
There's one more from the oil and gas space, ONGC. And here as well, news is not so good. Citi has downgraded their rating and view on the stock. Sonal, tell us more.
Well, remember, ONGC was one stock which was seeing a lot of valuation comfort, and most of the brokerages were positive on the stock as well. But now Citi has downgraded the stock. They say that oil prices below $75 per barrel. That is something which investors should worry about when it comes to ONGC, because earnings of ONGC would be the most impacted because of that. So they have downgraded the stock to a neutral right now, and the net crude realizations for the stock have averaged to around $75 per barrel since the last 2 years. This is since the application of windfall taxes. But crude's recent breach of this threshold poses downside risk to earnings because they've been able to maintain it around those levels, but that would not be the case going forward according to Citi. That's why they've lowered EPS by 7% on lower crude price assumption of around $70 per barrel. Citi is not bullish on crude prices going forward, and they say since the stock is already outperformed 38% year to date, they do not see more valuation comfort as well. They have a target price of 330 with a neutral rating on the stock.
All right. Thanks very much, Sonal, for that. So that's essentially, some news coming in from the oil and gas space. Well, on the other hand, you've got oil marketing companies, right? HP, BP, IOC, where a drop in oil prices, crude oil prices, does provide a bit of a lift. Although there is a fair bit of talk now whether the government actually will go ahead and sort of pass on the benefit by lowering fuel prices at the pump, or will it actually, exercise their option to change excise duties on petrol and diesel? So we'll have to see what they do. At the end of the day, will the company get to make more money in terms of marketing margin, etc., or will it be passed on to the end consumer? Deepan, I know you're not a big fan, if I'm correct, if my memory serves me right. But any thoughts here?
Yeah, I'm not a big fan of oil or gas. Your memory does serve you right. I mean, we have to focus our energies on finding good quality stocks, great businesses, multi-bagger stocks, potential multi-bagger stocks. You don't want to get stuck in all these commodity plays. And whether it's ONGC or the oil marketing companies, there's always a lot of noise around them, so they do capture the headlines and they do get your attention from time to time. But look, you take 5, 10, 15, 20-year type of returns for these companies and they are negligible, maybe even negative, I'm not sure. So I just don't waste my time looking at these companies at all. There could be good trading opportunities. I agree with that. You may follow the charts. Some positive news flow may come. These stocks may rally. In fact, if you're a contrarian player, times like this are good entry points also for oil marketing companies and ONGC as well. But look, end of the day, they're not great wealth creators. And if you're looking at steady secular growth companies, these are best to be avoided. And there are a lot of uncertainties around these businesses. So that's the reason I don't look at them very closely.
I'm looking at the HP, Hindustan, you said long-term, Hindustan Petro was, in 1994, it was 40 bucks. It's at 400 bucks today. So...
Well, that's after how many years?
Yeah, I mean, at the point, 30 years, right? So it's like...
30 years.
I mean, I think you've had stocks go up 10 times in 5 years. I mean, anyway, but there are diehard fans, and you know that, right? I mean, many who
Yes,
kind of look
course,
at this space very closely. There are. Now, Deepan, so where are these, multi-bagger opportunities, or actually things which can compound, essentially? That's what you meant.
Yeah, that's right.
The market opportunity is good, and there are good moat, etc. Do you own any of these jewelry names? We spoke with Senco, and that's what struck me. They're entering newer sort of adjacent areas to jewelry, fashion and lifestyle and things like that. I don't know if you own any of those or have a view on Senco.
No, Prashant, nothing on Senco, but with great deal of disclosure that we are, we have ownership of this particular stock. One company we could discuss, it's rarely discussed on CNBC, is Goldium. And you can see the price movement has been spectacular over the past month or so. It is one of India's largest lab-grown diamond exporter of jewelry. And completely backward integrated. They manufacture their own lab-grown diamonds as well. And they are now in the process of setting up a retail chain purely for lab-grown jewelry. Now, globally, lab-grown jewelry has really taken the entire industry by storm. By some estimates, 50% of the jewelry in US is lab-grown. In India, it's just a minuscule portion. And that's bound to change as more and more of the consumers look for lab-grown diamonds in their jewelry. So it's one company which has got good potential. I think valuations are reasonable. It's not a recommendation, but certainly one could look at this stock in positive light with a longer-term view. So within the jewelry space, I think there's one business which has a slightly distinct and different business model.
You own it, so that's a disclosure. By the way, it's doubled this year. Actually, it's not doubled this year. That's wrong. It is doubled this year, but that is only half the truth because it is doubled in August.
That's so. Right. I think very good order book position also. That's what's driven the sentiment in the stock.
Yeah, 160 in July, and the high in August was 355 or so. But what a P multiple? Where is it trading at now? And what are margins, etc. like?
About 30 times or so trading. 12 months is my estimate. And this business can compound at 15-20% easily, top line, bottom line. Only risk factor is that the prices of diamonds keep on going down, the lab-grown diamonds. So there could be inventory challenges over there. But it's an asset-light business model, a proven track record, a lot of cash on the balance sheet, decent return ratios, online presence as well. So this is one company that, as I again mentioned, we are invested in it. And again, it's not a recommendation, but we're talking about jewelry stocks. And I just thought that it's worth mentioning that a company like this could be on a rising star instead of the likes of Senco Gold or some of the other companies, which have already established a kind of a network and are now trading at rich multiples. They have also, have their set of challenges because of competitiveness in the Indian jewelry industry. Titan certainly is facing the challenges from these companies. So let's looking for something different in the entire space.
And they sell directly to consumers or wholesale? I mean,
no, the online channel sells to the consumer, but then large portion of the sales come from large jewelry chains in the US.
Okay, all right, fair enough.
Just last week got an order from some US customers amounting to 70 crore rupees. So that's pushed up the order book, but it's a small company, 3,700 crore in market capitalization after the stock has doubled. But by the way, in some good news for the traditional gold jewelry companies, Crystal has come out with a note where they're saying that gold jewelers' retail revenues are likely to go up by 22 to 25% this year, which is higher than their earlier assessment of 17 to 19%. And again, they're echoing what Senco said, this budget cut of import duty on gold has actually boosted demand significantly. So now they're saying that organized players, and they surveyed nearly 58 of them, and they're saying that the gold demand is going to be 22 to 25% higher than what they had earlier anticipated at the beginning of the year. But Mangalam is now joining in. In fact, the entire consumption basket is higher. You've got names like HUL, Tata Consumer, Britannia, ITC across the board. Big gains. Mangalam, what's happening?
Well, what's happening a lot when it comes to consumer stocks. Some specific news and then some general news as well. For HUL, you know, the big news is that over the weekend they went ahead and told the exchanges that they've gone ahead and constituted a committee to evaluate the way forward for the ice cream business. Remember, the parent entity Unilever had announced a decision to spin off their ice cream business by end 2025 itself. And in light of that, Rohit Jawa has told CNBC TV18 multiple times that they are evaluating all options for the ice cream business, and they will do that within the timelines announced by the parent entity itself. The ice cream business accounts for nearly 3 to 4% of the overall revenue of the company. Remember, in the first quarter, in July itself, the company has gone ahead and, you know, approved the sale of their water purification business, Pureit, for about 600 crores as well. So that's about a 2 times sales sort of multiple that this business got. Britannia, on the other hand, is gaining on the back of getting all the approvals for increasing capacity and capex at their Ranjangaon plant. So that helps them further as well. And some other consumer stocks which are buzzing, in addition to what you already mentioned, you know, the likes of Godrej Consumer, Dabur, ITC, Marico. The key triggers to track for them now, as we are in September, just at the onset of the festive season, would be demand ahead of that. And secondly, you know, it's also nearly the end of monsoon, just about 15-20 days remaining. So post-monsoon pickup in rural is something that everyone is pinning their hopes on. And the fact that over the last 5 days or so, crude has been fairly benign is working further for the raw material situation. So all factors actually coming together for the FMCG pack, and these stocks are a buzz.
Thank you very much for that. HUL, Dipan?
No, again, a very stable company, very low growth rates, reasonably valued. A lot of the products which they are present in have reached maturity. Okay, they'll get a bump up because of higher rural sales, some up trading. But by and large, I think, you know, this is not a stock which can deliver outperformed or outsized returns going forward. So it's best to avoid. Within the FMCG space, again, look for smaller companies. I like what came out from Bikaji Foods, the recent listing. At correction, maybe 10-50% correction. Varun Beverages looks interesting. That also is a great rural play because they are expanding their distribution network in the rural area. As electrification has picked up over there, there is scope to put more refrigerators and therefore stock, you know, Pepsi over there. It's been a great performer over the past several years or so. So I think you have to try and find niches within the FMCG play. The larger companies, the likes of Nestle, HUL, Godrej Consumer, I think Dabur, they are more or less, I think, stable performers. In they can protect your capital, but I'm not sure that they are growth stocks anymore.
Okay, no, I got that. You know, just a quick look at what else is happening right now in the market. So actually, you know, I'm looking at, I've sorted the screen based on the big volume-led gainers. There's a lot of stuff, but I can't. So, for example, I'll give you a sense. PC Jeweler is a top volume-led gainer today, right? There is, of course, Goldium, which Deepan mentioned. Humongous volumes on Goldium as well. Okay. Premier Energies, of course, continues to move higher, 7.5% on that one. Jubilant Pharma is up about 9%. That's a very large gain. Moripun Laboratories is up about 5.5%. Ecos Mobility, which is, again, recent listing from last week, is up another 6% this afternoon. EPAC is up 6%. Tribhuvandas is up about 16%. That is Tribhuvandas Zaveri, one of the oldest players. Hikal is up 8%. La Opala 6.5%. You know, you got so yeah. I mean, go down the list, you'll find more, and it's not a sort of small volume, low volume kind of a day. There's enough happening. This Premier Energy, Deepan, did you look at the company closely and did you participate?
Yeah, Prashant, very interesting. And we're so nice to see so many such interesting, good quality businesses getting listed in this bull market, and certainly will provide a lot of variety going forward. A great business to own, I think, good long-term secular growth story. The capex cycle anyway is picking up, and we like a lot of stocks in the capital goods space, and something to do with renewables certainly catches our eye. Recent order win has been impressive. Overall order book position also is very good. Just that stock is slightly expensive. It's a new listing, so it's bound to have a lot of interest, a lot of high volume, high deal of speculative activity as well. But I think 3 to 6 months down the line, after a couple of quarters are reported by the company, and it's available at a reasonable valuation, a PEG multiple of around 1.5 to 2 times or so, I think that would be a good entry point. But it's a company worth keeping on your radar. And there are so few players, who are doing the type of product and projects which this company does. And the way the entire renewable energy business is shaping up, and the fact that they're an established player certainly means that they'll trade at a premium.
All right. We'll leave it there, Deepan. Thank you very much for joining us. Appreciate it. We'll take a quick commercial break here. First on the program, we're going to come back. We'll have Amit Gupta, Senior Vice President and Fund Manager at ICICI Securities, PMS, speaking with us on the other side. Stay tuned.
To stop the war.
It is making us traumatized, and it is very difficult us to study.
We have heard that there is a drop of bomb in the village of Meiteis.
People are getting being like a monster.
This is a very critical situation for Meitei community. We, all the students of to stop the war to stop the prevailing situations in Manipur, and we have heard that there is a drop of bomb in the village of Meiteis, and this is a very critical situation for Meitei community. And for the students of HRD Academy, from the students of HRD Academy, I would like to say that our minds have been distracted from this all situations and all. So we would like to stop this.
We want to stop all the wars that is happening between Meitei and Kuki tribes, and it is making us traumatized, and it is very difficult us to study, and then people are getting being like a monster, and we don't want that. So we are just making a human change on that. On behalf of that, all our HRD students are here to make human change.
Welcome back. The Nifty is now back above 24,900. Banks are leading the charge on the way up. The Nifty banking index is now up over 1%, outperforming. And even the PSU banks, which were under pressure, are now showing some signs and trying to get back into the green. So pull up a Bank of Baroda, pull up a State Bank of India. These are stocks which are now back in the green after trading with cuts of nearly 1.5%. And in the frontline pack, it continues to be ICICI Bank. So that's the top gainer in the banking pack in the large cap banking space with a gain of more than 2%. Kotak Mahindra Bank is looking smart. Axis Bank, HDFC Bank too have seen an intraday pullback. But one sector which continues to remain under pressure, not just today, but over the last couple of days, have been the PSU stocks. The Nifty CPSE index is down nearly 7.5% this month and 10.5% gone compared to its recent high. Hormus joins in with a quick analysis of how individual stocks have fared. Hormus.
There's been this silent sell-off within the PSU space that nobody has been talking about, because they were talking about the PSUs all the way through when they were moving, at record highs every single day. But the PSU index, the PSC index, made a record high of around 11,800 on the 1st of August, and since then the index has given up almost 8.5% in just about a month or so. And since there are a lot of these sectors within the PSU basket, the high-flying ones that start off with the railways, of course, the rail PSUs, almost look at these names: IRFC, RVNL, IRCON, Realtel. Almost all of them have corrected anywhere between 15% to 30% from their record high levels. So this is the kind of correction that you've seen. Of course, these stocks have moved up 3x, 4x over the last 1 year. So these, even after that, they have corrected almost 15 to 30% from their record highs. Even the defense names, be it HAL, BEL or Bharat Dynamics, have seen a correction of anywhere between 19 to 20% to even 30% for Bharat Dynamics from their record high levels. Now within the shipbuilders, shipbuilders were the ones that were very talked about in the month of July and also towards the month of August to a certain extent. They topped out in the month of July for the time being. Mazagon Dock, Cochin Shipyard, Garden Reach, all of them made record highs in that month of July, and since then have corrected anywhere between 25% to as much as 40% when it comes to Cochin Shipyard. Metal PSUs as well, SAIL, NMDC, have seen corrections of anywhere up to 30% from their peak levels. And even the power PSUs, be it REC, PFC, they are the ones leading the losses today, down almost 10 to 20% from their peaks. Now, excuse me. Now, these PSUs, brokerages too, are erring on the side of caution. Citi downgraded ONGC recently. Goldman Sachs downgraded SBI on Friday, and Morgan Stanley too says that it is veering away from PSU banks towards the private players, and it has cut price targets for SBI, Bank of Baroda, PNB, Canara Bank and Bank of India. So overall, the silent PSU sell-off continues, but people looking to find some value at the lower levels.
Absolutely. Hormuz, thank you for that. Amit Gupta is with us, Senior VP and Fund Manager at ICICI Securities, PMS. Amit, good to have you with us here. Good afternoon. You heard that summary from Hormuz on PSUs. I just wanted your thoughts. I think you own BDL, right? Bharat Dynamics in your portfolio.
So we had a higher portion actually of the PSUs in our portfolio, and for the last 1.5 years, and we have made good money also there. I mean, when you buy a stock, you don't expect it to getting double actually so soon, but it has happened in the case of PSUs. And so we have trimmed down our positions now. If you look at, we had almost 35% weight. Now we have brought it down to 20% in our portfolio. And we believe that going forward, some new sectors are emerging now. And I think that is where we need to focus. Those which were not performing in the last 2 years or 3 years, I think that is where the market is shifting. This is a tactical shift, but we need to definitely participate into that tactical shift also. So PSU as a space, I'm not saying that the whole stream is going to go away, but they may definitely enter into some time correction. It's a primary trend, but it will pick up after some time only. I think the way state elections also are going on, and we have seen some kind of freebies also being given over there, that will also have its toll actually on the PSU stocks. And I think the rainfall and all, I mean, it was good. So some consumer names, if they have to participate, money may not go out. Money may move from one sector, this particular theme, to another theme, which is going to happen now.
Amit, afternoon. So from here on, would you look to further bring down your PSU exposure from the current 20% or keep it at these levels?
So far we are keeping it at these levels. We have already booked some profits, and I think we are just looking for the fresh allocation now in this particular volatility going forward.
Allocation to PSUs and which other sectors you said in terms of a sectoral rotation?
Yeah, so basically if you look at the sectors like technology, right, rural related segments, consumer segments, textiles, sugar related segments, I think that is where we need to shift our money now, because I think they were not participating before. Some of the pharma names can still participate because still there is a drug shortage in US. And I think all of these segments, they are not so called high beta segments, but definitely the money allocation is going on, I think now in these sectors. So that is where we are focusing.
And in technology, is it large cap, mid cap? Is it the ER&D players?
Yeah, sure. So I think among the large cap also, if a company is focusing more into ER&D, I think they are definitely going to be a beneficiary. It is not only a game of only IT services now. You have to be into products and services. You have to be there in ER&D to garner, I think, more attraction. So that is what, SCL Tech is also doing. SCL Tech over the period has started outperforming Infosys and TCS on a relative, performance basis. And it is happening just because they have moved more into ER&D segments also. If you see in the automobile, previously we used to have only 10% of softwares used, but now it has gone to 26%. And going forward, it will be 55, 58% also of the softwares used in automobiles. So I think that is how the markets are moving. And that is what the companies also have to be well equipped. Yes, on artificial intelligence, all of them are working. In fact, their clients themselves are asking them to come out with an AI tool. So for example, if a company is catering to any pharma, the segment. So the clients, they are asking for AI tool for the clinical trials, etc. So I think they have to work on AI. It's a challenge, we understand, but they have already started. And you need to look at the history. Whenever any new technology comes, initially there is some volatility, but slowly, because ultimately our companies are selling that technology or going to sell the technology at a cheaper rate, they get benefit. And they understand the technology also very fast. So I think this is the benefit which goes to Indian IT companies eventually. And when the interest rate cut cycle is going to start, I think the valuation derating also should stop somewhere.
Got that. By the way, the market's up 70 points. So, it was up 20 when we started in the program. It's added on quite a bit more. Very, very quickly. And of course, banks are the ones, the large banks are the ones which are doing the heavy lifting. From being up 0.8, you got about 1.2% kind of gains in the Nifty Bank. I mean, the leaders here, of course, are the ICICI Banks of the world. ICICI Bank is up a full 2.5%. Kotak is up about 1.5%. IndusInd is up 1.33%. There is Axis, which is up about 1.25%. Out of the financials, Amit, what do you own?
So we have, some of the PSU stocks also. For example, SBI is very much part of our portfolio. And so we own this because we don't expect too much of downside also. So if the downsides are coming in some of the PSUs, I don't think that kind of significant move is going to come on the downside in the PSU banks. Because if you see what has happened, the loan to deposit ratio in the PSU banks is much lower than the private banks right now. So SBI has somewhere around 66, 67%, and RBI has laid out a range around 80% that they can bring it down. They can bring it up to 80%, but those who have higher LDR, they have to bring it down. And that's why if you look at the results recently in HDFC Bank also, they were selling some of the loan book to bring it down. And that's a positive actually with the PSU banks. I think going forward, the only thing is when you are bringing your 66% to 80%, you need more capital, and that's why you increase the FD rates also. And that is the reason the PSU banks have higher FD rates recently than the private banks in some of the cases. And I think that was coming as some of the pressure in the near term. But I think the interest rate cut going forward, NIMs getting shrunk, those things are factored in the price now and will get factored with some more time correction, and that's all.
JSPL is one of your top calls, top recommendations. What is it that you like about JSPL, which makes it attractive over the longer term?
So in fact, we have recently added some positions when the stock had corrected, because it is Jindal Steel and Power, actually. It is JSPL. Because if you look at from the efficiency perspective, we have seen one of the best efficiency coming back into this particular stock. The metal prices are already lower now in anticipation of some of the slowdown in the global economy. But I tell you one thing, we are in the financial markets. I still remember in 2021, the bond yield spread in US had gone negative, and it was factoring that the slowness is going to come in the US economy going forward. So once the financial market, the debt market had factored that particular thing, and then equity markets for 2 years in US were reeling down, and then they recovered, I don't think we should again talk about too much of slowness in the US economy now. So rates cuts are coming, and if the economies remain resilient, what we are seeing currently, I think some of the metal revival can also be seen. And the kind of weakness in China and their impact on metal prices, I think to some extent it is already getting factored now at these prices. So that's why we feel that going forward, the companies which are getting the mines, so JSPL is getting the mines. So the captive part also is coming up, which will give them benefit of the raw material cost also. And that's why their efficiency, which has already recovered much better, their debt to equity had declined from almost 4 times to now 0.1 point something. And so from that front, I think we have a much higher target for the stock going forward. It can take some time here, but eventually the downside does not seem to be too much now.
All right, Amit, we'll leave it there. Thank you very much for joining us. It's a pleasure. Thank you for taking out the time here on CNBC TV18. I think we're going to take another quick commercial break with news that the Nifty is up 70 points. We're at about 24,922. Well, let's focus on, Religare. Now, this is in a way, a special situation stock because there is this corporate battle which is brewing between the Burmans of the Dabur family and the Religare management and the board. Now, Religare, the Burmans of Dabur already own, about 25% in the company, in Religare already, and they have an open offer which is out there for Religare. The existing management of Religare, led by Rashmi Saluja, who's the executive chairperson, has been, of course, in a way fighting this. They've been sort of complaints made and there have been sort of, all sorts of things which have sort of been exchanged. Now this has turned a bit of a surprising angle. The Enforcement Directorate has filed a complaint against Rashmi Saluja, Nitin Agarwal and Nishant Singhal. My colleague Santya is with us now to tell us what exactly has led to this. Santya, take it away.
So Prashant, this acquisition battle has taken another interesting turn, and now Enforcement Directorate has filed an FIR with the Mumbai police where the ED has accused Rashmi Saluja, Nitin Agarwal and Nishant Singhal of criminal conspiracy and cheating. These are the sections. Now, what is ED's case? ED says that Rashmi Saluja and the other two accused gave money and asked a complainant to file an FIR against the Burman brothers in order to block the whole takeover. Now, it was in November last year that a man called Vaibhav Gavli, who claimed to be a shareholder of Religare, approached Mumbai police and filed an FIR of financial irregularities against Burman brothers. And he said that the act of Burman brothers have caused huge financial losses to the shareholders. So, ED's also started investigating the money laundering allegations which surfaced in its investigation, and this is what ED's FIR says, that in its investigation, ED found that the complainant was not genuine. Now, the case which ED has filed, ED officer in his statement has said that when ED recorded the statement of Vaibhav Gavli, he said that he was asked to file this FIR. He filed the FIR on instructions of Rashmi Saluja, Nitin Agarwal and Nishant Singhal. He was paid 2 lakh rupees. He was asked to buy shares worth rupees 1,20,000 Religare shares, and remaining 80,000 he was asked to keep it with himself for filing the FIR. That's why he filed the FIR, and he in his statement to ED has said that this was done by Rashmi Saluja and others in order to block the takeover, because once again I'm quoting from the FIR which has been filed by ED. According to this complainant, Rashmi Saluja was diverting funds from Religare and its subsidiaries in the form of ESOPs, and she wanted to continue enjoying these benefits, and she was afraid that after the takeover that might not be possible, hence the whole thing was done. So ED's cases of criminal conspiracy and cheating against Rashmi Saluja and others, and in fact last month ED froze assets worth 120 crore rupees of CHIL, which according to ED was held in Rashmi Saluja, Agarwal and Singhal's accounts in the forms of ESOP. Now ED is expected to take this case further because ED is already investigating a money laundering case pertaining to Religare. Prashant.
Okay, Santya, thank you very much for that. So, you don't get across this kind of news item very often, but this is what is happening at this point in time. So, ED filing a complaint against Rashmi Saluja and 2 others for instigating what they say is essentially a false complaint. So that is the latest. Stock actually is moving up about 3.5% now at about 286, 287 at this point in time. We'll take a quick commercial break here. We'll come back. We'll get you a check on what's happening in dealing rooms with D Street Chatter. We'll, of course, get you some buy today, sell tomorrow trades with the technical experts as well. Stay tuned.
If we go back when I was started just about 12 years ago, the per capita consumption in India was as low as beauty and personal care was as low as $6. And today we are at about $15 per capita. And even this, for our income level, is below where we should be. Countries with similar income levels, to answer your question, have per capita consumption which is 3 to 4 times. So they are already at somewhere around $45 per capita. So India is below on beauty consumption habit, and that's where Nykaa always felt that education and social media is also helping a lot, but education at scale is the way to kind of bring more consumers into beauty consumption, and that is happening very rapidly.
Okay, welcome back. There's 30 minutes to go, 20 minutes to go for the market closing. Time for our segment, D Street Chatter. Nimish is here with what's happening in dealing rooms and what he's picking up. Nimish, what's on your list today?
Hi Prashant, not a bad outcome given the weak global cues. So the Nifty sitting in the green, the Bank Nifty is in the green, and even from a flow perspective, it's not like very aggressive selling. Yes, there is selling basket, but that's largely on the PSU names, especially the power PSUs, where I understand there is aggressive selling from the larger FIs. So that's one pocket which is seeing some bit of selling pressure today. Even the broader markets are relatively under pressure. The midcap index is down 0.5%, and the advanced decline is close to 1:2 on the sell side. But even within the mid-caps, there are some notable gainers as well, and those are buzzing on large volumes. So it's a kind of a mixed day, so to speak, from a flow perspective and from a market perspective as well. I guess technically 24,800 is a very crucial support on the downside. If that gets taken out, then you could see a very sharp correction. That's the technical feedback. But broadly, we've seen some support around those levels even in today's market. So it looks like that's a level to watch. But from a market point of view, it's not a bad outcome given the weak global cues.
Nimesh, hi. What about individual stocks?
Well, so a lot of individual names are buzzing in the broader markets as well. The first name is Electrosteel Casting. There was a large block in morning trade and the stock is recovered after that. 1.1 crore shares got changed hands. I understand a leading FI investor was a seller in today's block and some domestic mutual funds were buyers. So the disclosure will be quite interesting. And I was looking at the data, the FIs in total owns close to 20% in Electrosteel Casting. So the disclosures will be interesting there. The second name is Vodafone Idea. Under pressure for second day running, we saw a big cut on Friday after the Goldman note. The volumes are on the higher side. Interestingly, I understand in the last couple of days, some large H1 investors have aggressively bought, and also there is a buzz of some a small creeping done by the promoter entities as well. So that part would be quite interesting if there is a disclosure from the managements in the days to come on creeping acquisitions. So that is something to track in Vodafone Idea. The third name is Paytm. Big move on that name as well. Large volumes even in today's market. I've been highlighting for the last few days that there could be a large block very soon. But now I understand the entire block could be bought by a single strategic investor. So again, the block deal in Paytm is something interesting to track going forward. And the last couple of stocks where I understand there could be large blocks very soon. So DCX Systems and Aster DM. These are the two names in the mid cap where there is an indication that it could be blocks coming very soon.
Thank you very much for that. Vodafone Idea's recent high was over 19 rupees that it hit, I think, in June, towards the end of June. And now the stock is at 13 rupees. So it slipped close to about 35% from its recent high of 19 rupees plus. Mitesh is now back with us for a few BTST calls. Mitesh?
Actually, I have one BTSC and one STBT. STBT on granules. I think, after some kind of rally and a strong up move, there are first signs of profit booking over here. Take a stop at about levels of 672 and look for a target around 650, 652 for tomorrow. And Shriram Finance is something which has been a recommendation earlier. Now is a BTSC kind of a call. Keep a stop below 1525. Look for a target of 1555, 60 for tomorrow.
Okay, all right. Mitesh, thank you very much for that. So individual trades and focus. Let's bring in Yash now. Let's talk about the life insurance business data for the month of August and how they look. Yash is here with details and how companies have done. Yash, over to you.
Well, Prashant, it's been strong growth for the industry in the month of August, but this time around the growth has largely been led by the largest life insurance company, that is LIC. Private growth in the month of August seems to have slowed down to about mid-single digits or thereabouts. To start with individual companies, for HDFC Life, it's a strong growth which has come on it's a slow growth rather, which has come on a strong base. August premium grew by just about 4%, 5 months FY25 premium growing at 12%, total APE growing at 8%, retail APE growing at 10% so far in FY25. ICICI Prudential, it's a moderate growth over weak base. August premium growing at 12%. For the first 5 months of FY25, the growth in the premium stands at 17%. The total APE growth stands at 21%, and August retail APE stands at 29%. Max Life Insurance, very, very strong growth. We saw that in the previous month as well. And August, again, it's a very strong growth over a strong base which the company had to grow on. August premium up 17%. First 5 months, the premium growth stands at 16%. August total AP growth of 17%. August retail AP growth of 20%. SBI Life Insurance, it's a weak growth for the company, but over a strong base. So August premium is down 13%. For the first 5 months, premium is down 5%. August total AP contraction of about 2%. Retail AP, though, has managed to grow by about 4% in the month of August. Finally, LIC, as I said, driving large part of the industry growth in the month of August. So August premium growing at 22%. For the first 5 months, the growth stands at 28%. The total AP has grown by about 13% in the month of August. Though retail AP has seen a very, very small growth of just about 100 basis points over a base of 3% growth in August 2023.
All right, Yash, thank you very much for that. So that is the insurance data for the month of August as it comes through. Siddharth Khemka is with us at Motilal Oswal Financial Services. Sid, good to have you with us here on closing. Thank you for your time. You saw the numbers, life insurance. Stocks have done well. I mean, it's not a very high beta sector or anything, but slow and steady. And this year has been so far pretty good.
Yeah, Prashant, I think if you look at the overall insurance space after the COVID, they were under pressure because of both slowdown in the overall business growth plus the high claim ratios impacting the margins. I think last few quarters, we have seen that improvement coming back into the insurance space, both for the life as well as the general insurance space. And on back of the growth, some of the stocks have started doing well. Another factor is that some of these insurance companies were trading at very high valuation, which after the consolidation post-pandemic became attractive. We recently upgraded HDFC Life from neutral to buy. SBI Life has been something that we have been liking a lot from from a long time, and that continues to be our preferred pick. LIC post-listing after the correction again has been gaining market share and has been reporting strong growth both in terms of new business as well as margins. On back of that, we are expecting LIC return ratios to improve from about so if you look at ROEs are increasing to about double digit, and that is also helping with the low valuation that the stock is trading at. So within the life space, we like HDFC Life, SBI Life, and LIC. And within the general insurance space, we like ICICI Lombard. It has been a market leader with a very steady growth. The growth is only going to pick up. So FY24, Lombard had an earnings growth of just 11%. Next 2 years, we are forecasting about 25 to 30% earnings growth. Valuations, although a bit on the higher side, but we believe that with growth improving, the valuation catch-up would continue to happen.
Siddharth, hi. Gold jewelers are in focus today. We had a chat with Senco, and they also said they're positively surprised by the kind of uptick that we've seen in August and September since the beginning of the festive season. And as the budget, the cut in import duty plays out, so demand has been very, very robust. Which one would be your top pick? Earlier today, Dipan was telling us that Goldium International is a stock that he's looking at. So at Motilal Oswal, which one are you pushing?
Yeah, Rima, hi. So I think, yes, the bonanza, you can say the budget bonanza for gold jewelers with the government cutting the rates have been very positive. We saw Q1 numbers where while Titan reported a steady quarter, sharp outperformance was seen from the likes of Kalyan, Senco, which reported, so Kalyan reported almost 30% growth, which was much higher than the 14-15% growth reported by Titan. While Titan continues to be a steady compounder where we believe that 15 to 20% earnings growth would happen for the next 3-4 years, in the near term, what we believe is, what we like is both Kalyan Jewellers as well as Senco, both of which are in the mid-cap space. We believe the outperformance will continue in terms of earnings growth. So for Kalyan, we are forecasting almost 45% earnings growth for FY25 and about 35% earnings growth in FY26. And valuation-wise, it definitely trades at a discount to the market leader, which is Titan, which has consistently traded at premium valuation. Even if you look at for a Senco Gold, we have a buy rating and a target price of about 1350. The earnings growth would be in excess of 30% for the next 2 years, and PE-wise, it is trading at about 30 times FY26 compared to Titan, which is almost like say 64-70 times on FY26.
Siddharth, do stay on. We need to slip into a very short break, but as we do that, let's listen in to Vetri Subramaniam, Chief Investment Officer of UTI Asset Management Company, on how he feels about the market and what is the best approach.
As a capital market participant, I'm happy that capital formation is well and truly underway, but I don't think this is a one-dimensional, perspective that we should be keeping. There is a massive supply of flow which is coming through from promoters, from new issuances, as well as from, strategic holders, including Ps and VCs. So, every day you're flooded with a new set of either block offers happening in the marketplace, or QIPs, or OFS, or IPOs. So it's a very hectic market, and that's the reality of it. So if you look at our multi-asset allocation fund, our net equity exposure can come down to a minimum of 20. It can go up to a maximum of 80%. Currently, we are less than at the halfway mark at about 45%. So in a way, it is an underweight equity stance in the context of asset allocation that we make in that scheme. In terms of sectors which are attractive, honestly, there's only one sector top-down that we find reasonably attractive at this point of time. It's a combination of above average fundamentals with below average valuations, and that, roughly speaking, is the banking and financial services sector. So though that's the one sector where I have absolute comfort.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats.
Welcome back. It's now approaching a 200-point recovery from the day's low as the Nifty now stands pat at 24,950, a near 100-point gain on the Nifty with the Sensex up close to about 400 points. In conversation with Siddharth Khemka. Siddharth, any other stocks that you would like to recommend to our viewers?
Yeah, so I think in this volatile environment, while today we have seen a good recovery, if some of the defensive sectors like the consumer space, FMCG has done well with monsoon being above normal so far, and a lot of management commentaries talking about how the rural sector growth has now come back and has been better than the urban growth. So what we like within the overall consumption space is Godrej Consumer. We have a buy rating and a target price of 1700. What we like is that GCPL has adopted a growth-oriented strategy, which includes acquisitions, cross-selling, entering new segments, and expanding its TAM, which is your addressable market for existing products. We are targeting a high single-digit volume growth in FY25 in India, and some of its global markets have also started recovering and reporting better numbers. So on its own, what we are seeing is one of the strongest earnings growth amongst its peers for Godrej Consumer, and we are expecting a PAT CAGR of 18% with margins expanding by 100 basis points over the next 2 years. So we recommend buy on Godrej Consumer Products Limited.
This Viatech Vabag, is this a stock that you look at? It's been zooming every single day. Last week, it won a very large desalination order worth 2,700 crore rupees from Saudi Water Authority. Since then, the stock has been zooming. But year to date, it's up 120%. In the last 1 year, it's gone up nearly 200%. Viatech Vabag.
So, Rima, we have not looked at Vabag not under coverage, but that entire theme of recycling and the environmental friendly sectors have been doing well. we looked at one company from that space, which is Gravita India, which is a key player in the growing recycling industry, especially with the growth in the EVs. We are seeing a lot of focus on recycling of lead, which is almost 90% of Gravita India's revenue. We believe that growth would continue for such sector space, and Gravita is also expanding its capacities, incurring a capex to double capacity over the next 3 years with a strong growth, earnings growth of 30%. We are positive on Gravita, which is a recycling of lead business.
Now, I think there's 2 minutes to go for close. Sid, thank you for joining us, and thanks for staying with us. But we'll come back to you for more a little later. I just want to start wrapping up things. We'll end up 100 points. So 25,950 is where we will close at. The low today is 24,753. So that's a 200-point recovery, clean 200-point recovery from the day's lowest level. It's just quite incredible. I mean, whichever way you look at it, I think just a remarkable sort of recovery from the day's low. It's 1/3% day on day, but from the day's low, it is very, very nice. I mean, 1% rally from the day on day on the Nifty Bank. The low on the Nifty Bank was 50,370, and we leave off at 51,095. So about 500-600 point recovery from the day's low on the Nifty Bank as well. I mean, I think PSUs perhaps were one area which were a little under pressure, but you enough working on the upside as well. Private financials, one, FMCG, and the entire consumer basket, another, which participated on the upside. Rima.
Europe is, by the way, picking up. So the CAC and the DAX, both of them are up nearly 0.8, 0.9% as they begin trade for this week. So they've shrugged off the red across the Asia-Pacific region, but Europe has been higher. FMCG and banks lead from the front. The Nifty FMCG index up 2%. Banks outperform a gain of nearly 1%. Individual stocks, HUL, Shriram Finance. On Shriram Finance, there was a UBS target price increase. ICICI Bank, ITC, Britannia, Kotak Mahindra Bank. So the top gainers all belong to banks and the consumer sector. On the way down, ONGC under pressure. There was a Citi note, Tech Mahindra, BPCL, Tata Steel, Hindalco, NTPC, amongst the other notable stocks ending in the red. We will wrap up on closing bell on that note, but don't go anywhere because on the other side, the short commercial break is our special markets forward. We'll prep you up for tomorrow.
And award-winning business journalism. On air. Online. On social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Bounces off lows to end a volatile session near the day's high. It's a 200-point recovery from the day's low for the Nifty. Broader markets remain under pressure. FMCG, consumer names, banks lead while oil and gas and IT stocks slip.
FMCG stocks lead from the front, led by HUL, which has constituted an independent committee to chart out the future of its ice cream business. Demand at the onset of the festive season and post-monsoon pickup in rural have boosted the other consumer stocks, while PSU stocks take a hit, with stocks falling anywhere between 10 to 40% from their recent peaks. The Nifty PSE index is now down over 8% from the recent high hit on the 1st of August.
The Enforcement Directorate files a case against Relegate's Rashmi Saluja and other top officials. The ED accuses them of cheating and criminal conspiracy to block Burman Brothers from assuming ownership of Religare. Hello and welcome to a fresh new edition of Markets Forward, the program where we try and wrap everything which has happened today, but get you a list of things you need as we look forward to the next trading session. I'm Prashant. With me, my colleague Reema Tendulkar. Reema, hi.
Hi, it turned out to be a good close on, Monday, this trading session on Monday. But let's tell you what we have for you on our show. This is the show where we get you all the big news, key developments in the Lal Street, the top corporate voices, and the events to track ahead. Monday morning looked a little tense, challenging, but we've ended up pretty good, nearly 100 points higher.
200 off the lows, right?
Yeah.
So, the only thing one can of course, there's this buy, very, very strong bid, buy the dip, any dip, and that I think always has been the case. But on Friday, the market fell a little over 1%, right? And then the US fell about 2%, the S&P 1.5%, the NASDAQ a little bit more. Maybe, the market fell in advance here a little bit because on Friday there was a lot of head scratching which was going on, wondering why a 200-point fall on the Nifty. And I think sometimes, markets are collective wisdom, and what happened on Friday accounted for some of the damage that we saw in the US session. In any case, the market in the morning did look a little tricky. We opened lower and then through the course of the day kept moving higher and only picked up pace in the last 15-20 minutes of trade. So, as I said, almost 200 points. So 24,750 was the day's low, and we ended at about 24,950, 936 to be precise. Bank Nifty was the big mover, and about 1% plus gains on the Nifty Bank. It's starting to come to rescue on tricky days, and today was one of those days, although there has been lack of follow-through. There's been no day 2, day 3. We'll see if that changes. The Nifty Bank, by the way, ended above its 20-day moving average, which is 5,900. We left off at 51,100 plus. So that is good. The broader market was, there were more down than up. If you just counted the number of stocks which were trading, there was more red than green. But I must say, and I think Hormuz will put the spotlight on the action. I think if you just look at the volume-led action, I think you've got to give it to the bulls because they came out winners once again, even though in an absolute numerical basis they were more down than what was up. Consumer was one kind of theme which we will talk more about, which looked good. All those jewelry stocks and FMCG names really shone through. Reema.
Well, the reason the advanced decline ratio was skewed in favor of the stocks declining was one, the midcap index ends down 0.25%, even though it did recover more than 1% from the day's low. And the small cap index was down nearly 1%. Remember last week we were talking about how small cap index was outperforming. But today, those tables have reversed. The small cap index was down 1%. In terms of sectoral action, FMCG leads from the front, 2% gain on that. Banks did well. The Nifty banking index was up 1%. On the way down, PSU struggled. The Nifty PSC index was the top sectoral loser, 1.5% lower. And you also had IT and metals under pressure, and both those indices cracking, perhaps given the weakness that we had in most of the global markets. But in the next 20 minutes, we'll also tell you about individual stocks. So the top movers and shakers, we'll discuss them with Hormus. Consumer stocks like HUL, Britannia, ITC, all buzzing in trade. So Mangalam will join in to tell us why stocks like Petronet, LNG and ONGC also declined on the back of brokerage notes. And finally, we'll prep you up for tomorrow with the key market events to watch out for. But first up, it's over to Hormus for the key movers and shakers. Hormus.
Well, the kind of start we had, you take this close any day with both hands, and leading that recovery, as you mentioned, was the Nifty Bank. Yes, the follow-up action is missing, but you take the gains that we saw on the banking index today. Leading the charge was ICICI Bank, that led the way down on Friday as well. But AU Small Finance Bank, Kotak, IndusInd all had a good day, as did HDFC Bank, and that, despite a 0.5% gain, has a substantial contribution to the gains in today's session. Now, another sector that did well today were the FMCG names, as you mentioned. Almost all constituents of the FMCG index ended higher today, be it United Spirits, United Breweries. HUL had a very good day, 3% higher for that stock. Dabur and Godrej Consumer also ending at the highest point of the day. Pharma had a good day as well in today's session. We're talking about broader market pain, but most of these sectors had a very good session. Look at Alembic Pharma, 9% higher. Jubilant Pharmova, another 8% today. Glenmark Life had a good day, as did Laurus Labs and Biocon as well, ending with substantial gains. But the sector that sees selling pressure and continues to do so in line with what happened last week were the PSUs, and the PSE index had another day in the red, and most of the constituents, barring a couple of them, ending with losses of anywhere between 3 to 4%, but some recovery from the lows of the day, but ending lower nonetheless. And lastly, some stocks that did well on the volumes front, and they'll come up on your screen. Look at Gujarat Fluoro, look at DOMS Industries, Aether Industries, JSW Energy, and Jupiter Wagons on the downside, ending 7% lower on very strong volumes. Back to you.
Okay, all right, Hormus, thank you very much for that. Siddharth Khemka of Motilal is with us, and Shilpa Raut of Prabhudas Leather is also with us. Thanks very much, both of you. One name was Paytm, and Nimesh was Nimesh will talk more about that on his D Street Chatter list. Stock moved up 20 rupees in the last 20 minutes of trade. Paytm today, maybe we'll have Nimesh talk about it, and then we'll ask for a quick opinion. Shilpa, why don't you run us through the price action? Where does it leave us today? Sharp bounce from the day's low.
Yes, Prashant, the move was actually quite convincing today, and it's a glad thing that 24,750 levels were quite supportive, and it was respected. So as long as we are holding 24,750 for Nifty, I believe we are still intact with the upside trend. Probably a little consolidation for a few days, and we might again see the upside move happening. For Bank Nifty also gave a good closing today. Closing above 51,000 was very crucial for the index, and it happened. So if we cross and sustain tomorrow 51,200 levels, then we will again be talking about levels of 51,800 to 52,000 very quickly.
Okay, that's the view on the markets and the way we perform. Let's take it down to the biggest sector of the day, and that's consumer. The Nifty FMCG index up 2%. Individual names, HUL rallied 3%. The company has announced that they're planning to evaluate the future of the ice cream business. Britannia, Dabur, ITC also gaining handsomely in trade. Mangalam joins in with the latest news flow. Mangalam.
Well, indeed, the consumer sector was the sector of the day. The FMCG sector actually hit a fresh record high as well. Some, which was news-based, which was specific, and about that, a lot of stocks were buzzing around on account of general reasons as well. So let's start with the specific news first. HUL, the board has constituted an independent committee to evaluate the future of its ice cream business. Remember, earlier in the year, Unilever, the parent, had said that they are looking to decide whether they should spin off their ice cream business or not by 2025. And Hindustan Unilever on its part has said that they will follow the timelines of the global parent itself. Remember, the first quarter itself, they had gone ahead and sold their water purifier business for about 600 crores. So the street is focused on some sort of deal brewing out here, and at the same time, the company focusing on its own core. Britannia, on the other hand, the company has gone ahead and received all the permissions required to go ahead and set up the capex in the Ranjangaon plant. So increased capacity also aids their business. But add to that, we saw big gains come by in names like Godrej Consumer, Dabur. We saw Imami and all the other FMCG stocks doing extremely well as well. And that was largely because, it's September right now. It's nearing the end of monsoon and the onset of festive season. So the street is pinning hopes on recovery in rural demand along with post-monsoon recovery coming by and ahead of festive season, like I said, too. More importantly, over the last 5 or 6 days, crude has been benign too, so that alleviates any sort of concerns with regards to raw material inflation, and that should aid margins of all the consumer companies going forward. So with all of this, a lot of sentiment positivity around the FMCG space, and that explained why it was the sector of the day.
Thank you very much for that. Siddharth, on this HUL announcement, if the demerger of the ice cream business does happen and the characteristics of ice cream are different from that of the other businesses, the products it sells in terms of seasonality, in terms of supply chain, etc. So if the demerger does go through or any sort of, a spin-off, is it material enough to cause a up move in the stock? How would you read the developments?
So, Rima, if you look at it's a 3 to 4% revenue contribution to overall HUL, and even a spin-off to that extent would be a small portion of the overall business. Yes, the business dynamics are different. The cold chain storage and the entire supply chain branding would be different. But nonetheless, markets do get excited about any value unlocking from a large house, especially the likes of HULs. If you see, the growth could be much higher than the core business, and hence valuation capturing the upside in the valuation post the demerger could also be much higher, given that the strong brand in the HUL's ice cream business model. So in terms of size, may not be that large, but in terms of opportunity and growth, that could be big.
No, absolutely. That's well said. Well, let's talk about some losers as well, right? You had Petronet and ONGC, both which were on the under pressure on the back of some brokerage notes. Sonal is here with what these notes said. Sonal, over to you.
Thank you for that. Let me start with Petronet LNG because there's a note coming in from Jefferies. Now remember, Petronet LNG saw good volumes. In the first quarter, we saw heat waves, and that's why power demand was high as well. But now Jefferies suggests that July volumes are 30% lower than the May peak that we had seen. And this is something which could be negative for Petronet. This is because gas demand power has cooled off from higher levels. Spot LNG prices are now more expensive, which makes it negative for Petronet LNG. Additionally, alternate fuels, they compared to gas are cheaper, and that's the reason why gas demand has been going down. Additionally, there is earnings momentum which is turning negative. There are capital allocation concerns with respect to their petrochemical plant, and recently the East Coast Terminal project, which could be medium-term drags according to Jefferies. Valuations are unfavorable after the 90% rally that we've seen since the month of November. That's why they maintain and underperform, and they also have a target price of 240 rupees a share. For ONGC, the crude price fall below that $75 per barrel mark is something that Citi is worried about. They say ONGC would be the most impacted. That's why they've downgraded the stock to a neutral. ONGC's net crude realizations, they have averaged around $75 a barrel since the time windfall taxes were levied. That would be around 2 years back. But now there's a possibility that crude could reach levels of $70 per barrel because Citi is bearish on crude oil prices from here on, and that's why they think ONGC's core earnings would be impacted. That's why they have lowered their FY26 consolidated EPS by 7% on lower crude price assumption at $70 per barrel. They have a target price of 330 rupees per share, and after the rally of around 38%, valuation comfort, that goes away. That's why they are bearish on the stock.
Thanks very much, Sonal, for that. That's Petronet and ONGC in focus. Shilpa, how do these stocks look? And anything else in the oil and gas space with the trade?
Petronet is actually a sell, and we have been recommending that. The stock is very, it has weakened below 370, so we have been giving a sell recommendation for the same. And from here, I believe it can still do 320 to 300 zones, and below 300, definitely you see much more, weakening happening, and the stock can test 270. ONGC, whereas has given a fresh breakdown now. So if a sell strategy can be given here, I believe ONGC is one place you can definitely look down here. With the stop loss of 310 from here, the targets of 270 to 260 is very much open.
Okay, all right, Shilpa, thank you very much for that. Let's talk about Religare now. There is this sort of war brewing between the Burman family, Dabur's Burman family, and of course the existing management at Religare, which is led by Rashmi Saluja, who's the executive chairperson. This has taken a sort of different turn now. The Enforcement Directorate has stepped in, filing a complaint against Ms. Saluja and some of the other top officials at Religare. Santhya is here with details. Santhya.
So yes, Prashant, the ongoing acquisition battle has become even more murkier now. Enforcement Directorate has stepped in and ED has actually filed an FIR for cheating and criminal conspiracy against Rashmi Saluja, Nitin Agarwal and Nishant Singhal. ED has accused these three of conspiring and filing an FIR against the Burman brothers to block the takeover. Now, last year in November, Mumbai police filed an FIR and the complainant was this guy called Vaibhav Gavli, who claimed to be a shareholder, and he accused Burman brothers of financial irregularities, which led to, according to this guy, huge financial losses for the shareholders. ED stepped in, ED started investigating money laundering cases. Now, ED has filed an FIR with Mumbai police, and its FIR, the ED officer has mentioned that during its investigation, the ED, the financial agency, took the statement of Gavli in which he said first he does not have a single document or evidence to prove his allegations against the Burman brothers. Second, he was asked by he filed a FIR on instructions of Rashmi Saluja, Nitin Agarwal and Nishant Singhal. He said that 10 to 15 days before buying the Religare shares, he was introduced to these three people and they gave him 2 lakh rupees, 1,20,000 to buy the Religare shares and remaining 80,000 for filing this FIR. In fact, according to ED, this person, Gavli, in his statement has said that this was done by Rashmi Saluja and others in order to block the takeover, so that because this is the allegation in the FIR that Rashmi Saluja and others were diverting the funds from Religare and its subsidiaries in the forms of ESOPs, and they wanted to continue enjoying these benefits, and that's why they filed this FIR, because they were afraid that once the takeover will be over, they might not be able to enjoy these benefits. So based on this, now ED has filed an FIR. What exactly is going to be ED's next step? That remains to be seen, but ED is also at the same time taking steps against Rashmi Saluja. In fact, last month they seized assets worth 120 crore rupees. They froze these assets, and according to ED, these assets were held in the accounts of Rashmi Saluja, Agarwal and Singhal in the form of ESOPs. So ED is investigating these allegations apart from the Mumbai police FIR. Prashant.
Thank you very much for that, Santhya. Moving on now, life insurance data for the month of August is also out. Yash joins in with the details. Yash.
Well, it's been a strong month for the life insurance industry, that is the month of August. But the growth this time around in the month of August has been driven by the largest life insurance company, that is LIC, whereas private life insurance companies have managed to post just around a mid-single-digit growth in the month of August. If I have to speak about individual companies, let's start with HDFC Life. The company witnessed a slow growth, but it had a strong base to work on. August premium for HDFC Life, that grew just by about 4%. For the first 5 months of the financial year, the premium growth stands at 12%. August total annualized premium equivalent, or APE, grew by 8%. Retail APE for HDFC Life, that saw a growth of about 10%. ICICI Prudential Life Insurance, it was a moderate growth for the company over a weak base that it enjoyed. August premium growing at 12%. First 5 months, the premium growth at 17%. August total APE, a growth of 21%. August retail APE, a growth of 29%. Max Life Insurance, keep an eye on this particular company because the growth's been growing pretty strong in the previous month as well and this time as well. And the good part is that the growth comes over a strong base which the company had to work on. So again, in August, the premium growth stood at 17%. First 5 months, the growth stands at 16%. August total APE, a growth of 17% again. August retail APE, a growth of 20%. SBI Life Insurance, it's weak growth, but do remember it's a strong base which the company is working on. So August premium contracted by 13%. First 5 months, the premium contracted by about 5%. August total AP contracted 2%. August retail AP saw a growth of about 4%. Finally, LIC, as I said, drove the industry's growth in the month of August. So the premium growth stood at about 22%. First 5 months, the growth stands at 28%. August total AP grew by about 13%, and retail AP, that saw a small growth of just about 100 basis points in the month of August.
Thank you, Yash, for that. Shilpa, quick word on any of these life insurance companies' strongest chart?
ICICI Pru Life, Max Financials and LIC actually both, all the three, they're very strongly placed. LIC Housing Finance, if you look at 680, is a very concrete support. So as long as it is holding that, I believe LIC can do 760 to 780. ICICI Pru in that case has given a fresh breakout again. 720 is a good support. Look for targets of 800 to 820.
No, got that. Max Financial is what Yash was telling us to keep an eye out on. Sid, any thoughts on, I don't know if you have coverage here?
Yeah, Prashant. So I think as we discussed the entire insurance space we like, while our preference is towards the larger ones, which is your LIC, ICICI Pru, HDFC Life. Some of these is what we like.
Okay. Shilpa and Siddharth, thank you very much for joining us today on the show. We'll slip into a break. We'll come back and get you the top corporate voices and the key events to watch tomorrow. Stay tuned.
Okay, welcome back. Lots to talk about in terms of commentary that we heard from companies who joined us through the course of the day here as well. So I'll start with Senco Gold. I think that interview and, of course, what they told us kind of sparked and lit the fire under most gold jewelry sort of names today, because that packed it very well. What did they tell us? Of course, in terms of their business, they said the new businesses, they said they're going to invest between 50 and 60 crores initially. And between 25 and 30 crores thereafter towards sort of building out some of these businesses which are adjacent to the underlying core jewelry business. They expect these businesses to contribute between 4 and 5% of the total revenue within the next 4 to 5 years. They also said that September, the month of September and second quarter in particular, are turning out to be much better than what they had assumed when they got into Q2.
Okay, in terms of the IPO action, auto parts manufacturer Cross opened its 500 crore IPO for subscription today. It closes on the 11th of September. Now, through this issue, the company plans to raise 500 crore rupees, as we told you. Now, the management said that they plan to repay debt of 90 crore rupees through the proceeds. They also said there will be a positive impact of 1.5% on their margins.
Well, Bajaj Housing Finance is the big 6,500 crore plus IPO, which opened for subscription. Atul Jain was with us, the MD of the company. He told us that over the past 3 years, the company's loan portfolio has been growing at a robust 31% CAGR. Of course, he did not guide specifically whether 31 will be the number going forward as well. They said that they will try and maintain this run rate going forward. They added that they want to diversify the loan book and expect no impact on net interest margins from the capital raise.
And as we wrap the show, we'll bring you some of the key market events to watch out for. Sonal is standing by.
Thank you so much for that. Well, there is some action which is expected tomorrow. For instance, Camlin Fine Sciences, that will consider fundraising by rights issue tomorrow, so watch out for that one. No dearth of action in the IPO market. PN Gadgil Jewelers, the IPO opens tomorrow. We also have the mutual fund data for the month of August, which is expected, so watch out for that one. And the OPEC monthly oil market report will be expected tomorrow as well. In terms of global economic data from Germany, we have the CPI for the month of August. And for UK, we have the unemployment rate and the employment change for the month of June. So watch out for some of these macro events.
All right, Sonal, thank you very much for that. Well, it's a wrap on this edition of Markets Forward from all of us here. Goodbye. Thank you for staying with us. There is more coming up on the other side of a quick break.
Các gia đình là không kịp mà khênh những cái đồ đạc tài sản của mình lên. Hiện nay là tủ lạnh, máy giặt và các cái đồ máy móc, xe máy của bọn cô là trong nhà kia đang ngập nước mà nước bây giờ là chưa rút. Đấy. Là thiệt hại về tài sản là cũng khá nhiều nhưng bọn cô chưa thống kê được hết.
To stop the war.
It is making us like traumatized and like it is very difficult us to study.
We have heard that there is a drop of bomb in the village of Mahindra.
People are getting like being like a monster.
This is a very critical situation for Mahindra community. We, all the students of to stop the war to stop the prevailing situations in Manipur, and we have heard that there is a drop of bomb in the village of Mahindra, and this is a very critical situation for Mahindra community, and for the students of HRD Academy, from the students of HRD Academy, I would like to say that our minds have been distracted from this all situations and all. So we would like to stop this.
We want to stop all the wars that is happening between Meitei and Kuki tribes, and it is making us like traumatized and like it is very difficult us to study, and then people are getting like being like a monster, and we don't want that. So we are just making a human chain on that. On behalf of that, all our HRDs.
Hello and welcome to Business 360. I'm Shriram Finance. The headlines that we're tracking for you this evening: the Sensex gains over 350 points. The Nifty gets back above 24,900 as positive global cues lift the Lal Street. Mid-caps underperformed today. The GST Council defers the decision to levy an 18% tax on gateway fee imposed by payment aggregators on debit and credit card transactions below 2,000 rupees. The grants for R&D to universities is now exempt from GST. The council meeting is still underway. Bajaj Housing Finance IPO gets fully subscribed in just 4 hours thanks to strong demand from institutional and retail investors. Electric two-wheeler maker Ather Energy files for a 3,100 crore rupee IPO seeking a valuation of nearly $550 million. Union Minister H.D. Kumaraswamy says the electric mobility promotion scheme will be extended until the third phase of the FAME scheme is rolled out. Union Minister Nitin Gadkari says he's not opposed to subsidizing electric vehicles and expects EVs to cost the same as petrol and diesel vehicles in the next 2 years. The Enforcement Directorate files a case against Religare's Rashmi Saluja and other top officials, accuses them of cheating and criminal conspiracy to block the Burman brothers from assuming ownership of Religare. The Supreme Court directs the CBI to file a fresh status report on the alleged rape and murder of a trainee doctor in Kolkata, directs protesting doctors to resume work by 5 p.m. tomorrow. This after the West Bengal government claims 23 people have died due to the doctors abstaining from work. Iran accuses Israel of carrying out a criminal attack in Syria, allegedly killing 14 people. Israel also closes the border crossing between West Bank and Jordan after a gunman killed 3 Israeli security guards. Apple is all set to launch the iPhone 16 with faster processing chips and improved cameras. Apple is also likely to lean on artificial intelligence to spur sales. Also on the show, the average compensation for CEOs of Nifty 50 companies rises to 27 crore rupees in FY24. Who tops the list? A special report coming up. Well, let's start with the market action of the day. Positive global cues did lift the mood on Dalal Street this Monday afternoon after the sell-off that we saw on Friday. So the Sensex finally closing about 370 points higher, the Nifty adding about 84 points. The midcap index, though, closing in the red today, while the Nifty Bank was up by about 1%. So that's the story as far as the markets were concerned at the start of the trading session. And Prashant is standing by now to wrap up the market action for us. Prashant, what does the week ahead look like?
Well, we woke up with negative cues from Wall Street. Nasdaq was down 2.5%. S&P had sold off. But mind you, we started with the fact, with knowing that on Friday, which is the last trading session, the market here had fallen a little over 1% in any case. Back then, we were discussing what was happening. Why was the market selling off? And maybe it paid the price, at least to some degree, one day prior to what the US did. So the market here did sell off promptly in reaction to the bad global cues, but then picked up pace and very, very smartly rebounded. We end with actually, green on the screen and not 10, 20 points, but, 70, 80